powered.
Good morning. You're watching India Market Open, and I think the countdown to D-Day has begun. As we are seeing behind us, the tariff wars that everyone's poising for, waiting for the first shot to be fired.
Yeah, and the big part is that there is just no knowledge of what could happen, right? I don't think Donald Trump himself would know what would happen 3 days later, because he would keep on moving pieces as countries respond if they do, right? So it's just such a difficult scenario to be in the midst of.
If the policymakers themselves don't know, then market participants don't have
the traders. I feel for the traders.
I think everyone right now. So the last report I saw talked about 20% as an average of tariffs that the United States would impose, with the quick caveat, but it's a work in progress as we speak. So we really don't know how it will go. And that uncertainty was a pain point in markets yesterday. After that very, very painful start of the week, you are seeing the implied open. I'm just going to quickly pull up the implied open before I get to the global setup. Looking at a completely flat start, even if it's mildly in the green, it will be a huge relief. Will we see some relief? That's the question. Big moves yesterday from the RBI as well. Relief on terms of announcing 80,000 crores worth of open market operations, some liquidity boost there. That's broadly what you'll get to see today. But as far as the global setup is concerned, it's a mixed day of trade on Wall Street ahead of tariffs. As expected, Dow closed mildly in the red at the end of that volatile session. Nasdaq was okay, about 1% up. But like I said, reports are suggesting as high as a 20% tariff that could be imposed in the April 2nd decision. The Trump administration has also made clear that there will be an announcement, A. B, that whatever they announce will come into effect immediately. April 3rd is also the day for auto tariffs to come into effect. So remember that as well. Meanwhile, job openings for March came in lower than expected at 7.56 million. The March ISM Manufacturing Index also fell to 49 versus estimates of 49.5. So net in terms of economic data, it wasn't too great on the US front, which is why the 10-year also slid 7.8 basis points to 4.16. Gold has stayed above the 3,100 mark, but has cooled off after its mad rush yesterday. Brent has also dipped to about $74 ahead of the tariff announcement. Asia has opened mixed ahead of the tariff rollout, and like we told you, India implied is looking at a completely flat start. But let's listen in to what the White House press secretary is saying. Caroline Leavitt, in her recent address, says that tariffs will be in effect as soon as they're announced.
Tariff announcement will come tomorrow. They will be effective immediately. And the president has been teasing this for quite some time, as you know. He's talked a lot about April 2nd as Liberation Day in America. It would be taking place today if not for April Fool's Day. But tomorrow will be the day, and he's been talking about it for a while. And as a result, you've seen these companies make commitments to investing right here in the United States.
Okay, and I listened to what Donald Trump said yesterday, India time, on India specifically, as far as it comes to tariffs. I'm just pulling this soundbite out because I think it's relevant to what we might see in the next 24 to 48 hours from an Indian perspective. Listen in.
I'm not worried about it. Yeah. Mr. President, can I ask how they have a chance of doing better, actually, with the tariffs? It can actually help them in a certain way. And I think a lot of them will drop their tariffs because, they've been unfairly tariffing the United States for years. And if you look at the European Union on cars, the European Union already dropped their tariff down to 2.5%. It was announced a couple of days ago, which is what which is a very small tariff. The United States charged very little. And I think I heard that India just a little while ago is going to be dropping its tariffs very substantially. And I said, why didn't somebody do this a long time ago?
Okay, Edward Yardeni joining us this morning, President of Yardeni Research. Thank you so much for speaking with us. And, it's a lot of it is going to be speculative at this point. But is your sense that President Trump will follow through with the reciprocal tariffs? They've drummed up this April 2nd date to this extent. What do you think we'll see 24 hours from now?
Well, it's very hard to predict, of course. I think that there will obviously be some sort of reciprocal tariff. I think the simplest thing to do from their perspective would be to impose a 20% tariff and then try to negotiate that down. But I'm not even sure they want to negotiate the tariff down because they seem to want to also raise revenues with it. I think there's actually a debate within the administration, and it's probably going on all night, and it's going to go right through tomorrow. And at the end of the day, I guess at the around 4 p.m. Eastern Standard Time, the president will make up his mind and make an announcement. So it's hard to predict, but he said he loves tariffs and he wants to raise revenues with tariffs. So we'll see. But at the same time, as you just showed in your little clip, he also bragged about the fact that his threat to increase our tariffs have already led some areas of the world to lower their tariffs. So it's very, very confusing.
Dr. Yardeni, good morning. Of course, this is not something that is going to happen in the very near term, but already we've seen dollar reserves for the IMF. I was looking at the COFA data. It has declined very substantially over the course of the last 25 years. It stands at about 54% or thereabouts, down from over 70% at the start of the millennium. Now we're hearing conversations about countries negotiating better trade relations amidst this tariff conversation. Do we see an acceleration of that? And how soon do you think a shift away from the dollar could take place?
Well, I think the dollar is going to remain the key reserve currency simply because the U.S. economy is so large and simply because we are doing a lot of business on a global basis in dollars. So that's not going to go away. And the president's focus on creating a more level playing field in trade, I don't think that plays against the dollar. I think what does play against the dollar is when Russia invaded Ukraine, the United States froze the assets of the Russians. And ever since then, we've seen a move towards gold by central banks, especially the central banks of countries that don't share the same opinions, the same interests as the United States. China, Russia, Venezuela, Iran, they're all clearly moving towards more in their international reserves. And so I think the challenge of the dollar is actually going back to the gold standard in some ways. I don't think the BRICS are going to come up with an alternative currency. A while ago, remember, people were talking about using the IMF's SDRs as an alternative to the dollar. I think the economic realities are that the dollar is going to remain a preeminent reserve currency and the key currency.
But Dr. Yardeni, good morning, Neeraj here. And you spoke about some of the gold pieces on that show as well. By the way, thank you for doing that. But just one quick follow-up on what Alex asked you. Some people believe that if indeed the US savings were to go up because costs will become unaffordable and therefore the spending will go down, and we've seen some bit of it in the data coming off, right? There's activity that is contracted with the presumption that all of that were to happen and euro and some of the other currencies against the dollar would be strengthening. Could there be a prolonged period of DXY weakening, and could that be constructive, net constructive for flows into emerging markets, into Europe, into Japan, into China, all of which, or some of which, are showing growth relative to US growth?
Well, we have definitely seen that kind of move since the beginning of the year. Since the Trump administration came in and started to talk about tariffs, we've seen U.S. stocks significantly underperforming stocks elsewhere in the world, including Europe and emerging markets, also including China. But I would point out that some of that was probably more of a trading situation than a long-term trend, in my opinion. I think that the outlook for other economies isn't much brighter than the outlook for the U.S. economy. I think some of the outperformance of other markets had to do, seemed to signal that investors believed that tariffs would hurt the United States more than they would countries like China and Germany. But China's got a real problem with all this debt that's they accumulated in the real estate market, and the deflation in real estate. That's not going away, even though the government is doing its best to stimulate consumer spending. And because of the geriatric demographics of China, I don't think their program is going to really stimulate as much domestic consumption as they hope. And the same thing with Germany. Germany's got to compete against other auto industries, particularly the Chinese auto industry. And the Chinese are really excelling in electric vehicles. And so I don't see that foreign countries are going to do better if we see tariffs going up on the part of the United States. And so I still recommend overweighting the United States.
I think, Dr. Yardeni, thanks so much for giving us as much context as you did and the perspective that you did give us this morning. And I understand that it's a challenging spot that we've put you in often. Thanks so much for taking the time this morning.
Thank you.
All right, let's talk about what happened in trade yesterday, because you had caution, and this is something that was prevalent across markets around the world ahead of what the US president has been calling Liberation Day. And Indian equities, of course, witnessed FII selling ahead of that day. Let's pull up the flows data, because this will give you some perspective. 5,900 odd crore of FII selling on a net basis, 4,323 crore rupees of buying from domestic institutions. One would assume and argue that selling was concentrated in banking and IT names. The benchmarks underperformed, the Nifty 50 losing quite considerably over the course of the day, and the heavyweight stocks were sold into aggressively. Look at the Nifty 50 contribution, if we can pull up that chart, and you will notice that HDFC Bank, ICICI Bank, Infosys, Reliance Industries all led the declines. HDFC Bank alone contributing to 100 plus points of declines for the benchmark, and cumulatively you would add all of those four and it would come up to about 200 points odd of declines, more than 200 points of declines. So what happened in the broader markets? You had the mid-cap index lose about 1% or so, and the small-cap index ended with cuts of about 0.5%. IT as a pack lost about 2.5%, and the Nifty Bank as a whole lost about 1.4%. Realty, in fact, was the worst performer, losing as much as 3%. Interestingly, and this is an interesting data point, the market breadth remained strong through the session. And in fact, at the end of the session, 2 stocks had gained for every decline on the NSE, which also supports the theory that selling was in large cap names and heavyweights at that.
Yeah, I mean, a lot of individual portfolios did well yesterday, so which was actually a good thing. But just before we get to the trade setup for the day, I mean, aside of two interesting things. One, of course, Tamanna highlighted the RBI has announced the OMOs of 80,000 crores for April, which is good. I thought the announcement from Foxconn as well, right, boosting the Apple production in India, another 276 crore investment, small investment, but it's an add-on to what they already have. And I love it when MNCs are setting up shop and putting in FDI and using India as the supply chain. I mean, they plan to nearly double the iPhone output to 25 to 30 million units in 2025. That's serious stuff. So, and this was a positive. But
can I add just one more positive, which may have slipped our radar, is what came out from the Chinese government yesterday vis-a-vis India. Such a positive note and tone hasn't been seen for a while. So the Chinese ambassador has actually said we're willing to work with the Indian side to strengthen practical cooperation in trade and other areas, and to import more Indian products that are well suited to the Chinese market. This is a departure from what we have been hearing from the Chinese side. Now, of course, as these things work, there must be a lot of behind the scenes and back channel conversations that have led to this. But at a time that we're talking about global trade wars, for China to come out and say this, I thought it was also significant.
And this follows, Tamanna, the de-escalation on the front as well, right?
Yes.
It's also the anniversary, 75th year anniversary of Indo-China ties, which is why I think this statement has come through.
As it may be, but we've not been hearing those notes from China. So China, India is one front which works very, very quietly, and it does a lot behind the scenes, but we don't really cover it that often. So I thought I'd just point that out.
Very interesting. And just the point that yesterday the guest was making, that if you look at large countries which are able to have great diplomatic relationships with US, with Russia, with everybody else, and now maybe with China, is India.
Yeah.
Right in the midst of it all and still charting its own course. So that's great. Okay, very quickly, the trade setup. No brainer, staying light is the order of the day. I don't think there is anybody who will give you any other advice which will be better, but this is not like gold dust. This is just common sense that staying light is the order of the day today. RBI liquidity measures could bring about a relief move in banks today. Remember, they got really pummeled in trade yesterday, so could very likely be a decent outing for banks. Maybe that's why the gift nifty is also in the green, though I must say rest of Asia is also fairly placid, if you will. Smart money that I spoke to over the last 2 days is prepping for downticks in pharma and textile as two pockets where they would want to bottom fish. So bear that in mind as well from a specific pocket perspective. But like I said, banks were active, IT was active. Great to understand what the derivative setup out there is on these two topics, in these two buckets, as well as market-wide. Puneet Johnson with the F&O perspective. Good morning, Puneet.
Well, good morning, Neeraj. Definitely, it's going to be a very interesting session of trade. Of course, the Nifty is hinging on what might come in terms of announcements tonight from President Trump. Apart from that, we've also seen that Nifty did breach the critical level yesterday of around 23,000, for 20, and it's actually 23,400 was breached yesterday. We also saw that's the 200-day moving average that has been breached. So, it is roughly about 23,166 where it ended yesterday. Now the next support for the Nifty is at 23,000 in an immediate level, and on the resistance side it's at 23,400, where the medium term resistance does continue to be 23,800, but that seems slightly far away right now. Will need a lot more positive triggers going forward as well. Apart from that, we've also seen that the Nifty options data, we can pull that up on the open interest side. We have seen the maximum call options retaining at around the 25,400, but we've seen an increased interest in the 23,500 level over the last couple of days in terms of trading sessions, and on the call side and definitely on the put side, we've seen 22,500 being maintained as well. When you look at some of the Nifty open interest distribution gainers as well as losers, on the gainers side we have seen a lot of short build up across a lot of stocks yesterday in trade. PNB Housing, Hindustan Zinc, some of the big names. Apart from that, on the open interest losers side though, we also have seen some long unwinding in stocks such as the IT pack, the TCS, as the Tata Power of the world, while we've also seen some short covering in Adani Enterprise, Bank of Baroda, as well as BPCL. I just want to finally point out, the delivery data as well, because that trend is essentially showing that the gains have been sold into the session yesterday. So we did see some high delivery data in terms of ICICI Bank, HL, but apart from that, the list gets thin across the board for all these particular stocks. So essentially all the gains are getting sold into, at least in the last couple of days, in terms of delivery data, and it'll be very interesting to see where we end in terms of the Nifty today.
Okay, thank you for that, Puneet. So it will be interesting to see where we end for the Nifty today, but my sense is that no one is going to take or build any large positions before we have clarity in the next 24 hours. Having said that, here's what's on my watch list, my first three stocks that I'm tracking for this morning, just based on news and brokerage reports as well. So high-tech pipes is what I'm going to start with. This is an interesting time because remember, simultaneously we keep talking about global tariffs, all of that that happening, but our business updates are also going to start coming in. So that's one space that you need to watch out for. High-tech pipes, thumbs up this morning because they've achieved record annual sales in the last financial year. The total sales were upwards of 485,000 metric tons. This is a 24% year-on-year growth. The fourth quarter sales was 116,000 metric tons odd, which is an 8% year-on-year increase. Q4 sales for FY24, of course, were 107,000. So that is why an increase there. The growth was driven by demand in infrastructure and construction. So this space you need to look at. In any case, larger infrastructure spends and a boost to India's economy is what will push companies like high-tech pipes. So keep that on your radar. Now, this note from Bernstein on solar PV companies I found very interesting, which is why I've picked this up on my watch list as well. They talk about Waaree Energies and Premier Energies, and what they're saying about it is caught my eye. Their header literally says sand at the price of gold. So they have initiated an underperformed target price of 1,902 rupees. That's nearly a 20% downside. For Premier Energies, it's a target price of 693 rupees on Premier Energies, that is. So that's also a significant downside from where they are. Now, why are they saying this is sand at the price of gold? They're saying it's a cyclical business, time to sell, not buy. Domestic market has too much supply coming in. They see earnings growth moderate for these companies post FY27 once their capacity comes online and supply glut hits. They don't have a right, both these companies don't have a big right to win against bigger players, is Bernstein's view. So now, I mean, I don't know if you can pull up the 1 year chart for both of these. It's an interesting view coming at a time when both these companies have been the darling of the market. See, the 12-month chart is still in the positive after fair amount of downtick when it comes to Premier Energies, and if you can pull up Waaree as well. Waaree is completely flat over the year. Now, these are a clutch of companies which have split views on them, but this is Bernstein's view this morning, which is why a thumbs down from my end. As far as Nuvama in Star Health is concerned, it's quite the reverse. A thumbs up from Nuvama coming in on Star Health, which is why I thought it's interesting, and you could see some reaction here. This is a company which has had quite a bit of pain points, but they're now saying upgrade it to a buy from neutral. They've cut the target price from 490 rupees to 440 rupees. They say, given the sharp fall in the stock price over the last 8 months, we upgrade the stock to buy. So it's a valuation game to some extent. They estimate corrective actions in the form of retail portfolio repricing and selective group business underwriting, which will result in reduced loss ratios. They also anticipate sustained momentum in retail new business growth, enhanced OPEX efficiency to drive combined ratio improvement, and stricter enforcement of EOM norms may lead to reduced competitive intensity. So Star Health is the third one on my list.
An interesting list of stocks. My first stock is a bank. It's CSB Bank, relatively small bank, but an interesting update coming through in the quarterly updates they've shared. Deposit growth stood at 24% in the fourth quarter, and advances growth is at nearly 30%. And take a look at the gold loan portfolio, because that has grown as much as 35.4%, and gold loans account for close to half of the advances book for this bank right now. Why is this important? We were speaking about this yesterday, in fact, on IMO itself, where we were talking about the rise in gold prices being positive for gold lenders. Essentially what happens is that the loan to value goes up because the underlying security is increasing in price. The bank can effectively lend more against that collateral, and so from that perspective it would be good for a bank that has half of its lending book in the gold loan space. Watch out for this one in trade. Coal India is a thumbs down because the production trajectory and the output or the offtake trajectory has followed through on what has been seen through the year. March production has declined by 3.1%. The offtake was more or less flat, was a growth of about 0.3% or thereabouts, and the full year production stood at 781 million tons. The actual production was about 4 to 5% below the downwardly revised target for this company. The original production target for FY25 was 838 million, which is significantly above what they have actually achieved. By the way, it has also announced a price increase of 10 rupees per ton, not a very large one, And that too, this will come into effect from the 16th of April. But this is not going to flow into earnings because it is done with the intention of contributing to the pension scheme. So bear that in mind as well. Of course, if power consumption goes up in the new year, you could see an improvement in production, of course, because Coal India accounts for more than 80% or around 80% of India's coal demand. V-Mart Retail is the last stock on the list, and this is also a thumbs up. It is based on the updates that the company has shared. The total sales grew as much as 17% in the quarter gone by. 780 crore rupees is what it stood at, and the same store sales growth, which is a key metric that you would track with regard to something like a V-Mart Retail, has grown by as much as 8%. The company opened as many as 13 stores and closed about 4 stores in that quarter. And I thought the regions where they opened, Neeraj, were quite interesting. Uttar Pradesh, Bihar, certain other places like that where they opened stores.
Yeah, and well, it's the area of their dominance, if
and
you
growth,
will.
Yes.
And yeah, but interesting. But CSB was a very good growth per se, so that was interesting. I love the line on the note as well, by the way, of Bernstein. Let's see if it is indeed sand at the price of gold or if it's something else. Okay.
Gold at the price of shinier gold.
Yeah, time will tell. I mean, we are going to be talking to them next week from one of their facilities. So I'm looking forward to asking them about all of those points. I have a brokerage note on my list too, but the first on my list is KC International. Now, usually a 1,236 crore order from clients doesn't quite excite or shouldn't quite excite KC, but it does get excited on such order wins. So maybe it gets excited today too. The FY25 order intake for the stock is at 24,600 crores, 36% uptick. That is some serious order inflows for KC International. I think the run rate is 12,000 crores per annum or something like that. So it could be interesting. JSW Energy is the other one. They have surpassed 10 gigawatts of capacity targets for FY25, reaching about 10.9 gigs, which is very strong. And remember, I think the management was on record when we had spoken to them in Davos as well. They had said that at the end of the quarter, they will come back with a revised, higher targets of capacity execution for the near term. And that could be interesting as well to watch. They've added about 3.6 gigawatts in the fiscal gone by. And lastly, IT stocks, they were down and out yesterday. No reason for them to be otherwise. JP Morgan has downgraded. So they have effectively moderated FY26 and 27 revenues for most IT companies, 3 to 5% for tier 1s and 2 to 10% for tier 2s. So that's the key point. Their top ideas are Coforge, Infosys, Tech Mahindra, LTIMindtree and KPI Tech. And their top avoids are TCS, Wipro, HCL Tech, Tata Tech and Tata Elxsi. Now, the key point is they've downgraded HCL Tech and they've cut target prices across the board. So if you're looking for a silver lining in IT, that may not come. Banks, yes, but IT, maybe not. And there are a clutch of other stocks, of course, but these largely would be the top 9. I mean, there could be a Titan, there could be Star Health, which Tamanna, of course, spoke about, and others. But I think these seem to be the key ones today.
Deepak, fertilizers as well, perhaps. And let me go across to Varsha on that. It's one of the stocks in focus that we need to talk about today. Varsha, why don't you tell us why?
Yes, thank you for that. So Deepak Fertilizers will be in focus now. Why? Because Arkema, which is a major European fertilizer producer, is halting ammonium and ammonium nitrate production. We'll see how Deepak Fertilizer will be positively impacted by that. But the halt is from May 15, and this removes 15% of Western Europe's ammonia output. And the Arkema shutdown removes 1.11 million tons of ammonia capacity. Of course, high natural gas prices is making European ammonium production unprofitable. This is one of the driving factors why the company is doing it. And also cheap imports from Russia and Africa is also pressurizing European producers as well. Now let's see what will be the market impact of this. The global fertilizer prices are expected to rise, and Indian fertilizer producers may get benefit from this because of the higher prices. And the fertilizer importers will actually face higher cost, and the shutdown may signal more permanent permanent plant closure in Europe. Now, how Deepak Fertilizers will be in focus, because they are building a 500 kilotons per annum ammonia plant for their backward integration, and the most ammonia, there is 70% of it will be used for internal purpose, but rest of it they'll be selling it into the market. And the company is also a leading producer of technical ammonium nitrate, and they're also working on a greenfield project when it comes to technical ammonium nitrate, which will add 376 kiloton per annum of technical ammonium nitrate production capacity, which will meet India's 60% of TAN demand.
Sure. So just laying this out, if indeed this production stops from Arkema, the global major, is it largely going to be a net positive for Deepak Fertilizers, even though you may not be able to quantify right now?
Yes, because one of the reasons is the ammonia that they are producing will also be used internally, which will help, so they are backward integrating it. So the higher prices will not actually impact Deepak Fertilizers, and they'll be using this internally, which will impact positively when it comes to EBITDA margin as well. And of course, the remaining 30% of the capacity will be sold, to the other players at a higher prices, which will actually benefit company.
Okay, Varsha, this is interesting. Thank you so much for laying it out for us. I wonder if it's a part of our watch list or no, but even if it isn't, you now know that Deepak Fertilizers could be one of the key stocks to monitor in the session today. Should we get the watch list first before we talk about something else? So just some of the stocks that should be on your radar today. We've highlighted a few. V-Mart, Alex highlighted it, 17% growth in quarterly updates. Hyundai, it was a beat on March estimates. Tata Motors was a beat on March estimates. I must say though, Puneet believes a lot of it is inventory stocking and not essentially sales, which may actually show up in the month of April, so be mindful of that. CSB Bank, again something that Alex highlighted, has clocked about a 30% YOY loan growth. And UPL, HSBC's hiked the target to 800 rupees per share.
Okay. You've got Hindustan Copper also on the list. It's a strong quarterly update for this company, and in fact, one of their highest ever production for copper has come through. High-tech pipes was on Tamanna's radar today. Strong quarterly update once again, and you know the details at this point. On the downside, Premier Energies and Wari, Bernstein sees a 20% downside. We were talking about their tagline. It sounds quite interesting. Sand at the price of gold. TCS, Wipro, HCL Tech were down in trade yesterday and could see further downside today. JP Morgan expects modest FY26 and cuts their target prices as well.
But I would say over and above this, these are of course specific stocks that would react perhaps to news brokerage reports. The overhang is what will react to tariffs as and when they come. So let's set that up. And this is a laundry list of companies that could react depending on when we have more details. Nevertheless, Somit and Mihika joining us now to set that up for us. The extent of the reaction, the sectors that will be hit, and in what way?
Well, it's April 2nd today, and Trump is set to announce his first set of reciprocal tariffs. This is a strategy to help equalize tariffs, taxes, and non-tariff barriers. But it's key to understand how India and US's trade relations do stand. US is one of India's largest trading partner. We have a relationship of over 25 years, and India's exports to the US actually reached $81 billion in 2024 and accounted for 17% of India's total exports in FY24. And India does have a trade surplus with the US. Now, in terms of the tariff differential, we do charge higher tariffs on US imports. That stands at around, weighted average stands at around 12%. US, on the other hand, is charging us only 3% for our imports into their country. So the tariff differential stands at a 9% on a weighted average basis. Now, there are different scenarios. If tariffs are imposed on a country-wise level, a 10% expected tariff could lead to a potential export loss of $6 billion for India. This is 0.16% of the GDP, while a 20% expected tariff could lead to a potential loss of $31 billion, which is 2.1% of India's GDP. But what can India do to lower the impact on a country-wise basis? One is increase our oil and natural gas imports from the US, also increase increased purchase of defense equipment. Another thing that we can do is reduce tariffs on the agriculture and the food commodities front, and lastly, lower tariffs on foreign EVs, maybe let a Tesla enter the market. In terms of whether the tariffs are imposed on a sector-wise level, the top 4 sectors which have a higher tariff differential, you have animal products, footwear, transportation and chemicals, where the tariff differential stands between 10 to 30%, but it's not necessary that these exports have a high export value. So based on the tariff differential data, the export value data and trade balance data, the most vulnerable sectors is seafood, iron and steel, nuclear reactors and machinery, pharma products, gems and jewelry, and electrical machinery. The differential in tariff stands between 6% to 18%, and India's US exports in these sectors, highest is for electrical machinery and gems and jewelry at 12.6 and 9.3 billion dollars. In terms of, we have to go stock wise, in the pharma space you do have stocks like Lupin, Dr. Reddy's, Zydus Life Sciences, Aurobindo Pharma and Cipla, which have a high revenues coming from the US. In the textile space, you have stocks like Wellspun Living, Indocount Industries, Trident, Arvind and Gokaldas Exports. And in the seafood space, you have something like an Apex, Avanti Feeds and Waterbase. These are the companies we've identified as of now. But Sumit, on a sector-wise level, what can India do to lower the tariff impact?
Well, there are 5 sectors that we are pointing out here where there could be some negotiations and settlements that could happen on both the ends. Firstly, on auto and auto ancillary. Now, India could go ahead and reduce taxes on auto imports, because if you look at the two-wheeler and the passenger vehicle import tariff differential, that stands highest at around 67.5 percentage points. And this could impact the higher auto ancillary exports that we are doing, which stand at over $2.1 billion. So by reducing the taxes on auto imports, we could get away with the auto ancillary exports that India has currently been doing to the US market. The second sector is textile and apparels. Now, US accounted for nearly 28% of India's textile exports. So this is a big market coming in for the Indian, and with even with higher tariffs, India could continue to remain competitive, given the fact that the tariffs on China is around 40%. But we could lose market share when it comes to Vietnam and Bangladesh. Now, what can India do to avoid this or to mitigate this? Now, one way to mitigate this impact would be to lower tariffs on US cotton imports, because more than half of the imports that we are doing of textile and apparels from the US market is of US cotton, and that if we do reduce that, then that could equalize or lower the tariff differentials and thus benefit the entire textile and the apparel segment. Third is the pharma. Now, if you look at the pharma imports that we are doing from US is just around 800 million, and this also includes equipments. And if you look at the tariff differential, it's just 7.6 percentage points. So experts believe that India could do away with this tariff differential that currently we are putting on the US market, and this could benefit the pharma sector overall. Now, when it comes to the food and related commodities, now high tariff barriers have been put in by India to protect the domestic production and the domestic market, and India can lower tariffs when it comes to specifically to alcohol, other categories of prepared food and beverages, and these categories have a tariff differential of more than 100 percentage points. And by lowering this tariff differential, India could protect the retaliatory tariff that could come in for the other food and related commodities. And lastly, when it comes to the electrical segment, now this segment is the largest export to the US market, and here the US could also settle for a negotiation, given the fact that nearly half of this India's electronic export is coming in from mobile phones, and that would be largely iPhones, given the fact that domestic production in the Indian market has started, and most of this goes across to the US market. And currently, if you look at the tariff differential, India puts a tariff of around 15% on assembled phones, while US has a zero tariff. And by imposing a reciprocal tariff, if US imposes a reciprocal tariff, then that would just increase the cost of iPhones for the US users. So that is something that US could also settle for by lowering the tariffs. Even if they put in tariffs, India would continue to remain competitive, given the fact that the tariffs on China is at 40%, and Apple might look to move more production to India. But this is something that US could also settle for, and by not increasing the tariff, given the fact that increasing tariff would just increase the cost of phones for their users.
Very interesting list, guys, and thanks so much for rounding that up for us. Couple of takeaways from my end. If the duties do come down on imported alcohol, you could find people stopping less at the duty free. and a certain brand with a man walking will become more popular than it already is. But also, apart from that, you could have Harley Davidson seen more often on the street than it is right now.
But you know what struck me from the piece that Samit and Mihika did is that the biggest hit is on US consumers.
Yes.
Everything becomes more expensive for US consumers at the end of the day, and that realization is going to dawn one way or the other.
100%.
Yeah.
I mean, not 100%, 20% more like. But but let's talk to Mayuresh Joshi about what he makes of the latest updates. And of course, it's all conjecture at this point. Mayuresh, very good morning to you, and thanks so much for joining in today. Any of the implications? So we'll have to do scenario building at this stage, right? If there are unilateral tariff increases, or if there are tariff decreases in India, the decrease of tariff would be negative for Indian domestic manufacturers in certain segments, wouldn't they?
Morning, Alex. Because that seems to be the base case scenario. And therefore, I think what actually comes through today evening is going to be extremely critical. And how long does that last? So does this get the respective nations onto the negotiating table to probably negotiate hard with President Trump and his administration is something to be seen. But if it's steadfast, and if the belief is that this should continue irrespective of what happens, then yes, I think the base case scenario is that wherever there are tariff barriers which are removed, those sectors from an immediate short to medium term perspective might actually take some bit of a hit as far as volumes and earnings are concerned.
Okay. All right. So then let's also talk about what happened overnight in the context of where global trade is. There seems to be this overarching concern and risk off sentiment. We saw a spike in the bond yields overnight in the US. In India, of course, you saw quite a bit of selling in banks and IT companies yesterday. In the banks in particular, a few of those frontline banks correcting as much as 3% for HDFC Bank. Would you use opportunities like this to add to positions if you already hold some of these?
So, Alex, again, I think financials is a very interesting space as far as India is concerned. On valuations, it looks very, very tempting, even at the current juncture. And as far as earnings are concerned, the entire expectations in terms of the earnings pool, specifically for large leadership banks, whether it's in the private or the public space, if one is to believe, I think advances growth should be steady state over the next few quarters. What you've probably seen in terms of recognition of asset quality pressures that have largely been played out on the balance sheet. Credit underwriting has remained extremely strong because of regulations and RBI interventions as well. And therefore, I think the NIMS trajectory, which has remained steady so far, might continue till we enter into a cycle when the rate cut cycle starts happening in real earnest, which probably seems to be the second half of this financial year. And as that happens, I think the leadership stocks, which have a better borrowing mix, they should show steady state improvement in their NIMS as well. The advanced deposit ratio should improve and the cost to income ratio should dwindle down. Obviously, the provisioning that has happened on a lot of bank balance sheets are sufficient enough in terms of the restructured and the slippage pool that they have recognized so far. And therefore, I think from a risk-reward perspective, I think financials, the large leadership banks probably look attractively placed. From our own standpoint and markets with India, I think the ratings and rankings look extremely attractive at this juncture, as I said. Valuations seem to be in favor for the entire sector. And therefore, large leadership banks like a Kotak Bank or an ICICI Bank from the larger names is something that we continue holding in our global portfolios.
Mayuresh, I'm not sure if you saw the update. CSB Bank has come up with the quarterly update, and I don't know if you track it very closely, but I found it interesting. So nearly half of their book is now gold loans, 14,000 odd crore. And this is a segment that has grown for them about 35% year on year in the quarter gone by. What do you make of valuations for this particular bank as it stands right now? Because one would argue even for them at 300 rupees a pop, it's not very expensive.
No, it's not. And again, I think a large part of the pool for a large universe of mid sector or mid market cap private banks are largely driven by gold assets or gold loan assets itself. Again, I think with the increase in gold prices that we've seen, Alex, it's not just the banks, but the financiers as well, the gold financing companies that benefit because of better LTV ratios that they have at their behest. And obviously, I think the expectations in terms of gold loans still continuing to grow at a decent pace till we see a drop in the interest rate curve or the interest rate cycle at some point, as I said, in the second half, might mean that the advances momentum in this part of the segment might probably grow. So yeah, I think even the last quarter numbers for CSB Bank were fantastic. I think the updates are fantastic as well. But within this universe, again, I think Karur Vysya Bank is something that we hold and continue with.
Okay, Mayuresh, stay on with us. Meanwhile, Hindalco also a stock that could be in focus because of the recent Investors Day meet. We're in fact going to get Mihika on board in just a second to talk about it. But meanwhile, Mayuresh, let's talk a bit about Hindalco and metals as some of this uncertainty sort of settles. Metals are not as much in focus right now in the context of tariffs. You're talking about pharma, auto, etc. How are you liking Hindalco?
Morning, Tamana. No, again, I think a two-way answer to this question. One, I think the domestic operations should probably hold out. They've got a decent enough backward integration as far as their aluminum operations are concerned. And that gives them the perfect hedge in terms of any scenario where aluminum prices might actually start inching higher. Obviously, in terms of how the output numbers are expected to stack up, with realizations expected to pick up at least quarter on quarter, what you've probably seen in terms of aluminum realizations on the LME, they've shown a steady state uptake. And therefore, I think if this scenario continues, I think the steady state volume growth in India, along with part of their operations being backward integrated, will give that operating leverage, at least on the domestic front. Now, as far as Novelis is concerned, I think obviously what goes through in terms of the tariff impositions in the US is going to be extremely critical. Obviously, I think the growth dynamics that Novelis is expected to put out, specifically, I think in terms of their cans business, the expectations in terms of more aluminum usage when it comes to electric vehicles as a space, or even aviation as a space, I think the big picture argument obviously stays with them. But again, I think the entire operating leverage not entirely translated on Novelis's numbers as we speak. And therefore, the net debt to EBITDA, though I think at a steady state level, at a constant level as we speak, unless the dynamics change in terms of significant volume growth happening even at the global scale and realizations improving, the expectations in terms of outperformance as far as the bottom line concerned probably remains a little bit circumspect. And therefore, I think it's a wait and watch as far as the metal space is.
What would be your favorite, Mayuresh, then? Would Hindalco feature there at all, or would you go with the JSW? What would be your favorites or safest bets in metals right now?
So I think, Taman, I think Steel Authority is something that we are keeping on our watch list for two reasons, I think. I think in terms of expectations of the safeguard duties that have probably come through, that gives them a pop in terms of expected EBITDA numbers, both at an absolute level and expectations in terms of improvement on an EBITDA per ton level as well. Obviously, I think the royalty in terms of mines that are probably expected to come through, I think they're already experiencing one in one of their mines. The expectations in terms of realizations, both in terms of flat and long products as well, that is expected to improve as we head into the next few quarters. And a large part of their value-added pool that is expected to contribute in terms of EBITDA margins as well might actually start contributing quite significantly in the next few quarters and years as well. So I think sale out of the pack probably looks like an interesting proposition as far as metals is concerned.
Okay, so watch out for sale for the various reasons that Mayuresh just pointed out. Incidentally, we were speaking about Hindalco because they did have an analyst day or investor day as they're calling it, and there were quite a few takeaways from that. Mika joining in to tell you about some of that. Mika, why is this in focus today?
Yeah, they've given updates on various fronts. I'll start with Novelis, which is their US subsidiary. The Bay Minette project is expected to commence operations by FY27 end and they could even potentially double the capacity beyond FY28 as well. The total capex expectation for Novelis stands at $6 billion over FY26 and FY28. And even their margin expansion trend, the company expects this to sustain and improve over the medium to long term. They're targeting EBITDA per ton of $600. The EBITDA per ton growth is based they're betting it on four factors. One is better capacity utilization. The second is additional debottlenecking. They're also expecting cost savings of $300 million over the next 3 to 5 years. And lastly, the ramp up of the 600 kiloton per annum Bay Minette facility, which is a major part of their capex. On the India business front, they're embarking on a significant growth phase. They aim to double upstream and quadruple the downstream business. Estimated capex of 45,000 crores over the next 5 years for the India business. And they're confident that the new projects will not only beat the cost of capital but also help generate margins. In terms of the margin expansion for the India business, the downstream products to help margin expansion of $150 to $170 per ton over the next 3 to 5 years. And on the copper front, the EBITDA improvement is expected by the company at $100 per ton. And lastly, on the balance sheet front, the annual consolidated capex for Hindalco stands at $3 billion over FY26 and to FY28. And they do expect this to decline as Novelis capex will decline post FY28. They aim to maintain the net debt to EBITDA ratio below 2 times, and they're targeting an 8 to 10% dividend yield on the free cash flow generated.
All right, so keep Hindalco on your radar. Of course, the stock was down nearly 3% in trade yesterday. It saw a little bit of pressure. You saw quite a few other large caps also under pressure yesterday. Let's talk about some of that with Sudeep Shah, Deputy Vice President and Head of Technical and Derivatives Research at SBI Cap Securities, joining us on the phone line today because we're having a little bit of an issue with his feed. Morning, Sudeep. And what is the kind of setup for you this morning at the benchmark level, and any picks that you might have this morning?
Morning, Alex. Alex, I feel, what we are seeing is in the markets in the last couple of days is just an apprehension ahead of the potential tariff threats and whatever is going to be announced tonight. So all said and done, maybe a day or two and the indices might stabilize closer to 22,900, 23,000 on the downside. What I feel is that even yesterday there were select pockets such as cement or a few defense names also where there was some kind of buying visible at lower levels. So it would be a stock pickers market, it would be a stock specific market, and coming to Nifty 22,900, 23,000 will now act as an important support. Significant put writing is still prevailing at this 23,000 mark on the downside. So I feel maybe post today's opening today the markets might just trade in a range ahead of the all important announcement tonight, and there would be apprehension of taking positions either side, maybe on leverage. So 22,900, 23,000 on Nifty, important support. On the upside now, 23,350, 23,400 will be an important resistance. Earlier it was 23,800, but now it is 23,350, 23,400, crossing which there could be a decent gush of short covering on the upside. Coming to Bank Nifty, if you see, Bank Nifty is still better placed compared to Nifty, and Bank Nifty has still yet not filled that gap which was created on 24th of March. So I feel overall 50,500, 50,600 on the downside in Bank Nifty will be an important support on the downside.
Okay. What are the top picks this morning, Sudeep?
Morning, Tamanna. The top pick today would be Grasim. Here, see, this is that stock which will not have much impact because of the tariffs that are being discussed. So there's not much discussion on cement which is going on. And if you see, in case of Grasim, 7 to 8 weeks of consolidation between 2,300 and 2,500 got broken last week. And even yesterday, while the markets were down and out, this was one stock which was still holding well. And just a day or two back, the stock has once again reclaimed its 200-day moving average also, and last 3 days it is sustaining above that. So what I feel is from the current levels, Grasim can be bought with a stop loss of 25.70 on the downside, and the first target on the upside would be 26.90 followed by 27.30. That could be the second target.
Okay, so stay on with us, Sudeep. Autos is the other segment that we're focusing on. Some numbers were out yesterday after market hours. We want to focus on those. Puneet, we're getting an overall picture, first of all, of how the quarter has been and how the month has been for auto companies, but also updates from Tata Motors and Hyundai coming in.
Well, definitely, these were the only two companies that have come out with, the sales for the month of March. So while both the companies have beaten estimates, it does seem like they've filled up inventory going into FY26. So the numbers slightly higher than what analysts had estimated for both Tata Motors as well as, Hyundai. And the growth, it's a 2 to 2.6 to 3% growth respectively for Hyundai as well as Tata Motors. So not too much to deep dive into that aspect. But I just want to talk about three to four key trends that have emerged in this particular month. The first ones, of course, what Maruti says in its media briefing yesterday, that for Gudi Padwa, which was on 30th March this year versus in April last year, so we did see that positive impact. They saw a 10% growth in just the first 2 days. So 30th as well as 31st March, they've seen a 10% growth. And that's a good number coming in from Maruti specifically, while the overall numbers for March were low and might be the slowest growth and the only company that didn't meet analyst estimates. I think that was the key figure to watch out for. The other aspect, they mentioned that inventory is now 27 days versus just 6 days at the start of January. So they filled up inventory and now it's at a level before the new prices coming in April, the third price hike for Maruti. So watch out for this one. It might react positively, but going forward, I think the commentary is going to be something to watch out for. I think the other one was Eicher Motors. 1 lakh units sold in this particular month. It's the 5th consecutive month over 80,000 sales that they've done. This is after the Q2 change in terms of strategy to focus on sale rather than EBITDA margins. And the first time that they've sold 10 lakh units in one fiscal year, which is FY25. So definitely a big beat for Eicher Motors. I think the margins was disappointing in Q3, but we'll watch out for that aspect. And finally, Mahindra is, continuing its growth momentum. It's shown 20% growth in FY25 versus 3% for the industry on the passenger car side, and on the tractor side also has outperformed. So I think the only discussion point for Mahindra will be valuation, and a very big surprise this month was Ashok Leyland, 24,000 units sold versus estimates of 22,000. And that's because a 25% growth in the bus volumes for the company. So overall, it's a decent month for auto sales where estimates were low, and 9 out of the 10 companies met these estimates in March sales.
Interesting talking points there, Puneet. And your point on inventory filling is well noted before the end of the financial year. All right, we're joined now by Chandan Taparia, who is the head of technical and derivatives research at Motilal Oswal Financial Services. Morning, Chandan, and thanks so much for joining us this morning. It's a tough environment for a trader, one would assume, because of the amount of uncertainty that is prevailing, and we saw certain trends play out yesterday as well. In anticipation of what Donald Trump will announce. How are you approaching trade today? What are your calls on the benchmark level, and do you have any individual picks?
Very good morning, Alex. Thanks for having me. So yes, environment might be tough, but as me and my friend Myra says, whenever you find that tough, better to go for vacations. And I think my team will focus on the same.
I thought Chandan will say when the going gets tough, the tough get going.
He's
saying
tough get going with their suitcases.
Yeah, he's saying I'm practical. I'll go on vacation.
I was anticipating the same thing. I thought when the going gets tough, the tough get going. Chandan,
he's in the business of making money, Alex. He doesn't want to prove to the world that he's tough. Make money. Simple.
Yeah. Okay. So I got bowled over by that googly that you threw at me this morning. But Chandan, so unfortunately you are working today, and you are in fact speaking to us. So therefore, from that perspective, for everybody else that cannot take a holiday, what would you do?
Yeah, so yes, obviously we should not take the holiday. I believe 90% time for a trader watching match gives more money than playing every ball. And this is what we need to apply. But yes, I've got the fantastic trading ideas. But let me first talk about the Nifty index. It was doing well, but on last trading session, it fell to surpass 23,333 and drifted lower to 23,150 marks. I believe some volatile cues could be there for the next 24 hours. We need to understand how the global market sentiment will come out as a trigger. But as of now, till it holds below 23,333, I'll place some negative bias for intraday point of view. Hurdles which were at 23,850 are shifting lower to 23,550 marks. So I believe that market is now hovering near its 50-day exponential moving average. But setup suggests some more decline could be there. But we need to closely watch 22,800 zone. So if in this profit booking decline, market manages to hold 22,800, then again some bullish stance could be there back in the market. Now talking about my trading ideas, I rightly mentioned that whenever you are in doubt, better to look at the market closely, watch it more rather than trying to trade more. So two trading ideas. First is buy on Indian hotel. I believe that consumption theme will continue to play well. And I'm sure most of the viewers and you as well have planned something about the vacation, as we are having the long holidays in next couple of weeks. So Indian hotel is first buying idea, one of the strongest counter, holding well to its rising support trend line. In last 4 days, it has seen a corrective move from 858 to 780 marks, and now witnessing some reversal with bullish candle. We have seen some put writing support. So with support of 788, one can buy for an upside target towards 840. Second trading idea, there is also the buy on hotel, and that is the ITC Hotel, one of the strongest name, and the counter has seen a breakout. It has even given the breakout from a bullish pole and flag pattern. Yesterday it rallied by more than 6%. Momentum could continue, and ongoing consumption and hotel theme could continue to attract the bullish stance. Even the markets witnesses some profit booking. So one can buy with support of 203, and ITC Hotel can head towards 225. So two trading idea, Indian Hotel and ITC. And Nifty, we need to look at the key levels to get or to navigate the market volatility.
Wondering Chandan ने कहाँ book किया है, because both his ideas are also hotel stocks. We're going to take a very short break, come back and ask Chandan about his holiday plans as well as more stocks that should be on your radar this morning. We'll be right back.
He sold most of his stock, 80%, as on that date.
All right, welcome back. Just about a minute left to go for the pre-open session, and you're probably going to have a bit of a soft start. Could you see an improvement through the day if things get clear? My sense also is you could see some announcements preemptively coming in from the Indian side ahead of the April 2nd deadline. Our best interest would be to have the deal done before Donald Trump does that conversation or that announcement. 1:30 a.m. IST. Tomorrow morning, remember, we'll be live with it on NDTV Profit. First rates are hitting, and it's going to be a bit tricky. This morning's going to be a bit tricky, so you have to watch out for it. Chandan Taparia, my question to you on Trent. Showing signs of excitement after a while. Of course, some fundamental reasons there. Their expansion plans is something that has got the street excited. But on the charts, are you liking Trent?
Yeah, so I'm totally buying the idea of consumption and the holidays. I think when we talk about the ITC and Indian Hotel, we cannot ignore the fashion and the trend. And I think Trent is one of the strongest counter in last 4 weeks. It started to form high top, high bottom on the weekly chart. In fact, it surpasses falling supply trend line. We have seen some built up of long position and rollovers were better. Couple of weeks back, it formed the double bottom near 47.20 marks, and after that, supports are gradually shifting higher. So Trent, yes, even in this market scenario, looks quite promising. With support of 54.50, the stock has potential to rally towards 57.50 marks.
Mayuresh, Chandan, when he was speaking about the going getting tough, he spoke about you as well. And he said that you also like to take a vacation when the going gets tough. I don't know what you have to say about that. And he's spoken about a few consumption themes. His two picks are in the hospitality space. You wanna double down on those?
Absolutely. I think Chandan's done some calculation on the whiteboard behind him. So I think he's already worked out his finances pretty well. So yeah, I think vacation is the need of the hour. As it comes to hospitality, Alex, I think largely the expectation here is that the steady state numbers should continue growing. And therefore, as they are approaching the best season, which is this quarter and the next quarter as well, when the vacations are well and truly on, the occupancy rates are expected to inch significantly higher. The average room rates are expected to be significantly higher as well. And therefore, I think all the core dynamics that one really looks at for this space itself, I think very, very attractively placed. Obviously, one can keep on arguing about expensive valuations, Indian hotels, still trades around 30 times EV/EBITDA at 27 numbers. Lemon Tree, Chalet hotels are not cheap by any sense. But I think the momentum in terms of numbers might continue. And when the global scenario probably looks a little bleak and grim, I think these domestic themes, including hospitality as a theme, might actually continue doing well. So anybody holding on Indian Hotels, ITC, Ataji BK may continue.
Just before the break, the Adani Port numbers were out, and seems to be a very strong update. And I wonder if the stock will react. Remember, it's a stock that's virtually done nothing in the last 12 months. Very, I think the 12-month chart will show you it's probably been around these levels for a really long time. If you can get those flashes up on your screen, you will see the numbers as well. But I think Mundra alone became a very high port, but they've handled the all-time high cargo volumes for the month of March, which is actually good. Mundra became the first Indian port to cross the 200 MMT annual cargo volume as well. Great, but the overall numbers based on what they were expected to do versus what they've done is good. I think this would help them do slightly better than the lower end of the volume guidance for the year at large, and which I think is positive because the street believed they'll probably nudge that number just about. My guess is that they've done better than that. We'll get back with the exact numbers, but I think this is good, right there, right? Mundra alone has done this, but overall numbers look okay. Mayuresh, for a stock, and you know, in some sense, when a port company does well, you feel good because that's probably indicative of trade having done well too. So I'm just trying to think, if the actual numbers or the annual numbers for Adani Ports are better than the lower end of the guidance that they'd laid out, right? Is that a net positive for the stock, or would you believe there are better areas to fish in the market?
Again, I think there are better areas here, according to you as well. But what has really transpired for Adani Ports, specifically in terms of container volumes for the year gone by, we had seen a whole host of issues, right from the Red Sea crisis to expectations in terms of global trade actually slowing down. And therefore, I think for the next financial year, they will be actually working on a lower base. Now, if the base case scenario and the assumptions are that the Red Sea crisis might not get repeated again, what you've probably seen in the past financial year, the container volume growth should be relatively better. If one really expects that the demand and global demand has plateaued off, obviously everything is unknown at this point of time with tariffs, etc., and what impact does it have on global economies and global trade. But if the basic assumption is that none of this is as severe as it seems, and if global trade starts coming back, because of the lower base, the container volume growth in absolute numbers should start showing a bigger uptick as we head into FY26. And third, I think a large part of their port operations, Neeraj, have got mechanized. Even with the operations or the acquisitions that they've done, a large part of the capex is in terms of mechanization, and therefore that reduces their operating costs quite significantly. So the leverage will get played out, but it's ifs and buts as we speak at this juncture. So yeah, I think it's an interesting story to probably track, but better place in the domestic market, we feel at this.
Interesting story is also the big brokerage call of the day. Goldman Sachs has upgraded Tata Consumer to a buy rating and also hiked the target price to 1,200 rupees. Harsh joining us with that big brokerage report. Harsh, what is Goldman Sachs saying?
Yeah, I mean, 20% upside is what they see from here. They're saying that the headwinds of the last year or two likely are receding. And I'll quickly take you through that. One, they believe that factors which have caused a problem over the last couple of years, one, recovery, sharp increase in tea input costs, competitive headwinds in the ready-to-drink beverages segment, and EPS dilution post the acquisition of Capital Foods. Mind you that was also a debt-laden acquisition, which has in fact increased interest costs on the P&L. But what could lead to that EPS growth, FY26-27, and they are expecting a 3 to 7% increase in that EPS number, Goldman Sachs. One, recovery in tea margins with price hikes likely. Second, a strong innovation and distribution expansion on growth businesses, and I'll talk a little bit about that as well, but lower net interest cost as acquisition debt starts to get paid down. Now, in terms of the new growth businesses, they believe that a scale up there is likely to happen. This is around 27% of the top line of Tata Consumer, expected to grow at 25 to 30% CAGR over the medium term. Competitive pressure is likely the big risk here overall, and they believe that the worst, even with regard to competitive pressure, is likely behind where Tata Consumer is concerned. EPS estimates, as I mentioned, hiked by 3 to 7%. They're rolling forward their SOTP valuation as well, and therefore the target price increase, very solid 20% upside.
Okay. Tata Consumer, Goldman Sachs is excited. Chandan, quick view on Tata Consumer?
Yes, positive view on the consumption theme, and Tata Consumer has seen the decent run up in last 3-4 days. It witnessed a V-shaped recovery. So I believe with support of 985, it can head towards 1040, 1060 levels.
Okay. Chandan, a specific view on a couple of banks. I know that your picks are in the hospitality space, but HDFC Bank down about 3% in trade yesterday. ICICI Bank also under a little bit of pressure. Given the uncertainty, one would assume that downward bias might continue in the very short term. But would you use any opportunities to buy for the long term?
I believe that Bank Nifty is likely to outperform. However, we witnessed a profit booking decline, but the way it surpassed 50,000 marks with pace of buying interest in last couple of weeks, that is tremendous. And I believe that overall till it holds above 50,000 marks, the major bias could remain intact positive for 52,000 or in fact 52,500 level. So I'll go for buy on decline stance in selective heavyweights name, including SDFC Bank or ICICI Bank, with the view that here the major trend could remain intact. Even I can select the name like Kotak Bank, which continuously making higher top, higher bottom on the weekly chart. So to start with, I want to recommend here to buy on ICICI Bank, one of the counter which is the higher margin of safety with limited downside, can buy on decline with support of 1285, and it can again reclaim to 1370 marks. Talking about Kotak Bank, a strong up move with better rollover clearly indicates that buying interest could continue on any small decline. So use any small decline with support of 2090, and Kotak Bank has potential to rally to us 22-25 marks.
Oh, okay. Okay, Chandan. So now that you've seen the pre-open rates as well, are the two stocks that you recommended your key trades, or would you have something else to add as well? IT may look slightly wobbly today. Trent had a big day yesterday. So based on the pre-open session now, because that's the rate at which you will be able to trade, is there a top call?
Yeah, so I'll continue to remain positive on the consumption and hospitality theme, with the view that over the next couple of days, the focus area will be these stocks and counters. So I'll continue to remain bullish and would suggest to go with Indian Hotel and ITC Hotel. If I talk about ITC Hotel, if it opens positive, I think this stock can be the strong candidate for FNO gainers as well. So one can continue to look for an upside target to us 814 Indian Hotel.
So Indian Hotels is, I think what Chandan is saying is 840. This is ITC Hotels, of course, but Indian Hotels, if we can pull up Indian Hotels, Chandan is saying the target could be 840 as well. Watch out for this one. Thanks a lot for that, Chandan. Really appreciate your time. Mayresh, maybe you gave us a view on the hotel stocks, but a lot of people are now buying into some of the smaller hotel companies. Is there something that you like there? I mean, there is Juniper, there is Pravek, there is multiple others, right? 8 or 9 small hotels aside of Indian Hotels and Chalet, which are the bigger ones, or a Lemon Tree. Anything in the smaller hotel space?
Yeah, so I just mentioned Taj GVK, I think is something.
Okay. Sorry, I missed that. Okay.
So I think the steady state numbers, as you've probably seen in all the hotels that they are operating out of, a large part of their hotel pool is based out of South India. But I think the demand there has remained extremely strong and robust. What you've probably seen in terms of the average room rentals or the average room rates have remained very, very strong as well. And even the property in Mumbai, the Taj Santa Cruz property, has shown a decent uptick in numbers on a year-on-year basis. And their expectation is that the numbers should see a steady state improvement as we speak. So on an overall consolidated basis, comparing all the hotel properties as we speak, there should be a steady state growth that one really expects from this group.
Wondering if you are excited at all about the kind of auto updates that we have seen. And your tariffs are going to come into place on the 3rd of April, regardless of whatever is announced tonight. How are you looking at auto and auto angst right now? Is this an avoid space, or are you feeling some kind of optimism looking at the numbers that have been reported by a couple of players?
Also being very selective, Taman, honestly. So I think two-wheelers is the space that we believe should do relatively better for two reasons. One, I think the price points at which two-wheelers are being sold compared to a PV maker, whether it's an electric one or a hybrid one, is relatively cheaper. The second aspect is the entire thesis in terms of expectations of the consumption story coming back. Specifically, I think rural and semi-urban consumption, because of better monsoons expected this time round. You've already seen hints of rural and semi-urban recovery started to shape up. And therefore, as these elements start falling in place, for the next year itself and the next few quarters, there should be a steady state uptick as far as two-wheelers is concerned. So TVS has been the best stock within this pack on all counts, whether it's the volume growth, whether it's the new geographies that they've entered into, whether it's been the margin performance. And therefore, I think TVS is something that we continue being optimistic about. Obviously, I think a stock like Hero MotoCorp, if a rural and a semi-urban recovery does take place, the kind of variants that they probably introduce specifically in the 150 to 250 cc category, which is one of the categories which should do well, in my opinion, over the next few quarters as well. I think they should benefit with added features probably getting added in their existing portfolio and platforms that they're probably running. So two-wheelers as a space, Taman, is something our belief is that earnings should relatively hold on and improve as we speak over the next few quarters.
Mayuresh, relatively quick answer, about a minute and a half from opening, but specifically on Hyundai, I know you didn't mention it, but Hyundai and Tata Motors both have underperformed relatively price-wise. Tata Motors' recent declines, you would not prefer any of those?
At this juncture, Alex, I think it's a phase where I think these stocks might just consolidate and just we would just like to see how these numbers play out over the next few months for both these companies.
Okay, so that's on Hyundai as well. Mayuresh, just one quick word. We spoke about Trent at length yesterday, 30 seconds, and then we'll do a detailed view later. What about Avenue Supermarts? Is that an investment candidate or are there better pastures?
So V-Mart retail, I think that's something that I'm keeping on my watch list, Neeraj, honestly. I think because if the recovery has to come through, you look at a large pool of their stores, again, rural, semi-urban areas, you've already seen a steady state uptick in the last few quarters. And if there is a recovery in terms of consumption patterns, I think this is one stock, in my opinion, where numbers are improving and should improve drastically if things fall in their favor.
Got it. Okay, well, for now, 4.5% higher is V-Mart on that business update that they've given. So some of these business update stocks could be fairly interesting to watch, not just today, by the way, over the course of the next few days. So keep them in mind. But here's how the markets are starting off this Wednesday morning. It is, well, a liberation day for the US. Ahead of that, 1/3%. So not bad. The sentiment in Asia too was okay. And we were an outlier yesterday, by the way. We cracked quite a bit because of banks and IT, and I think some bit of a pickup there. Banks picking up a little bit. Nifty IT, well, a bit of a pickup too, and mid caps and small caps should come up on your screen. Flattish start. Let's get the heat map up on the screen and show you what's moving and what's not in the large cap space. So, okay, let's start with the gainers though, because Tata Consumer has this 7.5% uptake on the Goldman Sachs note. They say earnings are at an inflection point and the stock is actually buying into that. 8% higher now for Tata Consumer, really strong showing. There is Tech Mahindra, which is a part of the JP Morgan buy list, if you will. Trent continues on its merry ways, 1.5% higher. What a stock that one has turned out to be. Zomato is not having a bad day at the starting point of its nifty journey. There's a bit of a strength in Infi as well, very interestingly. But that's the long and short of it. Maybe an ONGC thrown in there, ICICI Bank thrown in there. But Tata Consumer steals the show. What a reaction to a Goldman Sachs known for a nifty company. You don't usually see nifty companies react this way, but strong reaction for sure. What's not doing well? Nestle down 2.5%, BEL 2.5%. Well, the rally in BEL probably over now that the order flow is discounted. HUL, so consumption is taking a hit. Is this a swap happening out of some of the slower growing staple companies into a Tata Consumer? Don't quite know, but clearly Nestle and HUL are down. Reddy's, IndusInd Bank, Ultratech are amongst the losers. Now a bit of a cool off tamanna for Tata Consumer, but still a pretty strong show.
Yeah, the consumption story very strong for them. You know, on Zomato, I wonder, interesting story yesterday that was doing the rounds, that Zomato has let go of 600 people because on their call centers because they're moving to AI. I don't know if that is why the stock is also in focus today, but it seems to be a sensible move of technology for a core process as well. Let's take a look at what the broader markets are doing before we move ahead. The Nifty, okay, steady, not half bad. The mid-cap 150 is slightly in the red. Broader markets not showing the excitement there. Small cap 250 showing a bit more pain, about 0.5% down this morning. The Bank Nifty is what is exciting, frankly, about 0.5% up. I wonder if the Nifty IT is also behaving like that. Let's pull up the sectoral heat map and just take a look at the overall picture before we get to individual stocks. Yes, the Nifty IT is seeing a good recovery there. Remember, most beaten down yesterday. Nifty Realty and IT, they're top of the charts. Bank Nifty also not half bad. So you are seeing pockets of strength, but very, very selectively. I would say those that are not going to be impacted too much by tariffs also holding on, safe spots over there. IT, of course, in recovery mode after 2 or 3 very, very poor sessions. Nifty Defense, the defense stocks looking a bit poor. I wonder if we can pull up components and see where the pain point is as far as defense stocks are concerned and why there is so much of a pain this morning. And you have Nifty CPSE as well in the red. Oh, it's coming from BEL. BEL is what is dragging down, and which is why its weightage on this entire index is dragging it all down. All right, let's come to specific stocks and see what's happening there. CSB, we spoke about. Business updates looked good. Bump up in their gold loan portfolio as well. It was on our watch list. Stock is about 3% up this morning as the opening trades come in. Vodafone is once again in focus, was yesterday as well, but now pairing off. The pre-open rates not really holding up. I wonder if it will. I mean, the government is buying at 10 rupees, but 8 rupees is where Vodafone is right now. Star Health, we talked about this morning, a very interesting buy call from Novama. Stock is mildly in the green. What's happening with Wari Energies in Premier is what we should look at. Bernstein has quite a negative view, says it's sand at the price of gold. Both are about between 3 and 2% down. Hindalco has been in focus because of its analyst meet. The stock is about 0.5% down this morning, although there was quite a few positive views coming in. And I'll just review Tata Consumer once more because this seems to be the stock of the morning. Tata Consumer holding up about 5%. So that's the outlier. Overall, though, I would say that the mood is very, very careful, Alex, this morning. Stock-specific action, but the street not willing to go out and take a call ahead of clarity that is awaited in the next 12 hours or so.
Oh, definitely. And that is going to be likely the state over the course of the day as well. Just want to point out a few more stocks from the broader markets that are moving that we've not addressed so far. Quess Corp is looking interesting this morning, up as much as 6% as we speak right now. Aegis Logistics is up as much as 4%. We've spoken about CSB, but Macrotech Developers up about 2.4%. Sham Metallics also gaining about 2.5% or so. Credit Access also up about 2% or so. On the losing side, I'm going to be curious to find out what's happening with Central Bank, because this is a counter that is losing about 8% in trade today. It's down from the low point, or rather it's gained from the low point of the day. It was down 10% at one point, but losing serious ground. IOB also losing ground from the banking pack, down about 4.5% or so, and under pressure. Nestle now losing about 3%. I want to talk to Mayuresh about BEL and indeed HAL and a couple of these defense plays, Mayuresh, because HAL in particular, if you look at the last month or so, has gained what, 40%? Is that too quick, too much? Would you take money off the table if you are invested?
I will book partially, yes. Again, the big picture argument stays with all these players. HAL, you're talking about Bharat Electronics as an example as well, because the order books are sufficient enough to give them revenue visibility over the next 4 to 5 years, to say the least. Obviously, the margins at which these orders have come through are pretty decent as well. And therefore, if they continue executing well, it will keep on reflecting as far as numbers are concerned. Obviously, I think the biggest trigger for why these stocks moved was the European spend in budgets and the expectations of some part of that getting outsourced to these Indian companies as well. Whether that happens or not is a different perspective altogether. But the expectations in terms of revenue visibility is something that is the big picture argument for the stocks. Obviously, I think from an immediate short to medium term perspective, how they execute is going to be extremely critical. What is the product mix in their execution pipeline is going to be extremely critical as well as far as margins are concerned. And therefore, I think both these aspects need to be carefully monitored for the entire space as a whole. So again, from a macro perspective, obviously everything is in place for them. But from an immediate short-term micro perspective, execution is going to be the biggest risk factor for all these stocks under consideration.
Yes, this is the thing with defense stocks. 2-3 days of a positive mood, and then this execution risk question always comes back. But I want to talk about Tata Consumer just for a second, and I know we've been talking about the kind of reaction we've seen. Let's see if it's held up, and it has held up about 5% now. Now, here's exactly what Goldman Sachs is saying on Tata Consumer. They've upgraded it to a buy. They've hiked the target price to 1,200 rupees. They say there's an earnings inflection ahead, and they're set to achieve solid EPS growth in FY25 to FY27. Why is that? Because they say innovation and distribution led scale up of their growth business. Their small and medium term market share and premiumization play is something that they find positive. Their growth business is driven by innovation and distribution in these 2 years of 25 to 27. So that's turning out to be an interesting play. The other one is also IT. Now, as these global uncertainties loom, JP Morgan has got its note out on the IT sector, reiterating the likes of Coforge and Infosys as their top picks. Puneet is joining in with more details. What's JP Morgan saying?
Well, it's a very interesting note, but with a very big bearish tone, so as to say, for the IT sector, and that's the key aspect. They've made 2 rating changes as well. Very interesting though. They've downgraded HCL Tech in this particular report. Something that the street has been, neutral on as a stock, but they've gone ahead, downgraded it to a neutral from an overweight rating earlier, and target price has been cut to 1,700 versus 2,200. And the other rating change is Tech Mahindra, upgraded to a neutral from an underweight rating and target price of 1,500, which has remained unchanged. So that was on the stock aspect. They mentioned that FY26, guidance is expected to be modest at best, and the commentary will be something to watch out for in this particular quarter, because Q4 is expected to be uncertain and not too much growth is expected from any of the IT players. The other key point that they mentioned is that they're in a base case scenario, they're expecting no growth acceleration. So it's a very bearish tone to this particular sector that JP Morgan has. Apart from that, they mentioned that they're moderating their FY26 and 27 revenue just to by 3 to 5% in tier 1, as well as 2 to 10% for the tier 2 IT players. And as you rightly mentioned, the top picks remain Coforge, Infosys, Tech Mahindra, LTMindtree, as well as KPI Tech. But on the avoid side, there are the large caps, TCS, Wipro, HCL Tech, as well as Tata Tech and Tata Elxsi, the 2 mid cap players. So overall, a bearish note and big downgrade coming in on HCL Tech.
Okay, Puneet, thanks for bringing this to us. And remember, they've just cut prices across the board, and HCL Tech is the downgrade there. The sector, Mayuresh, has eroded 22% from the December highs. Now, is it baking in the negatives, or is there far too much uncertainty for somebody to bet on IT right now?
I think a large part of the uncertainties are baked in the price as we speak, Neeraj. But I think a couple of things that the street probably needs more confirmation on. I think are discretionary spending patterns really coming off? And if they are coming off, what happens to orders? What happens to the margin related to the orders, on which assumptions for 27-28 growth dynamics have been penciled in terms of dollar revenues and constant currency revenues as well for a large part of the IT company pool. The second aspect obviously is in terms of a recessionary condition, if that probably does play out in the US context, what probably happens in terms of the innovation that a lot of these companies had embarked upon. And therefore, I think the bench strength that one really talks about, the expectations in terms of outsourcing costs as an example as well. What probably happens to all these perspectives? I think that is something that the street is really unsure about at this juncture. And therefore, I think globally, as we see a lot of IT stocks that we are tracking across markets, they are mirroring in the same sentiments in terms of what can or cannot come through. And therefore, this uncertainty is something which might be a drag on these companies going forward as well. So I think clearly Q4 numbers, management commentaries is something that will be keenly watched out for, both from a macro perspective as well as from an individual company perspective. How are they expecting to position their respective companies in all these uncertainties that come around? So I think it's a wait and watch, frankly. And across global IT companies, Neeraj, I think we have adopted the stance to probably just wait and watch and see what transpires over the next few weeks.
Okay, wait and watch on IT. Thank you so much, Mayuresh, for joining us this morning. It's turning out to be an interesting morning with quite a few names there that are buzzing. I'm just going to point out Quess Corp. For one, their rejig is something that the street seems to have taken kindly to. The stock about 7% up. So here's what they've done. We knew that they were going to demerge into separate entities, 4 entities, but they've announced the leadership of each. So you have Gurmeet Chahal as CEO of the Digitide Solutions business, Suraj Prasad as CFO of Digitide Solutions, Kamal Pal Hodda as CEO of Blue Spring Enterprises as well. So that rejig seems to have done well for the stock. But the other one that we're talking about is solar manufacturing. That's in focus after Bernstein has initiated coverage on Waaree Energies and Premier Energies, but with an underperformed rating. Why is Bernstein saying this? Mehika joining in for more.
Yeah, so the coverage has been initiated with an underperform both on Waaree and Premier Energies. Waaree's target price stands at 1,902 rupees, which is a 20% downside to the previous closing, while Premier's on the other hand stands at 693, which indicates a 24% downside to the previous closing. Now, their view on the overall solar sector is positive. India is the third largest, biggest solar market globally, and there's an expected spend of $20 billion per year. And the indigenizing of the solar manufacturing process is a space that seems interesting to Bernstein. However, they have marked certain problems with the solar manufacturing space. There's a high propensity for oversupply given the short commissioning timelines of plants, and the Indian solar PV market, which is the module market demand, is pegged at around 40 gigawatts for FY26, but supply could be over 70 gigawatts as per the brokerage, and the current domestic pipeline is overwhelming and could, increase the competitive intensity further. Manufacturing capacity is expected to touch over 60 gigawatts by FY27. Even the export story, now India did see a big jump in their exports, especially to the US between FY22 and FY24 because of restrictions on China, but they expect this to be a short-lived story of around 1 to 2 years because US is increasing their domestic manufacturing capacity, and their current production is around 94% of their demand, which is expected in 2025. Their view on Waaree Energies, they do expect module realizations to decline 13% in the next 2 years. They expect the company's ROEs to fall to 17% levels in FY28 versus 42% in FY24. They're stating that the company's capacity is nowhere near global giants, and they believe the high returns in the low barrier space is not sustainable. Lastly, on Premier Energies, they expect their module and cell realizations to fall 15% and 44% in the next 2 years. The company could also lose market share in terms of their cell export monopoly as new capacities are coming on stream and people are adding cell capacities, and the volume of cells made for actual sale could fall to 30% by FY27 versus 73% in FY25 because the company will use it for their own needs. They do expect backward integrated players have a bigger right to win, and they expect larger integrated players like Adani Enterprises and RIL to actually lead the space. Waaree Energies, however, has the potential to benefit more.
Okay, thank you for that, Mehika. This is an interesting one, Neeraj. This is the kind of initiation of coverage no company would ever want. It's better you don't cover me. If you come in with an underperform and say that I'm selling at the price of gold. But this seems to be more than just a valuation concern.
Ability to compete against the big boys. One could argue that Waaree is now in the big leagues anyway, with the capacities that they've added. But yeah, fair point. The question it's interesting. Their plans are interesting. They have a US presence now in order to try and thwart any kind of stress that could come in. And they've gone on record and said that they can actually double or treble the US capacity in a matter of 12 months. Plus they are well funded. So in some sense, valuations is a clear concern. On the business side, they on their part have said that in responses many times to us as well, that if there are issues that have come in or that will come in, we can combat it in an XXX fashion. But yeah, it is true that the high and mighty of India Are all of them in this space? All the big groups are in this space.
No, even on the US front, the high and mighty there are also in the space. And the other point, and I had this conversation with Parivan and asked them that the tilt of the current administration is not so much on solar energy. They want to drill. They're in drill baby drill mode. But their point was that they may say that, but this is a movement that's time is coming. But anyway, interesting relook at what Wari is looking at today, Wari and Premier actually. But our focus this morning on our corporate conversation is on Amber Enterprises after the Union Cabinet has approved a production-linked incentive scheme to draw about 59,350 crore investment. Before we speak to the management on those opportunities, my colleague Puneet joining us to set up.
Well, thanks for that. Definitely the big headline and the conversation happening around the Cabinet's big approval, 22,900 crores PLI component scheme unveiled. Now, while managements like Amber had mentioned in the last couple of quarters in their conference call as well that there is a lot of talk about it. Now that it's finally come, it's a very big boost to all EMS players and especially likes of Amber. Now, Amber Enterprises is present across components in the room air conditioners, which is the consumer business of air conditioning. They already are present in the components side of that. They also manufacture the non-RAC components as well for refrigerators, washing machines and other applications, while also maintaining that the electronics segment, which is a fast and booming segment in the overall revenue basis for the company, is already present in PCB, which is the printed circuit board assembly business. They also manufacture routers for telecom segment, as well as smartwatches for the hearables of the wearable segment as well. So overall, the company is already present in the component side. I think what kind of revenue targets are they anticipating from the electronic component scheme essentially, and what will be essentially on the margins? That's something really wanted to know from the management. And while there has been media reports speculating and a demerger for the electronic business, I think that'll be something to watch out for going forward as well, because as a standalone, that business has higher margins compared to a traditional consumer business.
No, that's a fair point, Puneet, and actually that's what I'd want to know from Jasbir Singh, Chairman and CEO of Amber Enterprises. Mr. Singh, thank you so much for your time to us on NDTV Profit this morning. Let's start by getting your take on the PLI scheme and its relevance for you specifically.
No, we really applaud a very well timed out scheme by Government of India Ministry of Electronics. You see, as a rule of physics, first, the government has laid a lot of incentives for the assembly businesses. Last 7 years have been assembly incentives, and now we can see that assembly has started happening for mobile phones, for laptop, IT servers, etc. And now is the time for the components. And I think in components, active side has already been given first scheme. This is the first scheme on the passive component side. And we are very excited for this scheme. Normally, the passive side of the components have asset-heavy businesses. So without incentives, it was very difficult to take care of the disability. But at Amber, we are very excited. It's a rightly timed out scheme, and we are planning a good capex to bring in. And we already have our printed circuit board division as Ascent Circuits company, which we acquired last year. And we are already manufacturing single layer, double layer, and multi-layer and RF PCBs. Now for the HDI and semiconductor substrates and flex, we have done a technological tie-up with Korea Circuits, which is one of the leading South Korea-based company, and it's a joint venture which we have done with them. So they will be providing us technological support as well as some buyback arrangements. So we are all set to go for taking care of this, applying for this incentive schemes.
What is the kind of revenue you see coming in from some of those schemes? Of course, there's a process, you'll apply for the scheme, etc., and that will all follow through. But some of the targets that you could share with us?
Well, this is a 5-year scheme. So there will be a threshold which will be announced in the guidelines. So we are awaiting for the guidelines to be announced. It's normally the PCB business of HDI and semiconductor substrates ranges in the asset turns of 1. And we at Amber, we are planning to invest almost about 3,000 crore over a period of the scheme. So that will be the overall revenue increase which we are anticipating as we move ahead.
Mr. Singh, good morning, Neeraj here. I always pronounce your name as Amber, and then people tell me it's Amber. So I'll make it a point that I pronounce it Amber now, just so that I get it right. But
Thank you.
But a question. We were talking to another, not technically a peer of yours, but another company in the PLI space or electronic manufacturing space, which yesterday said that this component manufacturing PLI could help spur margins significantly for them. Their base is at 4, of course, and therefore it's good for them. I'm just trying to understand from your perspective, does a component PLI help you expand margins as you operate that piece?
Yes, Neeraj, indeed, these kind of businesses, especially the passive component side, if you see globally also, it's a high teen businesses. So normally the PCBA applications are hovering around 8 to 9%, but this high teens addition will definitely enhance the margin profitability of the complete electronics division for us.
So you are at what, circa 7%, right, on the overall console numbers for yourself. If you add this, let's say you back the PLI to the extent that you want, you put it in operation in 2 years, let's say, 2 years out, what does the margin potential become for you, assuming that you bag it to the extent that you want?
Well, I think overall console numbers will definitely go up once the electronics division starts moving towards the double-digit numbers. So we are expecting our electronics division to touch double-digit numbers as soon as we implement this incentives, capex for this incentive scheme announced. So maybe by 27, 28, we should see our electronics division going towards a double digit, which will also increase the overall Amber console numbers towards, maybe 9.5% type.
You're saying 9.5% possibility, of course, but 9.5%. We are in FY26 currently. By FY28, you reckon you could actually nudge 9.5% operating margins consolidated?
Neeraj, it will depend when the guidelines are opened and how much time it is taken for the approval of the applicants.
But could happen. So, if not FY28, FY29 could happen.
FY29, yeah, that's right. Yeah,
wow,
that's what we are looking. Yeah.
From 7% to 9%, that's a decent leap. So
that's, you see, when we acquired electronics, we started electronics division in 2018 by acquiring Ilgin Electronics. It was a small 300 crore company with 2.8% EBITDA. Now we have already reached to almost 7.5 to 8% in our electronics division. And that's growing by about 50%, 45 to 50%. So with this scheme coming in and the high teens margin getting up, definitely it will enhance the overall margin scheme of the console balance sheet.
The conditionality that we know so far for the PLI scheme, can you just give us your perspective on that? Because some of it is about employees that you hire, some of it is linked to capex, some of it is linked to turnover. So how do you sit in that framework and the conditions that are there?
See, I think everything will be clear once the guidelines are open. So I think the broader objective is to bring component ecosystem as well as incentivize the incremental sale you bring on the table and also the employment you generate. So it's a very well thought of structured scheme, laid out by Government of India. We are all waiting for the guidelines which will clarify all these points.
Fair enough, but I'm just saying because you already have, Mr. Singh, experience with the PLI scheme and dealing with it thus far. So fetching from that, things like the timeline for the subsidies to actually pay out or, to hit your balance sheet, the kind of conditionality which has come, it will be more of the same, one assumes.
No, in our air conditioning PLI, it was totally different. It was because that was a component scheme where we were aiming for the value addition, and already it's been a very, very successful scheme. From 25% value addition in 2021, we have already reached to 65% value addition as an industry. Compressor plants have been put up, copper plants have been put up, and it's going towards 80% in next 2 years. Here, what we see in the incentive scheme, in electronic scheme, it's a combination of asset turns, incremental sale, because every component has a different type of a threshold of asset turn. So it will be very clear what component you are applying for and what is the asset turn outlaid in the guidelines. And of course, every sector like PCB is a labor intensive job, so there will be employment generation. So everything will be linked. Then only you will get approved on this. But as far as the timely payments are concerned, we really applaud the Government of India on this front. We have been receiving all the PLIs in air conditioner. Also, we have received 36 crore of sanction letter just last week, which is on time. Last year also we were paid on time. We have already received these incentives on time.
Okay, Mr. Singh, the other question that I have is that for the last 3 months, we've been hearing about this shortage of components, back-end equipment, what have you, which will lead to a big shortage of air conditioners by and large. Now, you are prime in that segment, right? I'm trying to understand whether Q4 was a really, there was a high demand for stuff that you're manufacturing. Is there a direct correlation out there? Part one is that. Part two is that we've seen this conversation come up after a year wherein we saw some 40-45% growth in dispatches, right? 2024 was in some sense a banner year for cooling solution products. And on top of that, you are seeing a first quarter which said that there will be shortages. So is there some inflection point that has come into demand for cooling solutions? And does that impact your growth meaningfully as well?
No, actually, Neeraj, yes, it has been a extremely a good season for the entire AC industry, and everybody has benefited out of that. Q4 also was a very, very positive quarter. Basically, industry was anticipating a growth of almost 15 to 20%, whereas we saw a growth of more than 35%. So, and on the other side, because of the quality control orders, there were some, compressors plant capacities which are to be generated still. So there are already 5 compressor plants which have been put up. Earlier, there was only 1 compressor plant. There was a shortage there. I mean, we were discussing about the shortage, but now because of government's intervention, we are hearing that the quality control orders will be, there will be extension towards that. And more capacities are being bought up in the compressor plants by the compressor companies. So I don't think so there should be a very big, anything very large coming out on the compressor shortage point of view or any other component point of view.
Okay, but presuming that there is a bit of an inflection point in demand that started sometime in January last year, and don't know the reason but thereof, I'm just trying to understand, sir, do you reckon that growth, I mean, I don't know what guidance you might probably be giving the guidance when we talk to you post your numbers. I presume we'll have a conversation then. But do you reckon that the kind of growth that you exhibited, let's say in FY25 or an average of FY24 and 25 is something that can be carried on for the next 2-3 years at the very least?
Well, Neeraj, this is a seasonal industry. You can't know. I mean, you have to be, you can only pray to God for keeping the sun shining, So I think last year was a good season, and in anticipation of the good season, inventory levels are very low. So people are piling up on the inventory side right now in anticipation of the good season, whereas we are seeing some uptake coming from southern part of India and the western part of India where heat waves have started coming in. And we are hearing, news from the Met Department that it is going to be harsh summers. So the trend can repeat, but it's very difficult to predict anything in the seasonal industry.
Just last question, and I don't know if there is any direct relevance, but want to get your view because we're talking about tariffs coming in tomorrow. We don't know what shape or form, on what products, what components. I mean, we're trying to compile a list, and it runs into pages of what reciprocal tariffs could look like. From your perspective, I'm sure that back of the envelope calculation must have happened on an impact, if any.
For our group, there is no impact because we don't export large numbers to US markets. But yes, I mean, we were looking for exporting in future. So we are looking forward what the relevance is. But I think we are already in talks for the bilateral trade agreement, and I'm sure there will be definitely good steps taken by government to ensure that the industry continues to prosper the way it was planned, and it can be a good opportunity, for Indian companies such as us.
About importing of components, Could
No, we
prices
don't
go
have
up?
any impact. We don't have any
No
impact on the tariff.
Okay.
No, no.
Okay, so that's interesting to know. It's also interesting to know that future plans of export could be hit if this comes out. Of course, we'll wait and watch. Thank you so much, Mr. Singh, for speaking
Thank you very
with
much.
us. Amber, Enterprises there on what the impact of the PLI scheme will be, and you're seeing that uptick in the stock as well as this conversation was on. Good clarifications coming in there from the management. But we're talking to Atul Auto as well. The next conversation we're having on the show, the automaker has posted a robust March sales picture, especially in the EV segment. Before we speak to Jitendra Adya, the President Finance of the company, let's get in my colleague Puneet on what should be the focus point.
Well, thanks to that. If I look at FY25 as a whole, it's been a very strong year for Atul Auto. 36% growth in its three-wheeler ICE business, which is the petrol and the diesel three-wheeler vehicles. It's seen a very strong growth in this particular year, while the electric L3 category, which is essentially the e-rickshaws or the smaller electric cargo, that's not grown as much, but it was a sizable number of close to 7,000 units that they've sold in this year. And the L5 category, which is the larger electric cargo as well as passenger carrier vehicle, that has actually seen a growth of over 250% on a low base. So going into FY26, the new categories of the electric vehicle segment has been growing very well. I think just three key points that I'd want to know and get some more information from the management is definitely on the electric vehicle segment. What is the growth anticipated? If this segment as a whole, both L3 and L5, is profitable either on the EBITDA or on the PAT side specifically. And the third key aspect will be the ICE segment. How has that been shaping up essentially? Because any kind of competition in the rural India as well as in the urban markets that the company is facing from the cheaper imports from China. So certain key aspects to watch out for in this particular conversation, but at a very interesting juncture, this company of market cap of about 1,400 odd crores.
Okay, well, thanks for that, Puneet. And let's ask that question to Mr. Adya. Jitendra Adya is President Finance at Atul Auto, joins us right now on the show. Mr. Adya, good having you. Thank you so much for taking the time out. Let's probe. Actually, firstly, congratulations on having a very strong FY25, of course. 36% dispatch numbers is great, but in some cases the bases were also low, the electric segment, for example. Tell us, how do you see the next 12 months? I mean, because ICE is growing well for you, electric three-wheelers isn't, the other piece is, how do you see the next 12 months? Do you make more dispatches in the electric side of the business, or is it ICE which will still show the predominant growth?
Thank you so much, Neerji, for having me on the show. And once again, another thank you for appreciating the numbers. We at Atul Auto are really excited. We were able to just, conclude the year with at least more than 30% growth rate. And this growth has come from all three, fuel, that is a conventional, EV, and obviously alternate fuel. I am quite positive about next year. EV contributes approximately 25% in our entire sales, and I expect that this will continue growing. More excited, though the base is low for L5 category, but the product is very well positioned into the market, and we have multiple options available. That is with fixed battery, which is manufactured in-house. Other is swappable, for which we have a tie-up with Honda. And another direction of growth is coming from export. So all in all, for next year, yes, the outlook is quite positive and we are excited. The first benchmark, unfortunately, this year we could not surpass that last year's pre-COVID level sales, I'm sorry. But the first benchmark we would be doing it to cross the pre-COVID sales for all category of fuel.
Okay. So, that's well understood. Now tell us, Mr. Adya, that will the growth in the EVs be a factor of the base effect itself, or are capacities and demand primed for growing at a good pace, not just in FY26 but beyond as well?
I expect so, as long as capacity is concerned. As I said, we have a couple of things lined up for battery manufacturing. One, we already have a vehicular platform base available. This particular EV I expect that it will keep continue growing at a much better rate than the conventional one, and we are all set. The first thing which we have analyzed and we are now very sure about the product offerings for which we have multiple variants available with various commercial solutions. So this, I believe, EV is going to be the next thing for Atul Auto Limited. Apart from alternate fuel and diesel vehicle, conventional vehicle, we are quite good at diesel and doing well in all the markets.
You know, Mr. Adia, good morning. Tamanna here. Just wondering, as good as the EV numbers have been, and you know, it's a solid set of numbers. What is the kind of competition that you're getting from Chinese products? Because this is something that we see even in the two-wheeler space. They're cheaper, they're prevalent and very available. Are you seeing that in your space as well?
See, Tamanna ji, one thing is very sure, L5 category, we have a competition with domestic players which are well set into three-wheelers market. L3 category, which is the e-rickshaw category, there I believe that there are competitions, and in particular, the quality makes a very big difference. And at Atul Auto, we are quite conscious. And we would like to continue growing in L3 category as well at a better rate than the previous one, but would not like to compete with Chinese or their quality parameters.
What about the L3 and L5 category in terms of profitability?
L3 category, L5 category, it is margin profile is almost same like conventional vehicle, but as such, L5 category, since the base is small, we are still experimenting much into the market. So I believe that in H2 we can definitely speak about profitability in L5 category. L3 category margin profile is quite decent. We are generating enough margin for that category.
Just to understand your ICE to EV split right now, and do you see that moving rapidly?
See, if you look at ICE versus EV, ICE delivers somewhere close to 75% of my sales for last fiscal. 25% is EV, and I believe that there will be definitely, growth in EV category while continuing volume growth in ICE category. Overall, I expect that going forward next year, I believe that from 25 it may move to anywhere between 30 to 40%, and with good volume growth in ICE, we will be able to touch upon pre-COVID level very soon.
So 30 to 40% growth in the EV category after FY25, as in this year, is what you're seeing?
Absolutely.
And where is that growth coming from?
In terms of application, you are aware that there are typically two applications, passenger and cargo. It obviously come from both the category of vehicle, cargo as well as passenger. As far as L3, L5 comparison is concerned, I expect more numbers from L5 category because that vehicle is getting settled into the market. We have partially overcome few challenges about retail finance availability, and I expect that in next year it will be further smoother. And as long as export is concerned, we have some inquiries for electric as well from across the border.
Mr. Adya, just one query. You are constructive and I'm happy for that. But when I dial back the years, right, I look at, let's say, March 2016 numbers or 18 numbers. You were circa 550 crores. Look at March 24, you were circa 550 crores as well. So in some sense, the growth hasn't quite been there relative to the promise that Atul Auto held, right? Do you reckon that will change? Are there some targets that you've set for the next 3 to 5 years as a company?
Neeraj bhai, the first target obviously is to utilize the capacity. But since you have, put the context of 2016, 2018, Niyat, may I remind you that the composition pre-COVID, it was only, alternate fuel and diesel. We were ready with our alternate fuel three-wheeler exactly at the time of COVID. Unfortunately, the seeding program took little longer, and now there is another, product category, that is EV, is there in entire game. So we had to adjust for a while. There was some slowdown for a while, but all put together, currently we are aiming at utilizing our capacity and would like to go beyond 100,000 vehicle in a midterm, that is anywhere between 3 to 5 years.
Okay, Mr. Adya, we'll leave it at that. Thanks so much for taking the time out and being with us. Really appreciate your time.
Thank you.
That's Atul Auto. But we take a break, but I urge people to stay back because the guest up next is somebody who can really put some perspective on what the impact of the tariffs and the trade war could be. Mark Matthews joins in. He is Head of Research Asia at Julius Baer. On the other side, stay tuned.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports.
Welcome back. You are seeing a decent recovery. I would call it a decent recovery in market. Let's pull up the intraday just for a second to give you a sense of what's been happening. Nifty in the greens, or open in the green, but decently so. Nifty IT looking stable after the kind of badgering that we've seen in this segment of stocks for the last couple of days. Bank Nifty is the story of this morning, about 0.5% up, fueled by the RBI's largesse of an OMO, an open market operation of 80,000 crores, so more liquidity coming in there. But the stock that is completely in focus is Tata Consumer. I mean, what a move on a stock that doesn't really move that much. If you pull up the 1 year chart, you'll see what I mean. About 7% up this morning. Tata Consumer is buzzing because of a Goldman Sachs note that says that we will see an inflection point as far as profitability is concerned. Look at it, down about 5% in the last 12 months on average, up about 7% today. So it's having a good day. Quess Corp is the other one that I want to mark out. The management change, not a management change, but a clarity of what the demerged entity's leadership team looks like is something that the street is liking. It's come off its high points though, and so is CSB Bank. CSB Bank was on our watch list this morning, and that's doing pretty well with its bump up of its gold loan portfolio. But tariffs is what is in focus as well. What is going to be the impact on India? The Trump administration is getting ready for reciprocal tariffs. They've talked about that plan non-stop while we're waiting to understand the details of what really is the United States plan. Mihika is speaking to us now about what the impact could be for India.
Yeah. Well, the first set of reciprocal tariffs are set to be announced today, April 2nd, and there are several, sectors at risk. Now, first we need to understand India and US's trade relations. US is one of India's largest trading partners, a history of over 25 years. India's exports to the US also reached $81 billion in 2024 and it accounted for 17.7% of India's total exports in FY24. And lastly, India does have a trade surplus with the US. Now, in terms of the tariff differential, we do charge more tariffs on the US. If I could just get the table there, India's tariff on US imports are the weighted average stands at 12%, whereas the US on Indian imports is at 3%. The tariff differential comes up to 9%. Now, if the tariffs are imposed on a country level basis, at an expected tariff of 10% could lead to a potential export loss for India at $6 billion. This is 0.16% of our GDP. A 20% tariff could lead to a potential export loss of $31 billion, which is 2.1% of our GDP. So what can India do on a national-wise level to lower the impact? One is increase the oil and natural gas imports from the US. They could also increase the purchases of defense equipment and reduce tariffs on certain agricultural and food commodities. And lastly, lower tariffs on foreign EVs, for example, letting a Tesla inside the Indian market. Now, if the tariffs are exposed on a sector-wise level, there are 4 sectors that have a high tariff differential when it comes to the US. Animal products, footwear, transportation and chemicals. The tariff differential stands between 10 to 30%, the highest for animal products. But this may not mean that the value of exports is higher. So based on data of tariff differentials, export value as well as the US export value, we have the most vulnerable sectors coming into the picture. We have the seafood and the iron and steel, the nuclear reactors and machinery for the same, pharma products, gems and jewelry and electric machinery, which are the highest or most vulnerable sectors. Differential ranges from anywhere between 6% to 18%. The highest in terms of US exports stands electrical machinery, gems and jewelry and pharma products, the value between $8.9 to $12.6 billion. Now, in terms of, the stocks that could be on the radar and could be impacted in the pharma space, you have something like Lupin, Dr. Reddy's, Zydus Life Sciences, Aurobindo Pharma and Cipla. In the textile space, you have Wellspun Living, Indocount, Trident, Arvind and Gokaldas Exports. And lastly, on the seafood space, you have Apex, Avanti Feeds and Waterbase. But since I've talked about, sector-wise level, we do have Somit joining us to tell us what India could do on a sector-wide basis to help.
Well, yes, there are 5 sectors that we are pointing out here today, and these are some sectors where there could be some negotiations and some settlements that could happen. Firstly, on auto ancillary, India could reduce taxes on auto imports, because specifically for two-wheelers and passenger vehicle, if you look at the differential tax, it stands at around 67.5 percentage points, which means that we are charging this much percentage points higher taxes as compared to the US market, and this higher tariff could impact the higher auto ancillary exports that we are doing into the US market, which stands at close to $2.1 billion US. So to settle this higher auto ancillary exports that India has been doing, there could be a reduction in auto import tax on passenger vehicle and two-wheelers. Second comes the textile and apparel segment. Now, overall, if you look at US, accounts for nearly 28% of India's textile exports. So it's a very important market for India, and even with higher tariffs, India would still be a competitive market when compared to China, because the tariffs on China stands at around 40%. But Indian players could lose market share to other countries like Vietnam and Bangladesh. And there's one way how we can prevent this from happening. Now, the way to mitigate this impact is India could lower the tariffs on US cotton imports, because more than half of the textile imports that we are doing from US is of cotton, US cotton, and by reducing that, the tariff differential could come down significantly. That's what the experts believe, and that is one thing that could aid the entire textile and the apparel market. Third comes the pharma sector. Now, overall pharma and pharma-related equipments imports into India from US stands at around $800 million US. And if you look at the tax differential, it's just 7.6 percentage points. And experts believe that India could do away with this tax, and the entire pharma sector could actually benefit from this. Now, when it comes to the food and the related commodities, now high tariff barriers have been imposed by India to protect the domestic production and the domestic market. However, India can lower the taxes on alcohol, categories of prepared foods and beverages where tax rates are more, or differential tax rates are more than 100 percentage points. And by doing that, they could actually avoid any retaliatory tariff coming in for the other food segments. So that is one thing that India can do. And lastly, when it comes to the electronics segment, here if you look at electronics is India's largest exports to the US market. In fact, over half of the electronics that we are exporting to the US market are mobile phones, and this could be the iPhone production that has recently started in India, and because of this the electronic exports to the US market has increased. Now if you look at the tariff differential, India imposes nearly 15% tariff on assembled phones, while US imposes a 0% tariff. Now if US comes up with a reciprocal tariff, the cost of iPhones or cost of mobile phones in US market would actually increase. So here US could come in and give some settlement or could give some relief by not imposing tariff, given the fact that if they come up with a reciprocal tariff, it will be the US market which will be impacted the most because of this. And even if they come up with a tariff, then also the Indian market won't be impacted much, given the fact that China tariff stands at around 40%, and there is more incentive for Apple to in fact move production to India, given the fact that overall tariffs continue to remain on the lower side.
Okay, Sumit, thanks for that. Thanks for doing this for us, both Sumit and Mika, of course, bringing you that update. And this is something that we'll probably do throughout the day today, because this is arguably the most important thing to focus on. The other sector in focus, though, non-tariff necessarily, not tariffs linked necessarily, is the FMCG sector. BofA downgraded two major players, Nestle and HUL, also cut the target price. Both stocks are under pressure. Mahima Johnson with more from the report. Mahima, good morning.
Good morning, Neeraj. So basically, as you rightly mentioned, BofA has downgraded Nestle to underperform from neutral, and has also cut the target price to 2140 from 2315. What they're saying is that there are modest business trends, and the stock is valued at a rich valuation. Soft demand trends as well as cost pressure and competition is putting pressure on the entire operating environment. Pricing can remain as a key driver for growth from now going forward. They expect volume recovery from here on, but that will be on the back of a lower base as well. Operating margins is capped and can move a tad lower as well going forward, and valuations are elevated in context of growth outlook as well as compared to its peers, is what the brokerage is saying. They've also cut the earnings estimates by 3 to 5%, and overall strategy refresh under a new leadership is something that they're expecting overall to bring in some change. And lastly, they are also saying that for Nestle to pick up, they will have to overall check as to how their portfolio rejig happens, because medium to long term growth depends on how the portfolio rejig entirely happens. So this is the overall view as to what BofA is indicating with respect to Nestle.
Mahima, stay on with us, because it's talking about the consumption space. What is hurting, maybe according to BofA, Nestle and HUL, is definitely not the same case for Tata Consumer. Tata Consumer on fire because Goldman Sachs is really excited about it. Tell us why.
Right. So, as you rightly mentioned, it's a completely opposite commentary coming in for Tata Consumer, because Goldman Sachs has upgraded the counter to buy from a neutral rating and has hiked the target price to 1200 from 1040. What they're saying is that earnings inflection is ahead of its peers right now. In terms of returns, it's poised for a return to strong EPS growth over FY 25 to 27. Innovation and distribution led scale up of growth business is something that will augur growth for the entire counter. And salt, a medium term market share gain and premiumization play is something that will overall benefit the top line going ahead. And growth business, that is innovation and distribution led growth, will happen over FY 25 to 27. So this is the overall reason as to what makes Goldman Sachs bullish on something like a Tata Consumer, and has of course upgraded the stock.
Yep. Mahima, thanks for that update. Now move on to Quess Corp, which is set 15th of April as the record date for demerged companies. Anushi Johnson with more highlights of the demerger and the appointments thereof. Anushi.
Hey, thanks for that, Neeraj. So as you're seeing that Quess Corp has fixed the record date for the demerged company as April 15. So shareholders of Quess Corp will receive shares in Digitide as well as Blue Spring. With Digitide and Blue Spring are expected to commence trading in the next 2 months itself as well. Again, this is subject to the regulatory approvals which are there. Along with this, we are also seeing some management changes and they have announced a new board and leadership teams for these demerged companies which are there. The appointment for the following includes the CEO of Digitide Solutions as well as the new CFO of Digitide Solutions at Gurmeet Chahal and Suraj Prasad. Well, for Blue Spring also we are looking at a new management change over here. If you talk about what's happening with the Quess Corp team, Guru Prasad Srinivasan is the CEO and a member of the founding team at Quess Corp, while Guru Prasad Srinivasan is also the CEO and a member of the founding team over here. So these are the couple of changes that we are happening. 2 months is the expected timeline for these demerged companies to start trading. So this is something that we should be watching out for Quess Corp.
Okay, so Quess Corp in focus as well. But I would say the biggest focus right now the world over is what happens with the tariff wars. Is the first shot fired tomorrow? And Mark Matthews joins us now to speak on it. He's head of research Asia at Julius Baer. Mark, thank you so much for your time. Always a pleasure to have you in conversation with us here at NDTV Profit. How bad do you think it's going to get? And the only precedence we have, honestly, is what we've seen in the last couple of months, where there are announcements, some walk back, then some more announcements. How bad do you think the announcements this time round could be?
Not as bad as the market expects. So I believe there'll be a relief rally. We've known about this for weeks. And just reading the Washington Post and the New York Times, it seems like they've decided on a 20% across the board tariff, which I know sounds very bad, but you have to remember that imported consumer goods are only about 4% of consumer expenditures in the United States. I know that's surprising, but it's true. So they sell a lot of stuff in Walmart, but it actually doesn't add up to be a very big part of the consumer budget. Most of the consumer's budget is in housing, transportation, healthcare, insurance. So I don't.
Oh, we seem to have lost your audio, Mark. Can you hear us? Okay. We seem that line seems to have snapped. So
that's an interesting statistic that he's putting it out. I mean, what if indeed the impact on inflation because of the tariffs is not as much as people are making it out to be for the common American? I mean, sure, person who wants to buy a car, etc., is a separate thing, but otherwise for a household expenditure, just 4%, Tamanna. It's an interesting statistic. I didn't quite think of it that way.
So then, if by that extension of that theory, then they will have to lay off on tariffs on things like pharmaceuticals, because a lot of that then, for example, comes from India. You don't want to get medication more expensive. And that theory also came up when they were talking with the European Union, where they said, okay, we're going to tax French wines. I mean, okay, fine, you buy Californian wines if you're in the US. So that becomes...
That's a valid point. So could we be looking at carve-outs for specific pockets? I mean, anything could happen, right? You and I have both said since morning, who knows what will come out? But could there be carve-outs, even if there are nationwide tariffs? Could there be carve-outs for products like pharmaceuticals out of India? Because it has a big impact on not just the lifestyle, but the lives of people. And could that therefore be something that we need to look forward to?
Yeah, so when he's saying Liberation Day, I mean, this is a wait and watch. This is actually, at the end of the day, it comes down to how much faith his voters have in him. Is Trump doing this as part of a larger plan? Can they understand what's happening or not? Mark is back. Mark, that point got cut off. We lost your audio in the middle there, but you were saying it wouldn't be as bad as people are expecting, and the impact on inflation could be as low as 4%. No, we can't quite hear you. Okay, there seems to be an issue with Mark's line this morning, and I'm not sure if that's a Zoom issue or what it is really. But, that at the end of the day is what it's going to boil down to. Is there a larger plan that Donald Trump has that people are not seeing? I mean, is he going to set the next 4 years with a high inflation, poor economic growth kind of a situation for the United States?
Yeah, it could be really interesting to see that. The other aspect that could come in, Tamanna, as again something that we've been saying, that the retaliatory tariffs, we're talking about the one side right now, which is what the US will do in terms of tariffs. What about the retaliatory tariffs that could come in as well, and what the impact could be on a clutch of themes emanating from different countries, different blocks, the EU, Canada, and I think we'll be watching out for all of these things. Okay, maybe we just wait to connect the audio with Mark Matthews in moments from now. But while we do that and while we wait for that, just a quick check on defense. Big gains over the last 1 month, a dip right now currently ongoing. Anushi has some details about what is it that either brokerages are saying or companies or experts might be saying about whether this dip has to be bought or no, and what are the recent releases from defense names. Anushi.
Okay, so in terms of where the recent releases are concerned, we are looking at the defense exports number, which showed about a 12% growth to 23,622 crore. Now this includes about defense public sector undertakings, seeing about a 43% of a growth in FY25. However, if you look at the private sector exports, they were up around 0.15% only. Now if you just go back last year, we saw about a 33% growth to 21,000 crore of a number last year. Government target remains for a 50,000 crore mark by FY29. So defense exports in focus. Overall defense sector also, we've seen a couple of notes, couple of rally in the last 1 month or so, and why it's been in focus currently.
I am told that Mark Matthew can hear us and we can hear him. Mark, I'm going to do an audio check on air before we try speaking. Can you hear me?
I always could hear you, and I apologize you couldn't hear me. My battery died.
No, that's okay. That's okay. We've got it fixed now. Let's start afresh, because this is a fascinating conversation. You are making a counterpoint that perhaps there's an overreaction from US markets, and that's what global markets are following through as well.
Yes. So I think that the market will rally. I think that the actual impact of this on the consumer is much less than people realize, because the consumer is 70% of the US economy, but imported consumer goods only affect 4% of consumption expenditure. And so it looks like there's a lot of stuff on Walmart shelves, but they actually don't add up to be a huge part of the monthly budget. The monthly budget is dominated by housing, transportation, healthcare, insurance. The other thing I would just say is that you would think intuitively, if, let's say, the price of a pair of Nike shoes is $100, and they slap a 20% tariff on it, then the new price is 120. But it's not, because the tariff is only applied on the actual price of the goods of the shoes. And I can tell you, in the instance of Nike shoes, only 20% of the price of the shoes is the shoe itself, the plastic, the cloth, the shoelaces, etc. 80% is advertising, distribution, that kind of thing. So yeah, I don't think it'll be a big hit on the consumer. It'll be a bigger hit on the manufacturer, because about 60% of manufactured goods in America are imported intermediate goods, like plastics and integrated circuits and steel, that kind of thing. So, but manufacturing is a much smaller part of US GDP, if memory serves me right, 15%, something like that. So yeah, I don't think it'll be as big of a deal as it is expected to be.
Wow. Mark Matthews, so good morning to you, or good afternoon to you rather, where you are. The other question might be this, that if indeed with select nations, let's say, I'm laying out a hypothesis or a possibility, let me put it that way, that the US might say that there is a deal with India and some other countries in the works, and therefore we're not laying out tariffs as we are on some other countries, let's say. Now the details will be sketchy, of course, but if assuming that this is the broader premise, is this something that could work positively for equity markets of those nations, because the uncertainty around tariffs kind of goes away?
Yes, but I don't think we'll know that tomorrow. I think it's pretty obvious they did not have their act together even until a very late stage. They will announce something, and I think it'll be a 20% tariff on all trading partners, but then there'll be lots of finagling back and forth, and so those details will take a lot longer to work out. If I may say, the other thing, though, is that it's very obvious people are starting to worry about the U.S. economy slowing down, and that is not just because of the tariff uncertainty, but the federal government layoffs, which are now approaching 200,000, probably above that by now, and 70% of federal government employees work outside of Washington, D.C., which means many, many people in America know somebody who's been let go and are probably worried that their boss might take a page out of Elon Musk's book. And for every one federal government employee, there's probably 3 people working in the private sector who depend on federal government contracts. So I want to say that we are, obsessing about the tariffs, but the real thing that I think is starting to weigh on sentiment and will probably eventually weigh on the economy in America is the Department of Government Efficiency.
Okay, yeah, and well, that's a key point as well. What happens in that eventuality? So one is tariffs, of course, and you spoke about it right now. The other is what happens if indeed the US economy slows down. Maybe there are rate cuts, but maybe the result of that and otherwise is that there is a bit of a weakness in the dollar index per se over the course of not just the next 1 or 2 months, but let's assume that, as some people are saying, that if there's a structural weakness to the DXY, does that augur well for select growth markets? Could we well see, Mark, a departure from the last 30, 40 years wherein the US market sneezes, but the other equity markets don't catch cold?
No, I mean, if there's a bear market in America, the other ones will not escape that. And you mentioned, the last 30 or 40 years, but you remember 2008, and that was all about very much a localized issue in America, low-quality mortgages. But it didn't stop the Indian stock market from going down 50%, which was, in fact, even more than what the U.S. stock market went down by. Now, there were a lot more foreigners owning Indian stocks in 2008 as a percent of the market than there are today. Nevertheless, if there's a real bear market in the US, the other ones will go down too. They might not go down as much, but if there's just a slow and steady decline of the US market, on the other hand, like we've seen so far this year, where the US market's down around 5% and the rest of the world is largely up, then I think the rest of the world could keep going up. So it depends on the magnitude of that correction in America. And I don't really know what it's going to be, but if it's just a slow and steady decline like we've had so far, it's actually good for the rest of the world.
Mark, I just want to take off on what you said. You could see a recovery because the world view on what will be announced is overtly pessimistic. Now, if that recovery comes in, are we going to see a revert from the US market point of view to your big 7, your tech stocks, your AI story? Or are we going to see a broader based recovery this time round?
Well, I'm looking for a relief rally tomorrow. I'm not really saying that all of a sudden the U.S. is going to turn into a bull market again. I don't think so. But just a 1 or 2 day relief rally, and who knows, maybe it could last a month or so, because I saw a statistic I'll relay to you, which is that going back to World War II, in the years when March returns were down 3% or more for the S&P, April on average rose by 6%. And historically, April has been the second best month for the US market. So maybe the reversal could last on the upside, a couple of weeks. But longer term, I think, something has definitely changed. The uncertainty that the Trump administration has brought in will not go away. There's still going to be a lot of volatility. And by the way, I do think that the likelihood is above 50% that they will attack Iran when the ultimatum expires in around 40 days, which would add another layer of uncertainty to the market.
So let me round off our conversation with a specific India view. You mentioned it fleetingly, Mark, that India has not necessarily followed what is happening in US markets as well. This time round, do you see the valuation concerns that we were seeing a few months ago now ease off after a fair bit of correction in Indian equity as well?
Yes, I think India is back to what I would consider fair value, and I think the earnings will return to double digit next year. So I'd be perfectly happy with India. I think it'll be one of the best markets in the world over the next 12 months.
This was my last question, but I have to follow up on that. India will be one of the best markets in the next 12 months. So where do you see that growth fueling from? Economy, financials, anything more specific you can add, Mark?
Well, I'll just keep it short. Yeah, we like the financials. As you know, they've been private sector banks have been big laggards for the last few years, and I think they're fairly valued, and I think that the RBI seems happy with where loan deposit ratios are now, and the government seems to be wanting to encourage economic growth. So banks are the heart of any economy. I don't see why they shouldn't do well.
Okay, thank you for that, Mark. Always a pleasure speaking with you, Mark Matthew there. And what I liked about that interview, Neeraj, is very definitive. It's not a lot of thoughts clouded in one. He's very clear.
That's Mark Matthews for you.
Next 12 months, India will be one of the best markets. He's liking financials, he's liking private banks. So clear takeaways there.
Yep. And that's what we need. But on that note, it's a wrap on this leg of India Markets Open. If you need definitive answers to your stock queries, stay tuned. You can ask them on Ask Profit coming up next.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Real estate might look to sell their paper business to ITC. So that would be an interesting deal, not too big for ITC, but from AB Real Estate's perspective currently.
On the 20th, he reported this in his segment Heard on the Street, which runs at 2:30 p.m. every day.
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew and with me is...
Mahima Vachrajani.
There you go. And we're here to take you through the next 1 hour of trade. I was just checking if Mahima was paying attention. Of course she was. But let's take you through how the markets are faring right now. And it's chop and churn, and understandably so. It's a cautious start to trade today after yesterday's crack that you saw for the benchmark indices. You're seeing gains of about 0.4%, and a few of the stocks, the heavyweights that were beaten down yesterday, making a bit of a comeback, and we'll talk about that in just a bit. But let's also take a look at the broader markets and see how they're faring. In fact, not too much to speak of. In fact, at this juncture, mid-cap index is absolutely flat. Let's see what the small-cap index is doing, also about 0.1% in the red. So not too much to speak of. Very quickly, let's also take a look at the market breadth and see how it's faring. Yesterday, interestingly, despite the sharp cracks that you saw at the larger end of the spectrum, you saw the market breadth that was favoring the gainers, and today it's more or less even Stevens between the two of them. Take a look at the Nifty Bank though. It's gaining about 0.7% or so, holding out. And let's look at the constituents of the Nifty Bank, because you will see that HDFC Bank is making a bit of a comeback today, is gaining about 1.5%. ICICI Bank also lost quite a bit of ground yesterday, is gaining about 1.3% or so. And I want to talk about CSB Bank, because I'm wondering if any of you are looking at it. It was up about 3%. I'm wondering if it continues to hold out with those gains. It is still holding out with gains of 3%. This is a bank that has come out with its quarterly update. It has seen loan growth of as much as 30%, 35% odd in its gold loan portfolio, 24% increase in deposit growth, and it's a good update. A few other stocks, of course. Let's focus on a few individual names.
Right, a lot of consumer names also buzzing today, but
Consumer.
on the opposite ends, yes, Tata Consumer is up almost 7%, and this is after Goldman Sachs has upgraded it to outperform from a neutral rating. The stock is up 7% as we speak. But some counters that are not doing well is HUL and Nestle also, because BofA has downgraded both of these counters. Both stocks under pressure. HUL down by about 1%, Nestle also down by about 3%. There's also counters like Gujarat Alkalis, which is doing well. It's up 9%. TARC Limited is up around 5%. There's Lloyds Metals, Aegis Logistics, Brightcom Group. Also, all of these counters buzzing. Some counters that are although under pressure are something like a Central Bank of India. It's down by about 10%, and I believe it's locked in lower circuit. No, it's not locked in lower circuit, but it's down by about 10%. There's Punjab and Sindh Bank, there's Jayaprakash Associates, Kesoram again under pressure. There's Blue Jet, there's Godfrey Phillips that is under pressure. Godfrey Phillips has had a significant run up, but after it lost its momentum, it's been consistently down since then, and we're seeing that pressure on the counter. It's down by about 5% odd. There's something like Bharat Electronics also, which is not doing well. Ami Organics, RBL Bank, Bajaj Holdings, all of these counters under pressure. So these are some of the counters that are buzzing in trade today.
Okay, let's get our experts on board for the morning. We've got Rajesh Agarwal, Head of Research at Om Capital, as well as Vaishali Parekh, who's Vice President Technical Research at Prabhudas Leeladhar. Thanks so much to the two of you for joining in this morning, and always a pleasure having you on the program. Let me start with a question on Gensol Engineering, and this is a question coming in from Saudi Arabia. Balaji's got this question. All right. So he's bought at levels of 355, so elevated levels, and he's wondering what to do because he's seen considerable erosion of capital. Rajesh, a few negative updates coming in from Gensol Engineering. Would you hold on to this, or would you book out and move to something else?
Good morning, Alex, Mahima, Vaishali. As far as Gensol is concerned, I think one should try to get out, but you're not getting an opportunity because it's in a down circuit from last so many days because of the fact that it has been downgraded on the debt part. Their subsidiary, Blue Smart, is also not doing that great. They're burning cash like anything. And there are a whole lot of stories going around. It's better to get out of these companies. This is the reasons we always advocate going for a fundamental strong company, because when it starts falling, you don't get an exit. My advice would be try to exit as soon as possible. When you get a chance, you get out.
Right, get out from Gensol Engineering is the view coming in on the counter. We have our first caller for the day who's calling in from Dubai. Amit, a very good morning to you. How can we help you?
Good morning. Right, I love your show, guys.
So I have a very simple query, right?
Yeah.
So much going around with Trump tariffs and stuff like that.
Right.
I made a small cap call in a company called RK Forgings.
Got it.
RK Forgings has significant exposure, not just in India, but outside as well.
Right.
Plus the fact that it is a small cap and we know what has happened to small caps. I have a significant holding here in this company, and I thought that it would be worthwhile to see what do I do with this company. Do I hold it for the long term, or do I just let this one go and just move on?
Okay.
So I like to know the sector and the possible impact that we foresee.
Got it. Amit, when you say significant, what percentage of your portfolio is RK Forging right now? And also, thank you so much for giving us that compliment.
No, it's not that much. I would probably say about 8% exposure of my portfolio. So it's still quite large.
Got
but
it.
yeah, like I said, if I like to know what to do. Yeah.
Got it. And given a chance, you would want to hold this from a longer term perspective, right?
Yes, absolutely. In fact, yeah, I would like to hold on for a long term. Yeah.
Okay, got your point. I'll take this up with Rajesh. Rajesh, what's your view with respect to RK Forgings and the entire space?
See, the company is doing very good, I would say. It's a Calcutta-based company and they're doing fundamentally very well. Last few quarters, the numbers have been very strong. It's just because of the Trump factor that things have come under pressure, and I think this pressure is going to continue for some more time. But going forward, if I'm thinking of holding this stock for maybe a period of 12 to 18 months, I think if it falls to around 700 odd rupees, that would be a good levels to buy. At this point of time, it's a hold from our side.
It's a hold on RK Forgings, even though you've lost a little bit of ground, Amit. Hope that clarifies your question. SEPC, Shriram EPC is the name of the counter that we're talking about. Not a very large company, 2,260 crore market capitalization at this juncture. Ramesh from Hyderabad wants to know, and this one's for you, Vaishali. If you have a view, he's bought at levels of 33. The stock is currently at 14.4, and he's looking for advice as to what to do. Should he book out, sell and book losses, or hold for a year?
Very good morning, all of you. I think SEPC can be held because, technically it has shown a good corrective move from the recent high of 25, and now it showed signs of bottoming out of 13. So now it's in the process of recovery. So I would say, one can average it with 13 rupees as stop loss, and that will get the rate, his buy price also better, and one can have a relook at 2022. These are the levels which will show good resistance. So maybe the cost would come down and we can have a relook. It's a sign of reversal from here on.
Okay. All right. It's a sign of reversal on SEPC despite the kind of erosion that you've seen in your capital. Hope that answers your question. Sanjay is calling us from New Delhi. Sanjay ji, namaskar. How can we help you today?
Yeah, namaskar. I am having an electro steel casting 10,000 shares at the rate of 104.
Okay.
And I am due for 3 months.
104. Okay. So can I assume that you bought it not too long back?
Recently.
Recently.
Yes,
and you want a 1 year view. I'm just wondering why you bought into this counter, Sanjay. Is it because you saw the price action? It looked attractive to you?
Yes. It has been corrected quite long.
Yeah.
And I find yes, it would bounce from 104. So 118 would be my target, and recently purchases this quantity.
Got it. Okay. Vaishali, so it's a tactical play, and he's bought a considerable quantity as well, 10,000 shares at 104. The price erosion from that point is not very significant. What would you say is the upside potential? His target, as he pointed out, 118. Is that possible?
That is quite possible because actually the stock is just consolidating. I mean, right now there is no trend. There is no trend formation. It is just consolidating between 90 and 100. So let's see once the stock moves above. Actually, the near-term resistance comes at 108 to be precise. So once we see a clarity, the stock surging above 108, 110, this can go towards 120 also. So 90 should be the stop loss, and wait for this to bounce back and see how it goes.
All right, so that's the view with respect to electro-steel. That's how you pronounce it?
Electro-steel casting.
Electro-steel casting, okay. Yeah. All right, our next query is on Yes Bank. Karthikeyan from Coimbatore is holding 1 lakh shares bought at 10.85 a piece. So he's sitting on a significant profits of over 6 lakh rupees, and he wants a view as to what should be the next course of action for him. I'll come to you on this one, Rajesh. What's the view like for something like a Yes Bank?
See, as far as the numbers are concerned, we have seen the numbers improving quarter on quarter from the last few quarters. Things have been taken care of. Asset quality has started improving. The bank has good number of branches, but the legacy issues is still there. And since you have a considerable quantity, I would say, although I am a fundamental analyst, but still I would say put a stop loss to that and book partial profit, so that at least if it goes wrong, though you are not in a loss. But for a long term, I think things are likely to improve from here. And we personally have a target of 20 to 23 odd rupees. But I would say just be careful because you have a very large quantity in this. And it's a high risk, high return sort of stock. So take your call.
Let me round out that view, since Rajesh is also suggesting a stop loss. Vaishali, on this trade, if you bought it close to 10 levels, where would you put the stop loss?
Well, I would say currently it is showing signs of, double bottom at 16 rupees. So 16 should be the stop loss. And I share the same view with Rajesh. First resistance comes at around 19, 19.5, and above that 22 would be the next target. So this is the range we would look at, 16 stop loss and look for 19 and 22 target.
Okay, so that's a comprehensive view that you've gotten on Yes Bank. Congratulations on buying when you did. It is a high risk, high return strategy that you have employed. Shweta is calling us from Hyderabad. Good morning, Shweta. How can we help you today?
Hi, Alex. Good morning.
Good morning.
I want to know the best pick among Dixon or Amber Enterprises for long-term view.
Got it. And why? So is this because you like the EPC space?
Yeah. I like this EMS space, and I know they have a huge potential to
EMS,
grow.
Sorry. Yeah, okay, so you like the EMS space, not the EPC space. Apologies, I got my acronyms all confused. Shweta, thanks so much for correcting me. Rajesh, in the EMS space, would you prefer Dixon or Amber?
See, at this point of time, I will avoid both. Okay. Not because the companies are bad or the sector is bad. EMS is looking very good with the government PLI focus on indigenization. I think these stocks are going to do well, but look at the valuation. Almost all of them are trading at 3-digit PE. That's not sustainable as per me. I think a little bit of consolidation is required before somebody takes a call in this. So at this point of time, both are avoid from this side.
All right, so avoid is the view coming on both Dixon as well as Amber from Rajesh. We have our next query from Ravi. He's holding 45 shares of Jyoti Labs at an average price of 514, and he's purchased this 8 months ago. He wants to know whether he should hold or add some more shares at the present lower price or book a loss, and he is prepared to hold for a further period of 1 year. He's a new entrant and is a small investor in the stock market is what he's saying. I'll come to you again, Rajesh, for this one. Jyoti Laboratories is a better, small player in the FMCG space as compared to how large players have been performing. What's the view like? Should he continue to hold for a year?
Yes, of course. One can continue to hold. If funds allow, one can even add at these levels. The company is doing extremely well. It's a small player in FMCG doing that Ujala brand. They have the Ujala brand, which is doing great. One of the market leaders in its segment. I think one should even add at these levels.
Yeah, you can even add Jyoti Lab at the current level on the fundamentals, is what Rajesh says. We're taking the next question from Ahmedabad. Sudhir Pandya is messaging us rather. He's got Cummins at a price of let's see, 2,200. No, he's not given us a buy price. I think that's his quantity, if I'm not mistaken. All right, so he's not given us a buy price, but he's asking whether to hold or sell. Since we don't have a specific price, I think it's a little difficult for you to give a view, Vaishali. But what are the trends that you're noticing both in the short term as well as on the long term charts?
So, Cummins is one of the stocks which has got its long-term, that is the weekly chart, monthly chart, quite intact. I mean, the levels even right now, if I'm seeing the stock from the recent story, from 4,200 levels, we've seen a good correction coming towards 2,600. Now it's showing signs of improvement. I would say one must definitely hold this stock, and let's go step by step from here on. If the market continues to show improvement, this will go towards 3,400 levels. 3,400 would be the resistance. Once we see the stock sustaining above 3,400, this can again retest the 4,200 and perhaps higher. So in my opinion, these are good quality stocks, not to be sold. Continue holding.
Okay, continue holding is the view coming in on Cummins. Our next caller is calling in from Karnataka. Arun, a very good morning to you. How can we help you?
Yeah, very good morning. So my question is on the Shriram Finance. So I'm holding around 47 shares at a buy average price of 673.
Okay.
So my question is whether I have to hold this particular stock or whether I have to rotate to another NBFC sector stock except Bajaj Finance.
Got it. And when did you buy this and what was the thinking behind buying this? Was it from a longer term perspective? Did you see the fundamentals?
Yes, I have seen the fundamental. So what made me buy this stock is because of the rate cut, right? So we have the rate cut coming in April 9th.
Right.
So based on that, I already have allocation in Bajaj Finance. So that's why I wanted to understand whether I have to go with another NBFC sector which is technically strong from longer term perspective.
Got it. Rajesh, I'll come to you quickly on this. Should we continue to hold Shriram Finance or shift to another NBFC except for Bajaj Finance is what he's saying?
See, the entire NBFC space is looking good because of the fact that when we talk of CapEx and other things going ahead, financials are going to do well. Out of which Shriram Finance is a good company, financing to trucks and all, and the segment is doing very well. Apart from this, if you want to have some exposure, there are very good names like Bajaj Finserv. It's not Bajaj Finance, Bajaj Finserv, Poonawalla FinCorp and Geo Finance. These three have corrected quite a lot from their recent high, despite the fact that the numbers have been pretty good. In case of Poonawalla, last quarter numbers were bad because of provisioning and all. Otherwise, businesses are doing very well. You can have exposure in these companies if you like.
Okay. All right. So comprehensive view on the financial space as well. IOB also from the financial space under a little bit of pressure today. Of course, it's off the low point of the day. It was down about 3 to 4% earlier on in the session, but trading at 37 rupees or thereabouts. Vineet from Coimbatore is asking about the near-term targets as well as the stop loss. If you are to buy at this juncture, first of all, is this the right moment to buy? Vaishali, on the charts, under a little bit of pressure today, but would you buy?
I would say so because even on the weekly chart, it has seen a massive correction and right now it's at a support at a crucial moving average. So I would say keep a stop loss of 34, buy, go all out. And I think this can give a good bounce back towards 40, 42 for now. So yes, I think deep oversold and go for it.
So that's the view coming in on IOB. Our next counter is Suzlon Energy. Ramesh is holding 400 odd shares bought at 57 rupees a piece, and he wants to know and wants to have an outlook with respect to Suzlon for the next 2 to 3 years. Rajesh, I'll come to you. What are your views with respect to Suzlon Energy?
A strong company in renewable space, having very large capacity, reduced debt. In fact, after their fundraising and all, it's almost debt free. But despite that, I think the valuation are on a higher side. At around 58, 59 odd rupees, I would say try to book profits.
Okay, all right. So book would you say, and just a quick follow-up to that, would you say that the cancellation of those projects to the extent of 300 megawatts is a big negative, or is it par for the course, considering the size of their order book, Rajesh?
Considering the size, 300 megawatts is not that big, I would say, because they have a very large order book, but still on the valuation parameters, we are a little concerned. And there are better plays in renewable energy. Maybe a Tata Power would be a better play.
Okay, all right. So Tata Power is the better play in the renewable space on the fundamentals. Keep that on your radar. Shiva is calling us from Andhra Pradesh. Good morning, Shiva. How can we help you today?
Good morning, sir. Myself, Shiva, and I want to know the VB target. And
sorry, I'm losing your line, Shiva. If you can step out into the open, you want to know about, yeah, it's not very clear. So just step out if you can into the open. Varun Beverages is what you want to know about, right?
What is the current target of Varun Beverages, and is there any impact on tariffs of Trump is announcing today?
Okay. What is the time frame that you have? You bought at levels of 530. Do you have a long-term view or a short-term view?
It's short-term view.
Got it. Okay. So I don't think that there's going to be any implication on tariffs, because this is largely a company that deals with the Indian consumer, and so therefore I don't think that there's going to be too much in the way of beverages that is going to be impacted. But on the technical, since you have a question on the short term, let me go to Vaishali on this. 530 is a buy price. What are the levels to watch out for in the near term?
I would say 515 acts as a support, below which it would get a bit corrective. So if I keep a stop loss of 515, and the trading target would be at around 560 to 580.
So that's the view with respect to where Varun Beverages is concerned. Our next question is from Nimish Nair, who's writing in from Saudi Arabia. He wants to have a view on HAL, and his time horizon is, I believe, from a longer term perspective. So Rajesh, I'll come to you. What's your view with respect to something like an HAL after the order wins that we've seen yesterday? Do you think that it's a right buy right now?
See, one can hold and even buy for a long-term horizon. The defense as a space is looking good. HL has got a good order book. There were concerns about execution sometimes back because of some somebody from the army saying that execution is not taking place in a right time, I would say. But still, going by the order book and the kind of execution access they have, the kind of the technology they have, I think HL is a good buy for defense. Not only HL, but even BDL can be bought at these levels.
Okay, so one of our callers, Raghuvendra, is calling us from Karnataka. Raghu, we just spoke about Jyoti Labs. In fact, we've got, if I remember correctly, Rajesh, correct me if I'm wrong, you said that you can even buy at these levels, right?
Yes, of course.
Okay,
yes,
okay.
okay.
I'm glad that my memory is still intact. We've got Ramesh Dasi, who's writing in from Vijayawada, and he wants to know about Wari Energy and 2,226. Let's look at this. Yeah, so 2,266 is the average buy price. He's got 54 shares, and he's wondering whether to hold for a 3-month time frame. The stock is under pressure today. If I remember correctly, this is on account of an initiation of coverage by whom?
This was for
Wari Energy. Bernstein,
yeah.
with a negative outlook, right? With an underperform rating. All right, so I'm testing Mahima's memory as well.
It's not
luckily, luckily, Namrata, who's speaking in my ear, has reminded me that this is Bernstein. All right, so let me go across to Vaishali on the charts. It's looking a little negative right now, 2.8% or thereabouts. Would you hold on if you bought at levels of 2,266 for a period of 3 months?
I would think so, because there's nothing wrong with the trend. But yet, if one has to keep stop loss, one should keep a stop loss at 2250. And once the stock goes about 2,500 levels, you can see a good up move coming perhaps up to 3,200 levels also. So it is a very favorable risk reward. And there is no negation in the trend. So in my opinion, one should hold.
This is the view coming in on Wari Energies. Our next caller, Srujana, is calling in from Hyderabad. A very good morning to you, Srujana. How can we help you?
Yes, so I'm holding CDSL stock for an average of 1488.
Okay.
So almost like I'm holding 25 stocks since a month or so.
Okay.
So now currently it is under minus 18%. So my query here is, do I have to hold on to the stock, or I'm into minus 6750? So is it the best time to...
Got it. So when you bought this particular counter, Srujana, did you see the charts and buy it?
Yes.
Okay, so you want a technical view on this. Vaishali, I'll come to you. CDSL, how is it faring on the charts?
No, I think the stock, even for long-term perspective, should be held on. And at every dip, it is a stock to be accumulated. And right now, technically, it is very well placed. I think buy at every dip, because once you see the stock into a trend, you will get very good returns, because the stock is corrected right from 2000 levels. And now, right now, we are seeing a good bottoming out phase. So I guess one should average at these levels.
Okay, Abhishek has got the next question and he's asking about Ambuja Cement. By the way, the cement pack as a whole has been in focus because there are few brokerages that are now turning positive on these companies, specifically on Ambuja though, trading at 533 or thereabouts. Vaishali, would you initiate right now? Would you buy?
So on the whole, cement sector is doing very well, and I think even if we talk about Ambuja, this stock also is quite likely to show good returns. Technically, if I were to say, it's forming higher bottom formation and it's above all cluster of moving averages, so which shows the inherent strength. So I would say for a longer term perspective, 500 should be the stop loss and look for a target of 600 to 620 from here on.
Okay. All right, so that's the view on Ambuja Cement. Standard disclaimer here, Ambuja Cement is part of the Adani Group and so is NDTV Profit, which as you know is part of the NDTV Group. A stock that is no longer part of the Adani Group but still has the name Adani Wilmar is the counter that we're talking about next. And Jagar Thakur from Mumbai has bought 3,800 shares at a price of 395. He's been holding for the last 1.5 years. And he's incurring a loss. So he's wondering whether to hold or exit. Rajesh, on the fundamentals, what's the view?
See, the numbers have been pretty bad from the last few quarters, but after the kind of restructuring and Adani is getting out of this, I think there might be some amount of move coming in after the next 2-3 quarter numbers. So at this point of time, it's a hold because almost all the negatives have been discounted. And the worst case scenario, which we believe is going down to around 240 to 40 odd levels, not less than that, unless and until market turns very bad. So at this point of time, it's a hold. Try to exit around 300.
All right, so that's the view coming in on Adani Wilmar. With that, it's time to slip into a short break, but stay tuned. We'll be right back taking all your queries on the other side.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Welcome back. You're watching Ask Profit on NDTV Profit, and this show gets you answers to all of your stock-related questions. So that number on the screen above me is where you can message us, and the number right there is where you can call us. Sudhakar has used that number to call us, and he's calling us from Hyderabad. Good morning, Sudhakar. How can we help you today?
Good morning to all, sir.
Please
Very
go ahead.
nice talking to you.
It's my
Sir,
pleasure.
I have got solar industries at 11,300, sir.
Okay.
Looking into the technicals, I have bought it because all the technical things are good.
Yes.
So can I continue to hold it, or shall I add some more? I wanted to know, and what is the stop loss I should put it, sir?
Okay. Since this is a high ticket price, how many shares can you buy at this juncture? How much can you deploy?
I would like to buy another 5 to 6 numbers. I'm already holding 6 numbers.
Yes.
I would like to hold another 6.
Okay. And what is the time frame that you have in mind, Sudhakar?
Sir, I was from the explosive industry. I was basically, because I have got a good confidence on this is the number one industrial explosives industry. So I have got good confidence on this. This has got exports also a lot of. That's why I am asking you, sir.
Okay. So that is fine, but how long can you hold it for, Sudhakar?
I can hold it for another 1 year, sir. It is in the defense. I can hold it for another 1 year.
Got it. Okay. So Vaishali, on the charts, then he's bought not too far away from the current market price, 11,300. Would you hold for a period of a year? And what levels would you look for?
I would say so, of course, because technically, I mean, the stock has shown signs of bottoming out at around 8,500, and from there, one-way rally we have seen in this stock. So a little bit of technical consolidation to retracement is not ruled out. So I guess now the near-term support would come at 10,500 if that is what he was asking. And once the stock moves past 11,500, look for a target of 13,000. So this is the level that I would be looking at. 13,000 would be a hurdle. Probably book partial profit over there and then have a relook. If it's surging high, it can go towards 14,000 as well. So yes, the trend is intact. Even the longer period, it shows a lot of strength.
Okay. And if you were to buy, would you deploy a further? So I think he's looking to double his holding. Would you do so?
So let some correction take place. As I said, 10,500, 10,300 is a good level to add more.
I also want to draw your attention, by the way, to the markets. While we've been speaking, the markets have moved higher, and you have the benchmark Nifty 50 that is now 0.6% higher. IT and banking bouncing back from yesterday's declines. I wonder if the broader market's also doing well. Yeah, in fact, they are. You have the mid-cap index that's now up as much as 0.7%, and you have the small cap index that's turned. It is up as much as 0.5%. A lot of volatility. Bear that in mind, and don't judge anything based on this. You're seeing a lot of green on the screen right now, but remember, yesterday was a relatively down day, so you're seeing gains right now. Perhaps a reflection of that. Any quick view on the benchmark level, Vaishali, at this juncture? Some momentum. Would you bet on that, or would you hold your horses?
So, well, I would go right now. Nifty is quite in a yo-yo. So, yes, 22,800 is the technical support, and we could keep a range of 23,500 as a near-term hurdle. And once and it's an event that we are going to go through. So, I would say that stock-specific would be better. But if one has to really trade on Nifty, 22,800 is the stop loss, and 23,500 to 23,600 could be the trigger.
Okay, so I think approach with caution is the view that every technical analyst is giving right now. Every analyst is giving, in fact. So we'll have to wait and watch out for as to how this entire tariff play turns out, and of course, like Vaishali mentioned, it has to be stock specific. So caution is the approach for the markets. But our next viewer is asking about Sonata Software. Rana is holding about 60 odd shares bought at 414 a piece, and he wants a view from a longer term perspective. Rajesh, I'll come to you on this one. If you have a view, what's the view like on something like a Sonata Software?
So one can continue to hold, although there are better names being available at a better valuation, especially in the large cap names. But still, going by the product profile and the valuation at this point of time, after the kind of correction it has witnessed, I think one can continue to hold for a target of 380, 390 in the next 1 quarter or so.
So hold is the view coming in on Sonata Software. Rajesh, did you also mention what are the better counters as compared to something like a Sonata Software that you find attractive?
See, after the tariff thing and Trump thing, I think IT is under pressure and it's going to be under pressure for some more time. And one should not expect the kind of return they have given in the past. But still, purely on valuation parameters, I find large cap names like Infosys or TCS, where the balance sheet is very strong, their order book is still strong, they have good AI and cloud things under their belts, especially Infosys, that's doing very good. So I think if minimum target of 1800 can be quite possible in the next 18 to 24 months. I would like to reiterate that in the short term there are concerns because of Trump, not because of the company. But one should have a long-term horizon, and if somebody is looking for some lower risk kind of stocks, Infosys would be a better choice.
Okay. All right. So that's the comprehensive view on the IT space. Suresh is calling us from Vellore. Suresh, good morning. Are you a doctor by any chance?
Yes, sir. I bought it for 200 rupees at NIT Limited, sir.
Yeah, okay. All right.
500 numbers, I hold it, sir.
Okay. And what is your holding period?
When will hold it at 200 rupees, sir?
Got it. I understood. All right. So, and are you a long-term investor or short-term view is what you're looking for?
Short term, sir. Short term investor, sir.
Short term. All right. All right. So, Vaishali, 200 is the buy price and 500 shares. Would you hold for the short term?
I think I now may as well wait, because if you've held on for so long, keep a stop loss of 110. Observe a range of 140. Above 140, look for a target of 160, 170. That is where would be the major resistance. So look at those levels.
Okay, so that's the view coming in on NIIT. Our next counter is Oil India, and Yash from Pune is holding 50 shares at the levels of 663, and he wants to know whether he should sell, average or hold. Vaishali, I'll stick with you for this one. What's the view like on the charts for Oil India?
I think this too should give good returns from here on, because like many stocks, this too has seen massive correction right from 700 levels to now at 385. So average out at these levels and look for at least a bounce back up to 500. And after that, we can see higher levels as well.
Okay, so that's the view with that's the view with respect to Oil India. Our next caller is calling in from Visakhapatnam. Harish is calling in. Harish, a very good morning to you. I believe you have a query on Kalyan Jewellers.
Yes, madam.
Go ahead with your query, Harish.
Good morning, madam.
Good morning.
I am having 570 shares of Kalyan Jewellers at the rate of 430.
Okay.
Can I hold it for a long time, madam?
Okay, got your question, Harish. I'll take this up with Rajesh. Rajesh, Kalyan Jewellers, with everything that's happened, in the past few months, do you still think that he should continue to hold? And is there an upside momentum that you see in the stock going forward?
Keep gold at 90,000, 91,000 plus is good news for all the jewelry stocks. But as far as Kalyan is concerned, I think whatever has happened, as you mentioned in the last few months, I think one should try to exit the stock, because you never know what comes next. So it's better to be with quality names. Go for the market leader Titan if you want to be in jewelry space.
Rajesh, I'm just wondering, if gold is at 91,000 and someone's asking you to buy jewelry, would you?
Yeah. Personally, I would not buy even in 9,000, so forget about 91,000. I'm pure equity person.
Okay, fair point. All right, well.
Good question for Vaishali, I think.
Vaishali, you want to answer that?
Well, I would not buy at this level. I would definitely wait for a dip.
There you go. All right, so let's see what the volumes are like for these jewelry companies. That we will know soon enough with the business updates coming through. Not too far from now. Let's talk about the next one. We've got Vodafone Idea, and of course, you mentioned, one of you mentioned, I can't remember, I think Rajesh, you mentioned that Yes Bank was a high risk, high reward strategy, and Vodafone, I think, falls in that same bucket based on what we saw earlier in the week, right, with the government converting equity. It's been pointed out that for minority shareholders, this is not necessarily a great idea because you're seeing dilution of capital, but at least from the prospects of borrowing more, it opens the doors in certain respects which were closed. So what are the prospects so Karan Gupta wants to know, whether you should buy for a period of 12 months at least, what would you say?
It's for me?
Yes, Rajesh, for you.
See, again, the same logic as you said of Yes Bank applies. High risk, high return. The lower range becomes 6 rupees, the higher range becomes 10 to 12 rupees. That's the range for Vodafone. After government stake coming to 49%, it has become a quasi-government company, I would say, with the only leeway they're going to have is raising fund in the near future if they require. But the EGR dues and other dues still loom large on the company. The subscriber addition numbers are not that great. Even the RPUs, when you compare to the other two players, is on a very lower scale. I would say it's around 150, 140, 150 odd rupees. And if you talk of 5G rollout and all, they are still in a very nascent stage, I would say. They are trying to do that, but that would take much of a time. So on the higher side, I would say 10 would be the maximum level and 6 would be the lower level. That's the range we are following.
Okay, all right. So that's the view on Vodafone Idea. Watch out for any updates that you get on borrowing as well as the rollout of 5G. Keep that in mind as well. Avi is calling us from Kolkata. Good morning, Avi. How can we help you today?
Hi, good morning to the NDTV family. And currently I am holding Northern Arc Capital Limited 10,000 quantity at 173. So I just like to know, like, with a 1 year, 2 year perspective, how much could I look forward to?
Okay. Can I, so 173, and you bought very significant quantity. When did you buy this?
I bought it like, maybe starting of this month.
So not too long back. And what is the thesis that you had? I'm just curious about it because this is a space, the NBFC lending space has been under a tad bit of pressure in the category of loans that Northern Arc serves. So what was the thesis that you had, Avi?
The thing is, actually, I've researched about this company a bit, whatever I could get. And what I could say, like this particular company is very diversified and it doesn't have all the eggs in one basket, like the MFI portfolio is only maybe not much compared to other NBFCs in that space. And the last time it was, I think probably when it was, it launched its IPO, and after IPO it was priced at 350. And since then it had fallen like significantly, and whenever there was a, like massive sell-off like yesterday, the maximum it fell to like, between maybe up to like 167. So I just felt probably it has bottomed out from my perspective. And I just thought like it's probably a safe bet, so because I've lost a bit of money, like before I had some shares like HUL and Bajaj Housing Finance Limited, which I had bought at higher levels compared to what they are priced in today.
Yeah.
So I just thought the quickest way to recover that money and as well as profit from this level, I just thought like this company is probably good in that way.
Got it. I understood the thinking behind it. Let me see if Rajesh agrees with your thinking. Rajesh, Northern Arc, have you studied the book? And if so, is his reckoning right about the diversification of the book? And would you hold 173? Has it formed a base valuation wise?
See, there are two things what I noticed in his question. One, he's talking about levels 167, trying to recover profits just to negate the loss which he has made in Bajaj Housing Finance and other companies. That's wrong logic, I would say. Because recovering loss of one in the other counter in a very short span of time in market is very risky. It may happen. I don't say it doesn't happen, but it's very risky to take a call like this. If you are following technicals, follow technicals purely, keep a stop loss, resistance levels, and try to maintain that. Or if you are talking about fundamentals, then take a long call and do that. As far as Northern Arc Capital, yes, it's a good NBFC, no doubt on that. The gentleman has done quite a good research. MFI exposure is very low, and it has fallen quite a lot from its listing price. But at this point of time, when the entire NBFC space has taken quite a beating, there are better names. As I mentioned earlier, Bajaj Finserv and Geo Financial, Poonawalla, they are better names than Northern Arc is. And he has got a considerable quantity of 10,000 odd share. What I would suggest is reduce your quantity into this. Since you have conviction in Northern Arc, continue with some amount in Northern Arc also. Reduce your size, move some amount of capital to other good names.
Okay, so that's the view with respect to where Northern Arc is concerned. We have our next caller, Ramu Murthy is calling in from Chennai. A very good morning to you, Ramu Murthy. How can we help you?
Good morning. First of all, I'm a big fan of your show.
Thank you so much. Thank you so much, Ramu Murthy.
Thank you. My query is that I have got the Tata Electric shares, 10 shares at 855.
Okay.
And I'm now carrying a loss of about 37,000. So, should I hold or that is my query.
Okay.
I have a horizon for 1 year. I can hold it for 1 or 2 years also. That's not a problem.
Okay, got your query, Ramu Murthy. I'll take this up with Rajesh again. Rajesh, what's your view with respect to Tata Elxsi?
Strong company in animation and all doing very well. I think just because of market condition, it has fallen quite a lot. Maybe a target of 6,000 odd rupees in the next 12 months is quite possible belonging to Tata Group. Good order book, one can continue to hold.
You continue to hold Tata Elxsi. Hope that answers your question, Ramurthy. And thanks so much for your kind wishes. It makes our day. We've got RailTel next, and a few of these rail companies have made a comeback after testing lows, and we've got Subramaniam who's writing in, who's bought at levels of 525. He's got a 6 to 12 month view, and he's wondering whether to hold on. He's lost quite a considerable amount of capital. What's the view on the charts though, Vaishali?
I would say RailTel too can be held on because rail stocks will do well eventually. So I would say keep a stop loss now at 280 levels because the stock is also showing signs of bottoming out. And so 280 should be the stop loss and keep a range of 340. Watch this level clearly. Once this moves, the stock moves about 340 decisively, you can look for a target of around 400 to start with. So I think just hold on.
Hold is the view coming in on RailTel from Vaishali. Aniket from Karnataka is writing in, and he's invested in Carousel at the rate of 558, and he wants to know the future growth of this particular stock. He's holding 15 shares. Rajesh, I'll come to you. What's the view like on Carousel?
So let's hold on. So you can continue to hold that with the and one not will follow. I think we're finding a little bit of trouble with your audio. Vaishali, while we try and fix that, Vaishali, Carousel at 637, it's up as much as 24%. The buy price, I can't remember exactly. What was the buy price?
558.
558.
558
was a buy price. So what would you do with that?
I think the stock is already trending, so I think hold on. This can go further high towards 750 to 780. That would be the level to watch for and book profit there.
Okay. We've got a caller from Mumbai itself. Rajesh is calling us. Good morning, Rajesh. How can we help you today?
Yeah, hi. I had a query on, I'm holding Maruti shares for quite a while.
Okay.
I wanted to know if I can add some more. I bought it at really low levels. I'm holding since 2005 actually.
Wow. Okay. Rajesh, can you tell me the story as to how you bought this? And 200 shares that you bought at 400 rupees.
Yes,
wow.
please.
But tell me about how, so you weren't tempted to sell in between?
No, I preferred to buy and forget. It was such a good company that I preferred to have that option of buying it and just letting it grow on its own.
And you have more stocks that you bought apart from Maruti Suzuki way back in 2005?
Yeah. I have a large portfolio.
Okay, can you tell me some of the other stocks that you've held for more than a couple of decades?
I'm holding Cholamandalam and Kotak Bank as well.
Okay, for the long term. And so, if you don't mind my asking, sir, Maruti Suzuki, and you're already up in the green quite considerably. So, is this less than 10% of your portfolio?
Yes, definitely. 5%. It will be lower than 5%.
Lower than 5%. All right. So, specific question on Maruti Suzuki. I'm going to take it with Rajesh as well. What's the view? The buy price is 400, and I think that we've spoken about buying Maruti Suzuki in 2005 before, but I guess it's a no-brainer. The question is, should you add more at this juncture?
See, it's like still khatam hi nahi honda hai. So it's going great and still going great. The fundamentals are not deteriorating. It's going great. New launches have been taken well. They moved into a EV space too. And at this point of time, it's an ad from our side. I won't say continue to hold because you're continuing to hold. And unless there is some sort of requirement of fund, you need not sell. Continue to hold. Funds allow, you can even add at this point of time.
Okay. All right. But quick question then. Maruti Suzuki, of course, the volume data has come through for the month of March, and seemingly quite a few of these automakers have produced, and the wholesale data has come in ahead of expectations. There is a view in the newsroom from our researcher that some of that could be because they're pushing inventory ahead of the end of the financial year, so don't read too much into that. But would you prefer Maruti over other players as well, something like a Mahindra and Mahindra, or maybe even in the two-wheeler space, would you deploy there?
See, if I talk of the entire auto space, the first preferred pick in four-wheeler is Maruti, of course, and the second one is Hyundai. Just because of the kind of valuation it's commanding at this point of time and its leadership position in the SUV space with Creta rolling high. And even this month's numbers have been quite encouraging. So Hyundai is one of the picks in four-wheeler. If we talk about two-wheeler, Bajaj Auto would be our preferred pick.
Okay. Let's take our next caller. Ashish is calling us from Jodhpur. Hi Ashish, good morning. And how can we help you today? Ashish, can you hear me? Okay, Ashish can't hear me. Just Dial is the name of the counter that we're taking next. Vasudev wants to know whether it is a good hold. He's bought at levels of 844 and he's looking for the long-term view. Rajesh, on the fundamentals, what's the view?
Just Dial, you said, right?
Yes.
It's an exit from my side. Not doing that great. Numbers have been poor. Just belonging to a Reliance group. That's it. But if you look at the numbers, that's not that encouraging. And these valuations too, I think the valuations are stretched. Try to get out.
Okay, try to get out is the view coming in on Just Dial. Lavish from Indore is writing in. He has a query on Borosil Renewables and he specifically asked me to ask this to you, Rajesh. What's the view like for something like a Borosil Renewable? His time horizon is for 1 year.
It was one of the best companies, renewable space, making glasses and all. And just because of that anti-dumping and all in the last 1 or 1.5 years, I would say the numbers were pretty bad. Bottom line dropped like anything, and that's the reason it fell from 900 odd rupees to almost 500 odd rupees. But at this point of time, at these valuation, I think all the negatives have been discounted. And it can move up to 600 odd rupees in the next 9 to 12 months. So at this point of time, one can continue to hold. And by any chance, due to market condition and all, it falls to around 450 odd levels. One can even add.
Shoaib from Mangalore wants to know whether to buy ITC or rather hold ITC. He's bought at levels of 406, 200 quantity for a period of 2 years. Very close to the current market price. I know what Rajesh is going to say. So Vaishali, on the charts?
Same view. I mean, attractive levels even to add even at these levels. So.
Okay. Okay.
Binu John from Saudi Arabia is writing in. He's holding Motherson at an average price of 126 and 200 is the quantity. And he wants to know what is the overall impact on US tariffs, if any. Rajesh, I'll come to you. What's the view like?
So talking about Motherson wiring or some other Motherson? Wiring, it's one of the biggest companies in wire harnessing. Just because of it has exposure into the US, there might be some amount of problem in the short term. Maybe levels of 45 is quite possible if something very severe happens. Otherwise, at 50 odd levels, it's a buy from our side for a long term horizon. Maybe 12 to 18 months is a decent period to hold.
Okay, all right. So that's a view on Motherson wiring. A lot of these auto anchors have lost value in the recent past because of this USA issue. It's time to hit the rapid fire segment, and this is a time when we throw as many questions as possible at our experts. I'm going to start with East India Hotels. This is a question specifically for you, Rajesh. V. Murli wants to know whether to hold if you bought at levels of 456. What's the view?
Buy.
All right, TCS bought at 3700 a piece. 400 shares is the holding of Shashidhar. What's the view like on the charts, Vaishali?
Very oversold, so buy again.
IDFC. Sorry, and?
Add more.
Add more. Okay. IDFC First Bank's Shivarudraya wants to know about, apologies, whether to hold if you bought at levels of 58 rupees. Rajesh?
Sell.
Okay, Sun Pharma Advance is the counter. Ashok Kumar from Hyderabad is holding 900 odd shares. What's the view like on the charts, Vaishali?
So hold with a stop loss of 135 and look for a target of 200.
Ola Electric bought at levels of 114. Wow. 1,000 shares. Would you hold or exit at this point? Habiba wants to know. Rajesh.
Exit.
Okay, BSE purchased at 4,229 a piece for 2 years. Gul is writing in, should he add more at the current levels, Vaishali?
Not at current levels, at lower levels, at around 5,000 to 4,800.
Okay, Spark bought 2 decades back. 900 shares held. Would you hold or exit? Ashok wants to know. Rajesh?
Hold, even add.
Okay. Manikanta is writing in from Hyderabad for Avanti Feeds. He's bought it at the price levels of 687 and he can hold for 2 years. What's the view like, Rajesh?
It's a hold from a side at this point of time. Try to book profit around 950.
Okay. Vaishali, Action Construction, would you buy, sell or hold? Shankara wants to know.
So Action Construction currently 1263. I would say hold and look for a target of 1,500.
Okay, quickly. Srikanth from Hyderabad is holding Birlasoft since 2021. What's the outlook like, Rajesh?
Hold.
Okay, IRB, would you hold or exit at a price of 56? Vaishali?
Buy at these levels.
Okay, all right. That brings us to the end of the rapid fire segment and indeed this edition of Ask Profit. Thank you so much, Rajesh, Vaishali, for joining in. Always a pleasure having you on the program. Have a great day. All right, that brings us to the end of Ask Profit from Mahima and myself and the team that put the show together. Thanks so much for watching. Do stay tuned. This is NDTV Profit.
He sold most of his stock, 80% as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Real estate might look to sell their paper business to ITC. So that would be an interesting deal, not too big for ITC but from AB Real Estate's perspective currently.
On the 20th, he reported this in his segment Heard on the Street, which runs at 2:30 p.m. every day.
Hello and welcome. You're watching KYC. This is a show where we focus in on a single NSE listed company daily. And today we're going to focus in on Danuka AgriTech. It's a manufacturer of agrochemicals, largely sells products in India and across India. Now, in terms of what are agrochemicals, let's try and break that one down. So, one is, of course, it's a manufacturer, has 4 manufacturing facilities. Agrochemicals are normally herbicides, insecticides or fungicides, and it also deals in plant growth regulators. That's the other piece it deals with, and it has products across the board where plant growth regulators are concerned, whether it's powdered products or whether it's to be sprayed on the plant to ensure that growth is healthy. In terms of revenue mix, and this will give us a good indication as to how the split is, it's a fairly healthy split in that sense, as you can see. Largely between 20 to 35% on each of those. So no real single product taking charge. And in terms of product variety as well, a very, very large variety is what Danuka caters to. 300 plus product registrations is what they have. They have 90 odd products across each of their segments, and their geography that they cater to is pretty much pan-India. It covers all major states and reaches more than 1 crore farmers across India. So clearly a good reach and a large product presence in that sense. Now, in terms of how the supply chain is like, and all the way from manufacturing to sales, you have 4 manufacturing units, one in Dahej where the capacity utilization is low. We'll try and zoom a bit on that particular metric as well. Raw material, some of it is imported from Japan as well as China, as you would well understand. That leaves it open both to supply chain as well as to currency risk. The other piece is where gross margins is concerned. They've done 35 to 40% largely on gross margins, currently trending more towards the 40%. So they're doing 38, 39 kind of 39% kind of gross margins. They have 41 warehouses across India currently, and they distribute their products to 6,500 distributors and over 80,000 retailers. All of those help push their products to over 1 crore farmers that they have tapped into. In terms of recent news, and this one is important because it opens up plenty of opportunities. They've acquired Bayer's key fungicides, and they have the rights now to market some of these fungicides. They have the right to manufacture, sell these ingredients, and currently Bayer manufactures some of these ingredients. Of course, this is maybe a couple of quarters back. They've acquired this now. And how does this aid Danuka? It's going to help Danuka expand globally. Access to over 20 countries now, not just to Bayer's products, but even their own products currently. They're looking at expansion, Latin America, EMEA region, as well as Asia. And India, with regard to some of these new products which Bayer has sold to the company. Danuka's agreement will enhance its market positioning, and on a couple of those products, in fact, Bayer has nearly a 25 to 50% market share as well. It contributes around 220 odd crore to top line for Bayer. This is 2023 calendar year, and therefore in terms of overall top line as well, it contributes decently. It's a decentish kind of acquisition in terms of size. It's expected to boost both top line as well as bottom line. And we will also speak with the management of Danuka AgriTech on KYC today. We'll speak to Mr. M.K. Danuka, who will give us a better perspective on everything that's happening. But first off, let's break the company down. Let's look at what metrics we look at when we're analyzing the company today. We'll look at, of course, the income statement, the cash flow, the balance sheet, as well as the return ratios, all 4 of those parameters. But along with it, we'll look at shareholding, street cred, outlook, and we'll really dive deeper into the valuation picture. The outlook will largely be governed by whatever we've been sifting through in terms of documentation and what management has been guiding for. So we'll look at all of that on the show today. And again, joining me today is Varsha, who will help us break this down. Of course, she tracks pharma as well as chemicals very, very closely and is our go-to on those sectors in any case. So I think we're well taken care of today. But Varsha, let me allow you to start with the income statement. It's a thumbs down on this count. So tell us what's happening here, why the sluggish growth?
So actually, if you see, if I were to talk about the revenue, so let's speak in terms of compounded annual growth rate. So if you see the CAGR, 3-year CAGR for revenue has been 8%, followed by EBITDA 3-year CAGR 7%, and net profit is the compounded annual growth rate is 5%. Now let's see what are the reasons for this. One is they faced challenges due to Nino conditions causing lower rainfall impacting farmers' demand in India. One reason is that, and also we all know what's happening with overall chemical industries that also includes agrochemical. So global demand, if you see for agrochemical, was down due to destocking in US and Brazil, and also there was overcapacity and oversupply in India and China, leading to lower prices of generic molecules. So when the prices of the end product goes down, your realizations goes down, and that affect your overall sales for the company. And they also face challenges due to lower price of generic products and oversupply in the market. So they cater to rather two segments. One is the generic one and the other one is specialty one. So of course there was this pricing war or pricing pressure going on when it comes to generic agrochemicals, and that's what caused them, that was caused the lower growth when it comes to sales. Now for Q3 FY25, if I were to talk about, Q3 is actually crucial when it comes to rabi crops. However, low pest and disease pressure impacted their fungicide sales, and also there was carryover inventory from previous season, which resulted in lower commodity prices. And overall, so this was the reason why the 3-year CAGR numbers for the company were not good. But I also wanted to highlight about the margins front. So if you see in FY20, company had almost 15% of EBITDA margin. Fast forward to FY24, the margin stands at around 19%. Now, the improvement in margin that we are seeing from 15% to 19% is largely driven by their lifeline category, which is a specialty segment which has a higher margin. So overall, Harsh, this is the reason the ongoing pressure when it comes to agrochemicals, which was actually true for every other company present in agrochemical sector.
Correct.
And this is the reason why we are seeing the lower growth and hence thumbs down.
Yeah, and we've seen this even in case in point being UPL, Varsha. And we had a very interesting HSBC note today morning, which suggests that there's going to be a bit of a turnaround. But UPL, the worry was the debt.
Exactly.
Here, therefore, the balance sheet holds the key, because in down cycles, if you are caught with a lot of debt on your balance sheet, you will likely see a headwind with regard to your income statement, because you'll have a large debt and you'll have to service that debt through an interest cost,
exactly,
which will impact your profits. And of course, UPL was in the loss for quite a bit on the back of that. But let's look at the balance sheet, therefore. When we're looking at, in fact, the balance sheet picture, there you go. You're seeing reserves at healthy levels. You're largely seeing the book value to be around the 1250 odd crore number. But the short-term debt is what really is something that we'll have to look at, because there's no long-term debt on the balance sheet, which is very, very good. 57 crore in terms of short-term debt. There's also lease liabilities that I see. That's not exactly debt per se, and therefore wouldn't concern me as much. When you're looking at the other piece in the balance sheet, which somewhat concerns me, it's the trade payables number. The trade payables number has gone up from 150 crore to 200 crore, but at the same time, that is also healthy from a cash flow perspective. Whether this sustains or not is a question, but nothing major or significant per se, because you'll likely see these payables either unwind, or either it means that the company supplying to Danuka are comfortable with the kind of trade payable number over there. There's very low debt per se. It's a 5,800 crore market cap company with just 57 crore of debt, and that too largely to fund the acquisition which they've made. They made a 165 crore acquisition from Bayer. So a lot of this debt is to fund that acquisition. Otherwise too, historically, they've never taken on debt. The debt has never gone above 40 crore in the last 12 years when I'm looking at each of the financial years. So therefore, just goes on to show that they like to keep it light in terms of debt, and therefore the thumbs up on the balance sheet. Varsha, you want to take us through cash flow?
Yes. So we would give a neutral, stand when it comes to cash flow. Now let's just analyze it. So if you see so I'll start with March 21, that is FY21. Therein the cash flow from operating activity was around 231 crores. Fast forward to FY24, it's 134 crores. Now why this gap? One is in FY21 there were no receivables. Very less receivables versus in FY24. If you see the receivables, that is around in FY23 it was 58 crore and in FY24 it was 9 crore. So money was stuck in receivables when it comes to 23 and 24, while in 21 there was no money which was stuck in receivable. Number one. Number two, if you see inventory, so the cash was also stuck in inventory when it comes to March 24, that is 73 crore. Rupees 73 crores is stuck in inventory, while in FY21 if you see only 46 crores were stuck in inventory. So these are the major reasons why you're seeing this gap when it comes to cash flow from operations. Now if I want to talk about cash flow from investing, in FY21 they did a lot of capex, and this is the reason you are seeing 127 crore outgo when it comes to investing activities, and in FY24 there's only 81 crore. And of course their Dahej plant, if you see, they already did a good amount of capex, and now maybe going forward we won't see that much of investing activity unless for Danuka. Of course after a year or two we may see that they may go for future capex when it comes to Dahej and of course the other capex. But now overall if you see, now we won't be seeing any much investing activity that the company would go to. But overall if you see net cash flow, there is only 3 crores of change versus 25 crores of change in FY21 because of that higher investing activity that the company did. So overall I would say a neutral kind of stance that we would give, because Harsh, this is a growth phase company, right? So you need to give a kind of what do you say, that some leeway.
Correct.
That because considering the growth phase that they are gonna invest when it comes to investing activities. So I don't think so that we.
And it's also a tough phase you mentioned, Varsha.
Exactly.
When you spoke about the agrochem sector, when we contextualized it by speaking about UPL, it's also a tough phase, and therefore we'll have to give a little bit of leeway to the company, and we've done that. We've given it a neutral on the cash flow count. Let's talk about how the return ratios are lining up, and when we're looking at the return ratios overall, there you go, very healthy in terms of ROC. Not too many companies clock this kind of a return ratio, anything between 25 to 30%, and it's gone above that as well, but it's not come significantly below that in the cycles that we've seen over the last 10 to 15 years. Even ROE numbers fairly healthy, they've stayed above the 20% number. So on both of these counts, very little to complain about from a shareholder perspective. The reinvested cash is being dealt with in a fairly sensible fashion. Capital allocation seems to be on point.
Also, Harsh,
yes,
just we're speaking on return ratios. If you see the ROCE of PI Industries, that ranges about what, 22%.
Sure.
So as compared to PI, pretty good number when it comes to Danuka. Even if I were to talk about Sumitomo Chemicals, so they're in line with their peers when it comes to return ratios. So good.
And this is despite the Dahej facility not doing very well in terms of capacity utilization.
Yes.
So capacity utilization is important when you're looking at capital, because that's the capital you have put in a facility, and it will only get better if the facility optimizes itself. And therefore, the fact that there is scope for the Dahej facility to better itself in terms of optimization leaves some room for upside, if not downside, for ROC numbers and ROE numbers.
Exactly.
So on that count, definitely a positive. But Varsha, back to you.
So I would actually speak about shareholding pattern.
Yes.
Let's see how that looks. So when it comes to promoters, 70% of stake is held by promoters. Now this is a very good news, skin in the game that we talk about. So that shows the confidence of promoter in their company. So in that sense, it's very good. If you see FIIs, though it has come off little bit, but that's not an alarming sign. Maybe because of the agrochemical pressure, FIIs have pulled out money from them. But if you see DIIs have increased their stake by mere 1%, and public shareholding have remained the same. But overall this is actually not a bad thing. It's a very good thing considering 70%, and FIIs, considering the pressure that the industry is going through, having 2.16% of FIIs it's not a bad thing.
Absolutely. Let's also look at street cred, and this has moved a bit because the stock is up nearly 5% in trade today. So I want to quickly look at street cred. Now, in terms of the way the stock has moved, it's down just about 15% in the last 6 months, not 19% because of the 4% move today. You're also seeing the last 1 year move at 19% up, given the move today, maybe 24-25% higher on a 1 year basis. But the last 5 years, it's been nearly a 3.5 bagger, which is a positive. But when we've seen how some of the small and mid caps have moved, it's largely been in line, and therefore we'll give this a neutral and not go overboard by giving this a thumbs up. But Varsha, in terms of guidance and future outlook.
Yes, so this is actually very important because we need to see what is companies going to do when it comes to future outlook. So one is they're expecting 15% growth when it comes to sale. Now this is a standalone. Company is also expecting the buyers acquisition that they did. So so this is except that 15% growth is except that buyers acquisition that they did. So we can assume 18 to 20% of growth in FY25 and 26 what the company will do. And they're also aiming revenue growth of 10 to 15% for acquired products in next few years. Gross margin is expected to remain stable at around 38 to 39%. I don't think so they would go more than 40% because in this quarter they did around 39 to 40%, which was best in last 5 years. So they're not expecting increase in gross margin, number one. Talking about the international expansion, so they're planning to expand over 20 countries, and also they're also leveraging their Dahej facility, which will actually help company to grow their top line maybe in FY26 and 27. So overall, Harsh, I would say also in Q4, so Q4 they're expecting actually very good numbers when it comes to 14% of revenue growth in Q4 year on year plus 100 basis point of margin increase. That's what they said in con call. At least we need to check if they are actually maintaining their guidance. So this is actually a very good thing, but 100 basis points is not that. It's great for a company like Danuka.
Sure. What about valuations? Because you've done a little bit of a breakdown on that count as well.
So if I were to talk about the TTM, that is trailing 12 months PE. So if you see Danuka AgriTech is trading at around 20-21 PE. If PI Industries at 30, Sumitomo at 54. So on trailing basis, of course, Danuka is looking very cheap. But you also have to take into account that PI Industries has a custom synthesis business which has a higher margin, and PI Industries cater to global clients, to innovator companies. So overall, this is one of the reasons that PI Industry has got that premium valuation as compared to other agrochemical companies, though the valuation has tapered off because of their lower guidance that the company did. But of course, in next 2 to 3 years, PI Industries will also be back with their solid numbers. One is that. But talking about FY26, there is forward PE basis FY26. Now we did some calculation considering 18 to 20% growth in Danuka. So and also taking almost 12.9% of net profit margin. The forward PE of Danuka comes at around 15. While PI Industries and Sumitomo Chemical, if you see the forward PE of PI Industries is 27, followed by and Sumitomo Chemicals is 43. Now this is according to Bloomberg data. Overall, if you see again, considering the growth prospects that the company has, considering the acquisition that the company is doing, of course, Danuka is looking at cheap. But as I said, PI Industry has some kind of advantage. Also, Sumitomo Chemicals have advantage over Danuka.
Sure. Now let's quickly sum up and give it a KYC rating, right? Income statement is the only one where we've given it a thumbs down. Other than that, we've seen fairly decent-ish in terms of the parameters and how they fired. Whether that income statement can do better in terms of top line will be the big question. Shareholding positive, street cred neutral, outlook neutral, valuation picture positive because of course Varsha did take us through that. 5.5 on 8 is our KYC rating. Let's quickly though go across, speak with Mr. M.K. Danuka, the chairman at Danuka AgriTech. Welcome sir, good morning. Thanks for coming and speaking with us. First off, I want to try and understand, you've guided for a 15% top line growth. You've made a new acquisition. This gives you scope to expand in different geographies, and you also have capacity available. Do you believe that there is some possible upside to this guidance? Do you believe that?
Yeah, definitely 15% growth we are expecting from our existing business, and the acquisition of 2 products from Bayer, that will be additional. The Indian sales will come in the financial year FY26 in Danuka books, but the overseas sales of the Iprovalicarb and the other molecule, they once the registration are transferred in Dhanuka's name, then the revenue will reflect in Dhanuka's books later on.
Hello sir, this is Varsha joining in. I just wanted to understand the overall industry scenario, because we all know that chemical and especially agrochemical have been going through a lot of pricing pressure because of destocking and all that. So how are we, because we are sitting on in March, how has the industry been right now? Any signs of improvement that you're seeing?
Yeah, till January, definitely the prices were on downwards trends, but from February onwards, the prices have started moving forward, and there is improvement in the prices of most of the technical grade pesticides. Although the China, the prices are more or less stable, but because Chinese season has also started right now, so their demand is also picking up in China itself. So overall, the prices in India, because of the dollar improving, that has also been a factor in increasing the prices. And in last 2 years, the technical manufacturers were either doing business at par or even in losses. So you will see that the brand sales company were performing better in comparison to the technical manufacturers companies. So now the technical manufacturers is in the mood to not to basically outgo from their pocket, and they are increasing the prices, and the companies are gearing up for the Kharif season. So demand is also picking up. So demand and supply rules the prices, and because demand is picking up, the prices are also for many molecules have improved in the month of March.
Note sir, so I remember that you had mentioned that you'll have 14% of revenue growth when it comes to Q4 with expansion of EBITDA margin by 100 basis points. Are you on track?
Yeah, we are on the track, and we hope that when the March 25 results will be published, we will be meeting our guidance.
Point taken. Mr. Danuka, I want to try and understand what the US exposure looks like and what the upside in terms of export opportunity looks like. Give us that perspective. One is, of course, the US market and what could happen in terms of tariffs, but also the overall export environment, given this Bayer acquisition. What does it open up for you on the existing product pipeline front?
Frankly, you know that till last year, Danuka was purely a domestic company.
Yes.
Only from last year onwards, we have started exports, and we are at a very niche stage in the export segment. Even the Bayer's product which we have acquired, that is not being registered in US. That is mainly in European and Asian countries. So the major business will come from the European market and the East Asian market. So we don't expect that the US tariffs will have any impact on Danuka business, but definitely if the US imposed tariff on the imports of technical grade pesticides from India, then that can have some impact. But as they are putting up more tariffs on China in comparison to India, I don't think that India will not be economical in comparison to China even in times to come.
Point taken. Sir, you're currently at around 2,000 crore in terms of top line. When I'm looking at trailing 12 months, where do you seek to go? Another 220 odd crore likely in terms of the acquisition you've made, which will also grow at 15%. So therefore, where should that take your top line, and is 20% the right margin to look at from a slightly medium to long term perspective?
Once the total business of Bayer for both the molecules comes in Dhanuka's revenues total, then definitely we will like to reach to 2,500 crore. But till Bayer's product doesn't come.
So how quickly do you get to 2,500 crore? Apologies for interrupting. How quickly do you get there?
In 1 year time.
Okay, so maybe FY 26, is that the aspiration?
No, but as I told you, only India business will come in Dhanuka's books for Bayer. So that will be 2%. So overall, we are expecting around 17%. Consider around 2,000 crore business this year. So we will be around 2,300 crores in next year.
Understood. At a 20% margin. And thereafter, sir, what's the visibility like? 15%? Maybe for the next 2 to 3 years at least?
Sir, you know the agriculture and agrochemical business depend mainly on monsoon. Monsoon is good. Definitely, we expect that we will be able to grow by 15%. But if monsoon is weak, then the growth may be impacted because of that.
Point taken. Thank you so much, sir. Apologies, we are short on time, but thank you so much for coming in, speaking with us. Well, that's the management of Danuka AgriTech talking to us about what the prospects could be over the next 2 to 3 years. Subject to monsoons, 15% is the aspiration on the 2,500 crore top line of FY26 is what they are guiding for, with a 20% margin. Anyway, believe we are out of time on this one. From Varsha, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More action right up on the other side.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Real estate might look to sell their paper business to ITC. So that would be an interesting deal, not too big for ITC, but from AB Real Estate's perspective currently.
On the 20th, he reported this in his segment Heard on the Street, which runs at 2:30 p.m. every day.
Hello and welcome. Good afternoon. You're watching Markets at 12 only on NDTV Profit, and I'm your host Malika Mishra. Let's first, today is April 2nd. It's very crucial for the world as countries across the globe await clarity on Trump's tariff policies. Whether the news will be bad or good for India particularly would be soon found out in just a matter of hours. At least we'll get an idea. And therefore today at Markets at 12, we will quickly check. Today we will be focusing on Trump's coverage, and we'll get you important comments. But first, let's quickly check on how the markets are faring. But let's get on with the markets first. The benchmarks seem to have recuperated from yesterday's losses. The Nifty is up 0.4%, and the Sensex is also up around 0.5% in trade today. The broader market is currently mirroring the movement of the benchmark indices. The Nifty mid-cap 150 is up 0.6%, and the Nifty small-cap 250 is also a tad bit higher at 0.5%. Speaking of the big contributors to the kind of positive momentum that we're seeing in the Nifty 50 basket, you see HDFC Bank, ICICI Bank, Infosys, Bharti Airtel and Tata Consumer are uplifting the market with the most point-wise contribution seen by HDFC. While on the other hand, you would see Bharat Electronics is a top dragger as the PSU firm misses FY25 order inflow guidance, followed by NTPC, Ultratech and Reliance as well. Let's quickly take a look at the heat map of the Nifty 50 basket to get an aerial sense of the current momentum. And you see that, there is almost equal number of advances and declines today. Tata Consumer being the top gainer as Goldman Sachs upgrades the stock, and we will talk about it later in the show in detail as well. On the other hand, you have IndusInd Bank also, Titan, Maruti Suzuki, Tech Mahindra, Bharti Airtel are some counters that are up in trade as well. On the other hand, you'll see stocks like BEL, Nestle as BofA downgrades the stock, Ultratech, Hindalco are some of the biggest losers you see on the screen. Let's check how the sectoral picture looks like, and except defense, oil and gas and energy particularly, you will see all other sectors in the green, and this is mostly led by realty, FMCG, consumption, bank, finance, IT and auto. This brings us to check the market breadth at the moment, and you will see that the market breadth currently stands highly skewed in favor of the advances, with over 1,600 stocks advancing in trade today, while close to 650 declining. However, let's shift back our focus to Trump tariffs as we started the show. Today, US President Donald Trump is set to announce a comprehensive set of reciprocal tariffs targeting all countries, a move that has left international markets and governments on edge. Now, as the world awaits the specifics of these tariffs, several countries have signaled their readiness to retaliate if necessary. European Union Commission President emphasized the bloc's preference for a negotiated solution, but warned that all instruments are on the table to counter US tariffs if required. In a similar vein, Canadian Prime Minister Carney says he will reject attempts by the Trump administration to weaken his country. Let's hear the global leaders react.
We help everybody, and they don't help us. I really, the term I like best probably is the liberation of America. It's the liberation of this country, because it's incredible.
Europe has not started this confrontation. We do not necessarily want to retaliate,
But if it is necessary, we have a strong plan to retaliate, and we will use it.
I will reject all attempts to weaken CAD, all attempts to wear us down, to break us down, so that America can own us. That will never, ever happen.
As global leaders weigh their options, the economic implications of these tariffs are expected to be profound, potentially driving up consumer prices and disrupting supply chains worldwide. In fact, to understand the implication of this on dollar, we spoke to Edward Yardeni, president at Yardeni Research. Let's hear his view.
Well, I think the dollar is going to remain the key reserve currency simply because the U.S. economy is so large and simply because we are doing a lot of business on a global basis in dollars. So that's not going to go away. And the president's focus on creating a more level playing field in trade, I don't think that plays against the dollar. I think what does play against the dollar is when Russia invaded Ukraine, the United States froze the assets of the Russians. And ever since then, we've seen a move towards gold by central banks, especially the central banks of countries that don't share the same opinions, the same interests as the United States. China, Russia, Venezuela, Iran, they're all clearly moving towards more gold in their international reserves. And so I think the challenge of the dollar is actually going back to the gold standard in some ways. I don't think the BRICS are going to come up with an alternative currency. A while ago, remember, people were talking about using the IMF's SDRs as an alternative to the dollar. I think the economic realities are that the dollar is going to remain a preeminent reserve currency and the key currency.
So in the words of Edward Yardeni, dollar might go back to the gold standard. But shifting focus on the implications of this happening on India, a day before the expected announcement, Trump claimed India would be dropping its tariffs very substantially, as many countries are unfairly tariffing the United States. Let's hear him. But before we get my colleagues Mihika and Somit to tell us what this means for India.
I'm not worried about it. Yeah. Mr. President, can I ask, have they a chance of doing better, actually, with the tariffs? It can actually help them in a certain way. And I think a lot of them will drop their tariffs because, they've been unfairly tariffing the United States for years. And if you look at the European Union on cars, the European Union already dropped their tariff down to 2.5%. It was announced a couple of days ago, which is what which is a very small tariff. The United States charged very little. And I think I heard that India just a little while ago is going to be dropping its tariffs very substantially. And I said, why didn't somebody do this a long time ago?
Now, the big question is, does India stand at risk? Mihika brings us the details on the potential impact and which sectors are most vulnerable in different tariff scenarios, while Somit will tell us what can India do to soften the blow.
Well, it's April 2nd today, and Trump is set to announce his first set of reciprocal tariffs. This is a strategy to help equalize tariffs, taxes, and non-tariff barriers. But it's key to understand how India and US's trade relations do stand. US is one of India's largest trading partner. We have a relationship of over 25 years, and India's exports to the US actually reached $81 billion in 2024 and accounted for 17% of India's total exports in FY24. And India does have a trade surplus with the US. Now, in terms of the tariff differential, we do charge higher tariffs on US imports. That stands at around, weighted average stands at around 12%. US, on the other hand, is charging us only 3% for our imports into their country. So the tariff differential stands at a 9% on a weighted average basis. Now, there are different scenarios. If tariffs are imposed on a country-wise level, a 10% expected tariff could lead to a potential export loss of $6 billion for India. This is 0.16% of the GDP, while a 20% expected tariff could lead to a potential loss of $31 billion, which is 2.1% of India's GDP. But what can India do to lower the impact on a country-wise basis? One is increase our oil and natural gas imports from the US, also increase increased purchase of defense equipment. Another thing that we can do is reduce tariffs on the agriculture and the food commodities fund, and lastly, lower tariffs on foreign EVs, maybe let a Tesla enter the market. In terms of whether the tariffs are imposed on a sector-wise level, the top 4 sectors which have a higher tariff differential, you have animal products, footwear, transportation and chemicals, where the tariff differential stands between 10 to 30%, but it's not necessary that these exports have a high export value. So based on the tariff differential data, the export value data and trade balance data, the most vulnerable sectors is seafood, iron and steel, nuclear reactors and machinery, pharma products, gems and jewelry, and electrical machinery. The differential in tariff stands between 6% to 18%, and India's US exports in these sectors, highest is for electrical machinery and gems and jewelry at $12.6 and $9.3 billion. In terms of, we have to go stock wise, in the pharma space, you do have stocks like Lupin, Dr. Reddy's, Zydus Life Sciences, Aurobindo Pharma and Cipla, which have a high revenues coming from the US. In the textile space, you have stocks like Wellspun Living, Indocount Industries, Trident, Arvind, and Gokaldas Exports. And in the seafood space, you have something like an Apex, Avanti Feeds, and Waterbase. These are the companies we've identified as of now. But Sumit, on a sector-wise level, what can India do to lower the tariff impact?
Well, there are 5 sectors that we are pointing out here where there could be some negotiations and settlements that could happen on both the ends. Firstly, on auto and auto ancillary. Now, India could go ahead and reduce taxes on auto imports, because if you look at the two-wheeler and the passenger vehicle import tariff differential, that stands highest at around 67.5 percentage points. And this could impact the higher auto ancillary exports that we are doing, which stand at over $2.1 billion. So by reducing the taxes on auto imports, we could get away with the auto ancillary exports that India has currently been doing to the US market. The second sector is textile and apparels. Now, US accounted for nearly 28% of India's textile exports. So this is a big market coming in for the Indian. And with even with higher tariffs, India could continue to remain competitive, given the fact that the tariffs on China is around 40%. But we could lose market share when it comes to Vietnam and Bangladesh. Now, what can India do to avoid this or to mitigate this? Now, one way to mitigate this impact would be to lower tariffs on US cotton imports, because more than half of the imports that we are doing of textile and apparels from the US market is of US cotton, and that if we do reduce that, then that could equalize or lower the tariff differentials and thus benefit the entire textile and the apparel segment. Third is the pharma. Now, if you look at the pharma imports that we are doing from US is just around 800 million, and this also includes equipments. And if you look at the tariff differential, it's just 7.6 percentage points. So experts believe that India could do away with this tariff differential that currently we are putting on the US market, and this could benefit the pharma sector overall. Now, when it comes to the food and related commodities, now high tariff barriers have been put in by India to protect the domestic production and the domestic market, and India can lower tariffs when it comes to specifically to alcohol, other categories of prepared food and beverages, and these categories have a tariff differential of more than 100 percentage points. And by lowering this tariff differential, India could protect the retaliatory tariff that could come in for the other food and related commodities. And lastly, when it comes to the electrical segment, now this segment is the largest export to the US market, and here the US could also settle for a negotiation, given the fact that nearly half of this India's electronic export is coming in from mobile phones, and that would be largely iPhones, given the fact that domestic production in the Indian market has started, and most of this goes across to the US market. And currently, if you look at the tariff differential, India puts a tariff of around 15% on assembled phones, while US has a zero tariff. And by imposing a reciprocal tariff, if US imposes a reciprocal tariff, then that would just increase the cost of iPhones for the US users. So that is something that US could also settle for by lowering the tariffs. Even if they put in tariffs, India would continue to remain competitive, given the fact that the tariffs on China is at 40%, and Apple might look to move more production to India. But this is something that US could also settle for, and by not increasing the tariff, given the fact that increasing tariff would just increase the cost of phones for their users.
Well, thanks for that, Soumit and Mahima. Continuing to focus on India impact, we also caught up with global investor Mark Matthews of Julius Baer to understand how to steer through global volatility with persisting tariff war possibility. Let's hear his view.
I mean, if there's a bear market in America, the other ones will not escape that. And You mentioned, the last 30 or 40 years, but you remember 2008, and that was all about very much a localized issue in America, low-quality mortgages, but it didn't stop the Indian stock market from going down 50%, which was in fact even more than what the US stock market went down by. Now, there were a lot more foreigners owning Indian stocks in 2008 as a percent of the market than there are today. Nevertheless, if there's a real bear market in the US, the other ones will go down too. They might not go down as much, but if there's just a slow and steady decline of the US market, on the other hand, like we've seen so far this year, where the US market's down around 5% and the rest of the world is largely up, then I think the rest of the world could keep going up. So it depends on the magnitude of that correction in America. And I don't really know what it's going to be, but if it's just a slow and steady decline like we've had so far, it's actually good for the rest of the world.
Mark, I just want to take off on what you said. You could see a recovery because the world view on what will be announced is overtly pessimistic. Now, if that recovery comes in, are we going to see a revert from the US market point of view to your big seven, your tech stocks, your AI story, or are we going to see a broader based recovery this time round?
Well, I'm looking for a relief rally tomorrow. I'm not really saying that all of a sudden the U.S. is going to turn into a bull market again. I don't think so. But just a 1 or 2 day relief rally, and who knows, maybe it could last a month or so, because I saw a statistic I'll relay to you, which is that going back to World War II, in the years when when March returns were down 3% or more for the S&P, April on average rose by 6%. And historically, April has been the second best month for the US market. So maybe the reversal could last on the upside, a couple of weeks. But longer term, I think, something has definitely changed. The uncertainty that the Trump administration has brought in will not go away. There's still going to be a lot of volatility. And by the way, I do think that the likelihood is above 50% that they will attack Iran when the ultimatum expires in around 40 days, which would add another layer of uncertainty to the market.
So let me round off our conversation with a specific India view. You mentioned it fleetingly, Mark, that India has not necessarily followed what is happening in US markets as well. This time round, do you see the valuation concerns that we were seeing a few months ago now ease off after a fair bit of correction in Indian equity as well?
Yes, I think India is back to what I would consider fair value, and I think the earnings will return to double digit next year. So I'd be perfectly happy with India. I think it'll be one of the best markets in the world over the next 12 months.
Wow. This was my last question, but I have to follow up on that. India will be one of the best markets in the next 12 months. So where do you see that growth fueling from? Economy, financials, anything more specific you can add, Mark?
Well, I'll just keep it short. Yeah, we like the financials. As you know, they've been private sector banks have been big laggards for the last few years, and I think they're fairly valued, and I think that the RBI seems happy with where loan deposit ratios are now, and the government seems to be wanting to encourage economic growth. So banks are the heart of any economy. I don't see why they shouldn't do well.
So as you heard, as per Julius, India will be the best markets in the next 12 months, led by financials and banks. Shifting gears from tariffs to some updates in the Indian stock market, Goldman Sachs has issued a note on Tata Consumer, upgrading the stock to a buy rating. Mahima joins us to now walk us through the details from the report.
As you rightly mentioned, it's a completely opposite commentary coming in for Tata Consumer, because Goldman Sachs has upgraded the counter to buy from a neutral rating and has hiked the target price to 1200 from 1040. What they're saying is that earnings inflection is ahead of its peers right now. In terms of returns, it's poised for a return to strong EPS growth over FY 25 to 27. Innovation and distribution-led scale-up of growth business is something that will augur growth for the entire counter. counter. And salt, a medium-term market share gain and premiumization play is something that will overall benefit the top line going ahead. And growth business, that is innovation and distribution-led growth, will happen over FY 25 to 27. So this is the overall reason as to what makes Goldman Sachs bullish on something like a Tata Consumer, and has of course upgraded the stock.
Okay, so while Tata Consumer might have a positive coverage there, FMCG sector has also been in focus because BofA downgraded two very big players in the space, Nestle and HUL, and also cut their target price. Both stocks are under pressure as we speak. And Mahima, tell us more details on this particular update as well.
As you rightly mentioned, BofA has downgraded Nestle to underperform from neutral and has also cut the target price to 2140 from 2315. What they're saying is that there are modest business trends and the stock is valued at a rich valuation. Soft demand trends as well as cost pressure and competition is putting pressure on the entire operating environment. Pricing can remain as a key driver for growth from now going forward. They expect volume recovery from here on, but that will be on the back of a lower base as well. Operating margins is capped and can move a tad lower as well going forward, and valuations are elevated in context of growth outlook as well as compared to its peers is what the brokerage is saying. They've also cut the earnings estimates by 3 to 5%, and overall strategy refresh under a new leadership is something that they're expecting overall to bring in some change. And lastly, they're also saying that for Nestle to pick up, they will have to overall check as to how their portfolio rejig happens, because medium to long-term growth depends on how the portfolio rejig entirely happens. So this is the overall view as to what BofA is indicating with respect to Nestle.
Thanks for that, Mahima. Now let's turn our attention to the defense sector. It is one of the top sectoral losers in trade today, but it has also gained over 24% in the last 1 month. So does this mean that this given point of time, is it a good buying opportunity? Well, my colleague Anushi joins in with more details. Over to you, Anushi.
So in terms of where the recent releases are concerned, we are looking at the defense exports number, which showed about a 12% growth to 23,622 crore. Now this includes about defense public sector undertakings, seeing about a 43% of a growth in FY25. However, if you look at the private sector exports, they were up around 0.15% only. Now if you just go back last year, we saw about a 33% growth to 21,000 crore of a number last year. Government target remains for a 50,000 crore mark by FY29. So defense exports in focus. Overall defense sector also, we've seen a couple of notes, rally in the last 1 month or so, and why it's been in focus currently.
Right, Anushi, thank you so much for that. And now, as global uncertainty looms, JP Morgan has come out with a note on the IT sector, reiterating the likes of Coforge and Infosys as their top picks. Let's bring in Puneet with more details on the same.
It's a very interesting note, but with a very big bearish tone, so as to say, for the IT sector, and that's the key aspect. They've made 2 rating changes as well. Very interesting though, they've downgraded HCL Tech in this particular report, something that the street has been neutral on as a stock, but they've gone ahead, downgraded it to a neutral from an overweight rating earlier, and target price has been cut to 1700 versus 2200. And the other rating change is Tech Mahindra, upgraded to a neutral from an underweight rating and target price of 1500, which has remained unchanged. So that was on the stock aspect. They mentioned that FY26 guidance is expected to be modest at best, and the commentary will be something to watch out for in this particular quarter, because Q4 is expected to be uncertain and not too much growth is expected from any of the IT players. The other key point that they mentioned is that they're in the base case scenario, they're expecting no growth acceleration. So it's a very bearish tone to this particular sector that JP Morgan has. Apart from that, they mentioned that they're moderating their FY26 and 27 revenue just by 3 to 5% in tier 1 as well as 2 to 10% for the tier 2 IT players. And as you rightly mentioned, the top picks remain Coforge, Infosys, Tech Mahindra, LTIMindtree as well as KPI Tech. But on the avoid side, there are the large caps, TCS, Wipro, HCL Tech, as well as Tata Tech and Tata Elxsi, the 2 mid cap players. So overall, a bearish note and a big downgrade coming in on HCL Tech.
Okay, so big downgrade on most of the IT counters there, but solar manufacturing as a space is also in focus after Bernstein has initiated coverage on Vari Energies and Premier Energies with underperformed rating. My colleague Mihika is again joining us to tell us more about why Bernstein has initiated coverage on these stocks with an underperform.
So the coverage has been initiated with an underperform both on Vari and Premier Energies. Vari's target price stands at 1,902 rupees, which is a 20% downside to the previous closing, while Premier's on the other hand stands at 693, which indicates a 24% downside to the previous closing. Now their view on the overall solar sector is positive. India is the third largest, biggest solar market globally, and there's an expected spend of $20 billion per year. And the indigenizing of the solar manufacturing process is a space that seems interesting to Bernstein. However, they have marked certain problems with the solar manufacturing space. There's a high propensity for oversupply given the short commissioning timelines of plants, and the Indian solar PV market, which is the module market demand, is pegged at around 40 gigawatts for FY26, but supply could be over 70 gigawatts as per the brokerage, and the current domestic pipeline is overwhelming and could, increase the competitive intensity further. Manufacturing capacity is expected to touch over 60 gigawatts by FY27. Even the export story, now India did see a big jump in their exports, especially to the US between FY22 and FY24 because of restrictions on China, but they expect this to be a short-lived story of around 1 to 2 years because US is increasing their domestic manufacturing capacity, and their current production is around 94% of their demand, which is expected in 2025. Their view on Vari Energies, they do expect module realizations to decline 13% in the next 2 years. They expect the company's ROEs to fall to 17% levels in FY28 versus 42% in FY24. They're stating that the company's capacity is nowhere near global giants, and they believe the high returns in the low barrier space is not sustainable. Lastly, on Premier Energies, they expect their module and cell realizations to fall 15% and 44% in the next 2 years. The company could also lose market share in terms of their cell export monopoly as new capacities are coming on stream and people are adding cell capacities, and the volume of cells made for actual sale could fall to 30% by FY27 versus 73% in FY25 because the company will use it for their own needs. They do expect backward integrated players have a bigger right to win, and they expect larger integrated players like Adani Enterprises and RIL to actually lead the space. Vari Energies, however, has the potential to benefit more.
Well, viewers, that's all the time we have on this show, but do stay tuned to NDTV Profit for more news and updates.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
real estate might look to sell their paper business to ITC. So that would be an interesting deal, not too big for ITC, but from AB Real Estate's perspective currently.
On the 20th, he reported this in his segment Heard on the Street, which runs at 2:30 p.m. every day.
AB Real Estate might look to sell their paper business to ITC. So that would be an interesting deal, not too big for ITC, but from AB Real Estate's perspective currently.
On the 20th, he reported this in his segment Heard on the Street, which runs at 2:30 p.m. every day.
Do you really know the company you invest in? What is the
Hello and welcome to NDTV Profit. You're watching Profit Buzzers. My name is Nika Barve and with me is Hiral Dadia. But up first, let's just take a quick look at the headlines for the day. Well, benchmarks are recovering to trade with 0.5% of gains in a volatile session. Nifty hovers near 23,280 mark, while Sensex is near the 76,450 level.
All sectors barring Nifty Defence and oil and gas trade with gains. Nifty Realty leads the way, followed by Nifty Consumption.
HUL and Nestle under pressure after Bank of America cuts targets on the retailers. Tata Consumers, on the other hand, is soaring in trade as Goldman Sachs has upgraded the stock to a buy.
And Bharat Electronics trades with cuts of around 4%, and this is after the defence company misses FY25 order inflow guidance, and this is something that NDTV Profit has been analysing over the last 4 to 5 trading sessions.
Lastly, the CPSE pays the highest ever dividend of over 74,000 crores to the government in FY25. Coal India emerges to be the top contributor, followed by ONGC. On that note, let's just quickly take a look at how markets are faring right now. If you could just pull up the Nifty 50. The Nifty 50 is trading in the positive right now. It's been a volatile session, but right now it's trading higher, up about 0.5%. When you look at the point or some of the counters that are gaining on the Nifty 50, I want to highlight Tata Consumer Products. We'll talk about it in just a while, but the stock is up 7.5% right now, followed by some recovery in something like an Indocin, up over 3% right now. Zomato, Titan and counters like Tech Mahindra as well as Maruti Suzuki all are seeing gains of 1.5 to 3%. On the losing end, on the other hand, you have BEL continues to see pressure. It's down about almost 4%, and today fall is of almost 6%. You also have Nestle under pressure, followed by an HUL. Even a Hindalco, which by the way did have an analyst on Investor Day for 2025 just yesterday, it's trading under pressure, down about 1%. And lastly, if you just want to just pick up the breadth of the market and the advanced decline ratio that we're currently seeing in the market, for the Nifty 50, you've seen declines of around 19 counters versus 31 counters trading in the green. Sensex 19 counters in the green, 11 in the red. But for the NSE market as a whole, it's tilting towards the bull side right now. 1,770 odd counters trading in the green, 530 in the red. But Hiral, what about the broader markets? Is the picture mirroring the Nifty?
Right, so let's just quickly pull up, the broader markets in terms of the mid-cap and the small-cap index, because last couple of trading sessions, it's been a slightly divergent trend that we have been watching out for. Right now, we have the mid-cap 150, which is trading at the day's highest levels. And if you talk about the small-cap 250 as well, which is at the day's highest levels as we speak. So clearly there is that bit of outperformance that's coming in from the broader markets in today's day of trade with gains of 0.7% to nearly 1%. Let's look at the small cap 250 and the mid cap 150 heat map, or even the NSE 500 heat map, to understand which are the stocks which are gaining and which are the stocks that are losing. V-Mart, that's an interesting one, which is seeing gains of nearly 9%, and this is on the back of the business update. Galaxy Surfactants, Gujarat Alkalis, Tata Consumers, Kalyan Jewelers. These are a few of the names which are seeing smart moves. What's under pressure? Central Bank of India, Punjab and Sindh Bank, and these are few of the QIP candidates that have been trading under pressure as we speak. Fortis Healthcare, BEL is something where we will get your details, AstraZeneca, Bajaj Holdings, as well as the BKG Foods, all of them under pressure. Apart from that, if you see in terms of the broader markets, few other names that I would want to highlight is the DB Real Estate. 11 to 12% is the kind of up move that we are seeing on this counter. You have, apart from that, on the losing end, few names like AstraZeneca is what we already mentioned, RHIM, Magnesia, that's another one which has been trading under pressure. So a lot of stock-specific action, Mika, is what we are seeing with regards to where broader markets go, but clearly that wave is in the positive.
Yeah.
The key aspect from here on is what happens in terms of the announcements that come in from Donald Trump, because that's what probably will get the street jittery. And the way the European markets open today in trade also will be absolutely crucial, because that probably will give us some bit of a trigger point in terms of whether that up move in today's session will be continued or not, or there could be some bit of profit booking ahead of the commentary from Donald Trump in today's session. So clearly, let's quickly shift focus overall and see what's happening from that end. Overall, you know, we did speak to also Mark Matthew, who's head of research at Julius Baer. First, quickly, let's listen into his comments and views over on the Indian markets.
I think India is back to what I would consider fair value, and I think the earnings will return to double digit next year. So I'd be perfectly happy with India. I think it'll be one of the best markets in the world over the next 12 months.
Wow. This was my last question, but I have to follow up on that. India will be one of the best markets in the next 12 months. So where do you see that growth fueling from? Economy, financials, anything more specific you can add, Mark?
Well, I'll just keep it short. Yeah, we like the financials. As you know, they've been private sector banks have been big laggards for the last few years, and I think they're fairly valued, and I think that the RBI seems happy with where loan deposit ratios are now, and the government seems to be wanting to encourage economic growth. So banks are the heart of any economy. I don't see why they shouldn't do well.
Well, that was Mark Matthews stating how India could and will be one of the top markets in the next 12 months. But we are shifting focus to the bigger story today, and that is Trump's impending tariff threats. Reciprocal tariff threats will be announced, the first set of at least tonight, April 2nd. We don't know what will it be on a country level or a sector level basis, but it's key to know that India does currently charge higher tariffs on US imports. The weighted average stands at 12%, like you can see on your screen, whereas on the other hand, US on Indian imports, they charge only 3%. So there's a tariff differential on 9%. Now, based on the tariff differential, as well as if the export value is high and how much we've been exporting, there are certain vulnerable sectors that we have marked based on data gathered. I want to just pull up the most vulnerable sectors. You have sectors like seafood, you have iron and steel, nuclear reactors and machinery for the same, pharma products, gems and jewelry, and electric machinery. These six sectors are the most vulnerable, most vulnerable sectors in terms of how the reciprocal tariffs come in. And on that note, I want to welcome Gaurang Shah, the head investment strategist at Geojit Financial Services. Welcome to the show, Gaurang. There's a lot up in the air. We don't know what kind of rates or on what items will the reciprocal tariffs be announced. But there have been, like I said, certain sectors that have been marked as most vulnerable. Seafood, iron and steel, nuclear reactors, pharma products, gems and jewelry, and electrical machinery. Your view, do any of these sectors stand out as someone who would definitely, be on the negative end when these reciprocal tariffs are announced, as someone who could get away with it?
Thank you, Mika, first of all, for having me on the show. Before I comment on this, there is one request. I had already informed your guest relation team for change in name of my company. It's not Geojit Financial Services now. It is changed to Geojit Investments Limited. I'd also send my disclosures as far as SEBI is concerned. Would request you and your guest court team to kindly do the needful henceforward. On the sectors that you mentioned, I think, look, if you ask me personally, Mika, by and large, market has already reacted to this earlier when the statement was made by US President Trump. And yesterday also, I think what is going to happen late tonight, early tomorrow morning is already priced in. On the official news flow, you might get some reaction in the market tomorrow, but I think that would be it. Now, as far as the list that you mentioned, I think pharma, gems and jewelry in form of Titan, we are extremely positive. Autos is also the other sector on which there is tariff fear. Specialty agrochemicals, lumber is the other. So there's a lot, and of course metals, aluminum and steel. We remain positive on metals also. But if I had to pick one or two sectors that you've listed down, then I think pharma, gems and jewelry in form of Titan, and autos, we coverage on almost all these stocks in the auto, be it four-wheeler, two-wheeler, three-wheeler, tractor, agri equipment, or even earth-moving equipments, commercial vehicles. So I would pick these three sectors, contrarian view, of course, on the fundamental side from a long-term point of view.
Right. So that's with regards to where tariff impacts go. But moving on, one stock that, we at NDTV have been talking about over the last couple of trading sessions is a BEL. And this is after one or two brokerage notes had come out with regards to the quantum of orders that the company could be bagging in the month of March. But now that FY25 is over, it seems that the company has missed its FY25 guidance. My colleague Anushi is standing by with more details in terms of the miss, the kind of impact, and what happens in terms of the coming years. Anushi, over to you.
Hey, thanks for that. So what is happening essentially in BEL is that yesterday it came out with an update in terms of where the orders are concerned, where the revenue numbers are concerned. Now, do note that the company was quite optimistic on achieving its 25,000 crore of an order inflow guidance for FY25, but it was unable to do so. It clocked in orders worth about 18,715 crores. So they missed their guidance by around 26% of a mark is what we are looking for BEL. Now, why this guidance miss? This is on account of delay in three of the key orders which were there, finalization of them, which has led to this kind of an order miss which was expected for the fourth quarter of this year. So now the expectation and the focus would be on the management commentary on whether this spillover of around 6,285 crore that we are looking for this quarter, would that be something that we should expect in the first quarter of FY26 or not. So that is the number one picture that we are seeing. As far as the order expectations, other than the 6,285 crore of the order slippage is concerned, there are also expectations of around 25,000 to 30,000 crore of orders for the QR SAM order, which is a quick reaction surface to air missile, along with some 14 to 15,000 crore of a next generation Corvette order. So overall is something like a size of 50,000 crore is what we are expecting for the year FY26, or significant year in terms of where the order inflows are concerned for BEL. In terms of where the FY25 revenue is there, they're clocked in about a 16% of a growth at 23,000 crore as compared to 19,820 crore, which is again a 16% of a growth, majorly in line with what the street was expecting. We have a couple of brokerage notes coming out with the kind of order pace that has taken place. Firstly, IFL, they have maintained a buy call, seeing a 20% of an upside on the stock, sees that the results were a mixed bag considering the revenue and the order flow picture which is there. While they do not perceive any FY26 risk in terms of where the earnings forecast are, they see about a 16% of a sales CAGR continuing for FY25 to 27 period. However, what should be on a focus is the tardy pace of decision making by the MOD, which has raised certain red flags in a couple of other defense counter. Also, we have seen delays in terms of where the order inflows are concerned. So the stock may see some near-term pressure on account of this. Kotak Securities, however, is bearish on the stock. They've retained a sell call with a target price of 260, citing that ability to sustain margins at current peak seems uncertain for the business. Also, while they have also revised the 26 to 27 estimates by 1.5 to 2.9% on these weaker order inflows which are concerned. However, Macquarie remains bullish on the stock, seeing a target price of 350, which is an upside of 25%, with suggesting looking at the provisional update such as inline revenue growth, and they're not overly concerned on the order wins which are currently there given the backlog of the company. If you look at the backlog, we are seeing about a 71,000 crore of an order book, so around a 3x times of the revenue is what we are seeing. They also see a potential firming up of exports opportunities on the recent geopolitical developments which have taken place. So overall, it's an optimistic commentary that they have. But if we talk about this year in particular, order guidance, while that was a miss, revenue was something which was in line.
Right, so that's an interesting one with regards to where BEL goes. So yes, there could be near-term pressure, but FY26 is something that the street will be eyeing. But that Anushi is with us as well. Let's look at the entire defense space as a whole, because we've been talking about it, whether this is a turnaround story or not. The top sectoral loser today, but it has gained almost around 24%. And this is in the last 1 month. If you pull up a 1-month chart, you'll see the kind of uptrend that we've seen in terms of the sector. The question is the dip a buying opportunity or not? Because the export numbers that we have been picking up almost post a rosy picture. Anushi is still with us. Anushi, the numbers in terms of FY25 that have come in so far and the way the sector has performed, what are you picking up?
Right, Hiral. So if you look at the defense export numbers, that stood at about 23,622 crore, registering a 12% of a jump. And this is on a already 33% of a year-on-year growth number that we are looking at. So it was a high base of FY24 that we are seeing, wherein the defense export numbers stood at 21,000 crore. If you look at the defense public sector undertakings, they had seen about a 43% growth, while the private sector exports were almost flattish at 15,233 crore. Major exports included ammunition, arms, subsystem and parts and components, with the total number of exporters growing by 17%. Do note that the government's focus is to grow this 23,622 crore to 50,000 crore by FY29. So this is the overall picture that we are looking for defense exports.
Right, thank you for getting us the details. Gaurang, coming to you with regards to defense as a space, I think we've spoken to you earlier as well on this, whether it has been a turnaround space or not. Do you think any dips could be buying opportunities, and if yes, what would your top picks be?
Hiral, honestly, I think defense is a great sector to look at with a 3-year, 5-year plus kind of time horizon. And the reason why I say this 3-year, 5-year time horizon, Hiral, is only because of the kind of complexities that are involved in making a defense product. First of all, you have to apply your mind, technology and your experience to make one product. After making the product, a prototype that is, you have to put it through various tests. After getting approval and passing of those tests, does the mass scale production happen? Hence, this gestation period has to be that long. With respect to the defense sector, I am extremely positive on the defense sector, given the kind of time horizon that I've mentioned. Not only the orders will come in from the Ministry of Defense within India, but you are going to see a large amount of orders coming in from overseas, which will swell the order book overall. Execution of that order book will definitely translate into top line and bottom line improving, and that will again translate into stock prices getting revised upwards. Currently, we have coverage on 2 names, rather 3 names, if you will. Cochin Shipyard, as your colleague was mentioning, Bharat Electronics Limited and BHEL. These are the 3 names on which we have a coverage, but other names, though this is not a recommendation, Hiral, but they are strong names, be it Hindustan Aeronautics, Mazgaon Dock, Garden Reach, Bharat Dynamics Limited, BEML. All these government-owned companies are strong contenders for the defense sector overall.
Noted, Gaurang, but let's shift focus to the CPSCs, which are Central Public Sector Enterprises, which have paid dividends of over 74,000 crore rupees to the government in FY25, which is the highest ever payout. Let's go to my colleague Rishabh for more. Rishabh, who are the top contributors and how does this number stack up against the previous high in FY24?
Right. What we're learning is, according to data from the Ministry of Finance, is that there is a record target that has been breached with regards to the defense, with regards to the dividend payout that government companies have made to the government of India. What we're seeing is that this number has topped 74,000 crores, could touch 75,000 crores. We're seeing that this is 16% more than the previous year's numbers. That is about 63,749 crores. So we're seeing a jump of about 11,000 crore rupees there. We're seeing that the top contributors are the number one being Coal India with more than 10,250 crores given to the government in dividends. We're seeing ONGC at a very close second at about 10,002 crores and then followed by BPCL at about 3,562 crores. So we're seeing energy companies doing the bulk of the lifting here for the rest of the CPSEs. What we've also seen and why this is important today is because the government had budgeted about 55,000 crores in receipts from dividends from these companies, but that has been overshot by a very long margin. So interesting times for CPSEs and more to come on that.
Thank you, Rishabh, for giving us those details. Gaurang, I'll come to you. Coal India, ONGC, BPCL, these energy counters, not done so well in the past 6 months, but they have history of a very consistent dividend payout, which also impacts the retail investors as well. Are these any counters that look attractive to hold in the portfolio?
Mika, you know that dividends is not the only factor that you invest in a stock from a long-term point of view. There are various other parameters that you evaluate while zeroing down on a particular company, whether it is a buy, sell or hold. So the names that you mentioned, Coal India, ONGC, GAIL, Gas Authority of India, BPCL, HPCL, IOC, and likewise some of the other names which have a consistent track record in terms of every year doling out dividends to the government. If you are a shareholder, you also end up getting the dividend 20% or whatever be the kind of run rate that they are delivering. But it is a factor. I don't deny that. It is one of the important criteria in terms of long-term investment. But finally, I would again mention, you invest in a stock because of the fundamentals of the stock and the earnings capability and capacity, because that is the eventual criteria which will drive the stock prices on the higher side. Look, I think last third quarter, Mika, correct me if I'm wrong, you can check with your archives or your colleagues. Power Grid, which is again a government-owned company, transmission and distribution sector, made a not so kind of a reported number on the bottom line, but it still gave out a dividend. So, that's what I'm talking about. Performance is something, top line, bottom line, and of course, along with dividend, other criteria.
Right, so that's with regards to where Power Grid as a stock goes when we're talking about, companies which are high dividend paying as well. But moving on, two stocks that are in focus on the back of their business update is a CSB Bank as well as a V-Mart. Let's pull up both these counters on the screens and see what the stocks are doing in trade. CSB at the day's highest levels with gains of nearly 4% coming in there, as well as a V-Mart, which is in focus as well. My colleague Varsha is standing by to give it us more. Varsha, what are the business updates indicating with regards to Q4?
Yes, so thank you for that. So let me start with CSB Bank, wherein they've reported total deposits up 24% at almost rupees 36,861 crore. But if I were to talk about the CASA deposits, that grew almost 10% at rupees 8,900 odd crore, and the gross advance was up 30% for the company. Next on the list is V-Mart Retail. If you see, they've reported total sales which was up 17%, while the same store sales growth, which is actually a very important metric when it comes to retail chains, that grew 8% for the quarter. And they've opened 62 stores, but they've closed almost 9 stores. So with this, the total number of stores now stand at around 497 for V-Mart Retail.
Right, thank you for the details. Gaurang, both the stocks, any coverage, any view?
V-Mart Retail, I think we do have a coverage, or we had come out with an IPO note. We don't have a standalone coverage as of now, but definitely there was a note at that point of time. On CSB, well, I think the entire banking space looks very attractive. Unfortunately, we don't have coverage on CSB, but we do like names like City Union Bank, Federal Bank, IDFC First Bank. These are some of the smaller, entities in the entire banking universe. And our sense is that if you do have a portfolio in stock market, in equities, then there has to be a dedicated portion allocated to the banking and finance in that entire portfolio. We expect banking and finance to do very well going forward.
That's with regards to City Union Bank as well as a VMart. But Varsha, that you're with us, you have a Deepak Fertilizer also that is in focus, and this is after one of the major European fertilizer companies has halted production of several key chemicals. So how are you seeing this supply disruption be a positive for Deepak Fertilizers? So firstly, what has happened and how will it impact Deepak?
Yes, sure. So, Akima, which is a major European fertilizer company, has halted production of ammonia and ammonium nitrate. Now, the halt is from May 15th, and this removes 15% of Western European ammonia output. Now, because of this shutdown, this removes 1.11 million tons of ammonia capacity. Now, let's just talk about what are the driving factors of this. So, high natural gas prices making European ammonium production unprofitable, one of the reasons why the company is shutting down their facility, and also cheap imports from Russia and Africa are also pressurizing the company for the same. Now, talking about the market impact, if you see, because of this, the global fertilizer prices are expected to rise, and the Indian fertilizer companies will actually benefit from the higher prices because of the supply crunch that we might see. Fertilizer importers will face higher cost, and this shutdown may signal more permanent plant closure in Europe. Now, why Deepak Fertilizers is in focus and how this company will gain. So basically they have built 500 kilotons per annum ammonium plant for backward integration, and most ammonia, that is 70% of it, will be used internally, but the rest of 30% will be sold in the market at a higher prices, which will actually impact positively to the company. And because of the higher prices prevailing in the industry, the company will not have to buy that higher prices ammonium from the market because it's already producing of its own, which will actually impact EBITDA margin in a positive way. Company is also working when it comes to technical ammonium nitrate, is working on a greenfield project in Odisha, which will add 376 kilotons per annum of TAN, that is technical ammonium nitrate production capacity, which will meet 60% of India's TAN demand. And also few other fertilizer stocks, that is National Fertilizer and Rashtriya Fertilizer and many more. They also make ammonium in their portfolio, but that's very 5 to 6% of the revenue contribution. But Deepak Fertilizers is the biggest company when it comes to production of ammonia.
Thank you for getting us the details, Varsha. Gaurang, how would you read this kind of a situation? Do you think it could be a long-term gain for a Deepak Fertilizer? And if so, how would you, what would you advise investors to do?
And so again, don't have any specific coverage on Deepak Fertilizer, but the space looks very exciting, Hiral. Whether it is to do with the kind of technology that the government is supporting the farmers in terms of how to utilize which quantity, which way, which fertilizer or urea for which particular crop. There has been a dedicated focus on the agrarian economy, as large part of the population is dependent on the agrarian economy. And we have a large population to feed to. There has been decisive policy changes for the sector also. If I have to name one relative company on which we are positive as far as the sector is concerned, then I think that's Coromandel International, a South India-based company, was very strong in terms of performance. Deepak Fertilizer also has got a very strong business outlook and earnings visibility. And the reported numbers were also in line with what the street estimated. No specific comments, but yeah, we like Coromandel International.
So Coromandel International becomes Gaurang's top pick when you talk about the fertilizer space from here on. But let's quickly slip into a short break. Lots more lined up on the other side. But as we get into it, let's quickly listen in to what the management of Amber Enterprises had to say in terms of the PLI scheme and the outlook going ahead.
Well, I think overall console numbers will definitely go up once the electronics division starts moving towards the double-digit numbers. So we are expecting our electronics division to touch double-digit numbers as soon as we implement this incentives, capex for this incentive scheme announced. So maybe by 27, 28, we should see our electronics division going towards a double-digit, which will also increase the overall Amber console numbers towards maybe 9.5% type.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Hello and welcome back. You're watching Profit Buzzers. We now shift our focus to Hindalco. Now, this company did have its Investor Day 2025 yesterday, and it's given certain specific, commentary on the business. The stock is trading under pressure right now, down about 2%, but it did start the day in the green. Now, in terms of Novelis, which is their US-based subsidiary, the Bay Minette project is expected to commence by FY27 end. They've also stated that they could potentially double this capacity after FY28, and the total capex expectation for Novelis as a whole stands at $6 billion over the next 2 financial years. They've also, seen margin expansion. It has been under pressure, in Q3 and Q4, but they're targeting EBITDA per ton for $600. This would mainly be led by better capacity utilization, additional debottlenecking. They're also looking at cost savings of over $300 million over the next 3 to 5 years and a ramp up of the Bay Minette facility. On the India side, they're saying that the company is entering a significant growth phase. They aim to double and quadruple their upstream and downstream capacity respectively, and they're confident of their new projects beating the cost of capital and making margins. Estimated capex at 45,000 crores. In terms of margin expansion, they expect $150 to $170 per ton for the downstream products, because that's a segment that's seeing an increasing share, and the copper EBITDA improvement is pegged at around $100 per ton. Lastly, in balance sheet, we have seen they're going to be spending a lot of capex, consolidated capex, on an annual basis at $3 billion for the next 2 financial years. But this will decline as Novelis's capex is set to decline from FY28 because of the Bay Minette project coming on stream, and they are aiming to maintain the net debt to ratio below the 2x. Gaurang, I'll come to you on this. Hindalco, you've seen some good commentary coming by, even in terms of the reciprocal tariffs. Management and themselves have told NDTV Profit that would be a neutral to positive for something like a Novelis. Your outlook on something like an Hindalco?
So not only Hindalco, because I would say as a brokerage house, we at Jujit Investment Limited are positive on the sector, along with Tata Steel, JSW Steel, GSPL, Hindalco, Vedanta, and NMDC. There is an issue, as I mentioned in my opening remarks, with respect to tariff on certain products related to metal and steel and aluminium. On Hindalco, we have a standalone coverage from a fundamental point of view. Approximate targets are somewhere close to about 750. But this sector also has another problem. News flows coming in from China. Recent news flows have been supportive for the sector, but most of the time, the sector remains a little bit of underperformer. So if you eventually decide to invest in any metal-related stock, then keep a longish time horizon, not 1 year or lesser than that. I think at least 18 months or 24 months or a little bit more than that would be an appropriate time horizon.
Got it, Gaurang. But we also had some business updates from the same metal and mining pack come back. I want to mark Hindustan Copper. It's given its FY25 highlights for their unit in Madhya Pradesh. Ore production is around 103% of their annual target. Ore milling and MIC production, which is metal in concentrate, is 92 to 97% of their annual target. We also have NMDC. They have seen a 27% year-on-year decline in terms of production growth for the month of March. Sales has seen a 6% uptick, and a cumulative basis, production is up around 2%, while FY25 cumulative sales are flat on an annual basis, something like an NMDC. And lastly, you have MOIL. They've hiked prices. Prices of ferrograde prices have increased 0.5% to 3% based on the manganese content. Prices of fine grades have been increased by 0.5% and chemical grades by 3%, and these price hikes will be effective from April 1st. And lastly, you have a Coal India. Their March production was down 3% year on year. Their coal offtake was marginally higher at 0.3, but their FY25 full year production was only saw 1% uptick, and it stands 4 to 5% below an already lower target by the company. And on that note, let me just welcome Brijesh, Head Technical and Derivatives at Retail Research at Adani Capital. Welcome to the show, Brijesh. Coal India, MOIL, NMDC and Hindustan Copper is what we just spoke about. Do any of these counters look interesting on the charts?
I think we can speak about the MOIL because lately there has been some traction in the MOIL. So I believe that we can see some positive momentum in the MOIL. So from the level of 332, because this stock has beaten down like anything, and it is forming a sideways consolidation. So we are of the opinion that we can see some breakout. So the breakout may come at the level of 350, 355, and then eventually if this there is a success in the breakout, then there can be some reversal trade in the MOIL. So, and if you specifically Coal India, I think even the from the derivatives point of view, there are slightly positions are getting added at the level of 400. So it's a trading opportunity. Maybe we can talk of 430, 450 in the Coal India. So I think that's an opportunity from the trading point of view.
So that's with regards to where Coal India goes, seeing cuts of almost 0.4%. But shifting gears, you have a Goldman Sachs which has issued a note on Tata Consumers. Now they've gone ahead and upgraded the stock, on the back of which the stock is seeing gains of nearly little over 7%. Mahima joins us with the details. Mahima, what is making Goldman Sachs positive with regards to Tata Consumers? Because the 1200 target price is interesting from here on at a time when everyone is of the opinion that, yes, there could be some bit of an impact with regards to consumption in spite of the announcements in the budget. There is not too much of positivity for the sector.
As you rightly mentioned, it's a completely opposite commentary coming in for Tata Consumer because Goldman Sachs has upgraded the counter to buy from a neutral rating and has hiked the target price to 1200 from 1040. What they're saying is that earnings inflection is ahead of its peers right now. In terms of returns, it's poised for a return to strong EPS growth over FY25 to 27. Innovation and distribution-led scale-up of growth business is something that will augur growth for the entire counter. And salt, a medium-term market share gain and premiumization play is something that will overall benefit the top line going ahead. And growth business, that is innovation and distribution-led growth, will happen over FY25 to 27. So this is the overall reason as to what makes Goldman Sachs bullish on something like a Tata Consumer and has, of course, upgraded the stock.
Right. Thank you, Mahima, for getting us the details. That's with regards to where Tata Consumers go. But apart from that, you have BofA ML, on the other hand, who's gone ahead and downgraded the two major players, which is Nestle as well as HUL. Let's pull up both these counters. In fact, a target price cut has also come in. HUL, though, has recovered from the day's lowest levels and is trading absolutely flat. Nestle has also seen a recovery, but trading with cuts of nearly 1.5%. Mahima, details on the same.
As you rightly mentioned, BofA has downgraded Nestle to underperform from neutral and has also cut the target price to 2140 from 2315. What they're saying is that there are modest business trends and the stock is valued at a rich valuation. Soft demand trends as well as cost pressure and competition is putting pressure on the entire operating environment. Pricing can remain as a key driver for growth from now going forward. They expect volume recovery from here on, but that will be on the back of a lower base as well. Operating margins is capped and can move a tad lower as well going forward, and valuations are elevated in context of growth outlook as well as compared to its peers is what the brokerage is saying. They've also cut the earnings estimates by 3 to 5%, and overall strategy refresh under a new leadership is something that they're expecting overall to bring in some change. And lastly, they're also saying that for Nestle to pick up, they will have to overall check as to how their portfolio rejig happens, because medium to long-term growth depends on how the portfolio rejig entirely happens. So this is the overall view as to what BofA is indicating with respect to Nestle.
Right, thank you for getting us the details, Mahima. So three stocks that we're talking about over here is a Tata Consumer, HUL and Nestle. Gaurang, how are you looking at the space and your views on the three counters? Two under pressure, one in the positive.
Well, under pressure because of the reason known to you and me and to everyone, Hiral. But as a brokerage house, we remain positive. We believe that the changes that have been made in the tax slab of 12.75 lakhs, no tax, will start translating into consumption and grassroots positive from third quarter this financial year, October, November, December. This will not only be restricted to the FMCG sector, but there will be positivities in non-discretionary, discretionary also, be it consumer durable, consumer discretionary, gems and jewelry, entry-level motorcycles, entry-level cars, etc. We have been positive on this sector for a long time. HUL, ITC, Tata Consumer, Godrej Consumer, Dabur, Marico, Nestle, Britannia. All these names feature on the fundamental side coverage as far as Geojit Investments is concerned.
Right, so that's with regards to the consumption pack. Brijesh, any charts look interesting where you could give out buy recommendations currently, or would you say this could be an opportunity to sell at Tata Consumers with the kind of uptick that we've seen in today's session?
Yeah, I would be somewhat of that opinion, because in the morning when I saw the news of Tata Consumer, they having a income tax assessment, they got some 262 crores orders from the IT, including for the FY22. So I was under the impression that there can be some selling pressure in the market for the stock. But then eventually with the news, it has made a kind of a good recovery. But then I still will not buy this stock. Maybe as Gaurang said, we'll wait for another 2-3 quarters to everything to get span out. It will take a good amount of time. This is an opportunity. If somebody is stuck in Tata Consumer, just takes this as an opportunity to take the exit. And maybe in the near term, when it comes back to 900,000 mark, and then after maybe 1 or 2 quarters only, we should be keeping a watch on it. And structurally, the Nestle and HUL are both as consolidating sideways. So there is no trigger which says that there can be immediate upside momentum. HUL can be one stock from the long-term perspective. Somebody wants to take a bet, okay, that can be opportunity, because this level of 2150 is the multiple demand zone. So only from the very long-term perspective, somebody wants to add HUL, that can be one bet. But Tata Consumer and Nestle, I won't take any fresh longs.
Okay. Okay, so let's shift our focus to a Quess Corp, which has surged in trade today, and the company is actually it's cooled off now, but at one point of the day it was up 6 to 7%. It has set 15th of April as a record date for its demerged companies. We have Anushi joining us for giving us the highlights. Anushi, what have they announced? And if I'm not wrong, they've also mentioned the leadership roles for the demerged entities as well.
Well, that's right. So Quess Corp is in focus, and this is after they, as you've mentioned, that they fixed the record date for the demerged companies for 15th of April. Now, shareholders of Quess Corp will receive shares in both Digitide and Bluespring, which are the demerged entities which are going to be there. And the Digitide and Bluespring are expected to commence trading within the next 2-month period itself. Again, this is subject to the regulatory approvals which are taking place. As far as where the new board and the leadership teams are concerned, so the appointments are as follows: Gurmeet Chahal for CEO of Digitide Solutions, Suraj Prasad for CEO of Digitide Solutions. For Bluespring also we are looking at a couple of changes in terms of the management. If we talk about Quess Corp, CEO and member of founding team, it's going to be Guru Prasad Srinivasan over there. So Quess Corp in focus on the back of the record date which has come out for its demerged entities.
Got it, Anushi. Thank you. Gaurang, I'll first come to you. Is this demerger something that, brings value to the shareholders? What's your view?
Well, demergers, historically speaking, Mika, has unlocked value from a long-term point of view. That depends upon, timing and what kind of mood is set in the market. Again, on Quess Corp, unfortunately, we don't have a coverage, so I won't be able to give a specific. But, take, for example, the recent demerger that we saw of ITC Hotels from ITC Limited. I mentioned about ITC when Hiral was asking me about the entire FMCG pack. And we also believe that if you are a long-term investor and if you have investment in companies which are fundamentally very, very strong, and on a latter date, if they decide to hive off a particular business and list it as a separate entity, then that definitely unlocks value from a long-term point of view.
Got it. Brijesh, how does a Quess Corp look on the charts? I mean, the stock has surged significantly in the last 1 month itself, up about 17%. Would this be a good time to, exit the position, or is it even an attractive, level to buy?
Yeah, so what we can see from the weekly point of view, the level of 600, maybe 590, the base formation is done. So the accumulation is done. So in the near term, whenever it bounces above 720, 730 level, I think the stock will turn positive. It's purely from the technical point of view. There can be some sideways consolidation, and then gradually it can go back to 850 level. So maybe not I'll take a fresh buy, but if I'm having a position, I will have a hold kind of a rating for it. And on the way up, whenever 720, 730 is taken out and that confirmation is there, then maybe there can be another opportunity of 100 odd points and we can play that 850 move on the higher side. So definitely it's a hold, and long term, I think short to medium term, I think there can be a buying opportunity.
That's with regards to where Quess Corp is concerned. The stock is seeing gains of nearly 3.5%. But moving on, we have solar manufacturing space that is in focus, and I think Mika loves this space so dearly, and Bernstein has initiated coverage. Mika, what is it? Because Bernstein has initiated coverage, and both of them, if you see, have an underperform rating and a downtick in terms of target price. Are you happy with it or not?
It's initially the story looked good. You saw that when they listed at a 60 to 120% premium, held strong gains in the first week. But the new ratings that have been coming through are very in line with how the stocks have performed since listing. The stocks are down 18 to 20%, and Bernstein has initiated an underperform rating on Vori Energies as well as Premier Energies, a 20 to 24% downside to yesterday's close. Now, their view on the overall solar industry, interestingly, is positive. India is the third biggest solar market, expected spends of around $20 billion per year, and even the indigenizing of the solar module and manufacturing process is an interesting space according to brokerage. But there are certain problems within the space that are set to impact the industry from a medium to long term view. Now, there is a high propensity for oversupply in the market. India's solar PV market demand is pegged at around 40 gigawatts in FY26, but a supply pipeline currently is over 70 gigawatts, and It is an overwhelming pipeline according to the brokerage, and the manufacturing capacity is expected to touch by 60 gigawatts by FY27. And even if the domestic demand doesn't meet up, the export story is also a short-lived one as per Bernstein, a 1 to 2 year story. We did see a big jump in our exports, especially to the US in FY22 to FY24, but this is viewed as temporary because first of all, they are ramping up their own capacity, which is almost 94% of their demand for 2025. And there are certain, Trump's administration being more focused towards fossil fuels and as well as IRA incentives, which would make Indian players less competitive. When you look at Waaree Energies, they do expect its module realizations to decline 13% in the next 2 years, ROEs to fall to 17%, and they believe that the company's high returns are not sustainable in the medium term. For Premier Energies, Bernstein is saying that their module realizations and cell realizations will fall 15% and 44% in the next 2 years. And while the company does have a solar cell export monopoly right now, this is expected to be lost as well. They've actually mentioned Adani Enterprises and RIL to dominate the solar manufacturing space because the competitive industry is rising. Gaurang, your view on something like Waaree and Premier Energies, there are multiple factors. Right now, they do have high returns, they have a strong order book, but from the medium term, it's a known fact on the street by now that the margins are expected to fall. And if not backward integrated, then it's a difficult industry to survive in.
So, Mikavel, the entire renewable energy sector looks quite attractive. We had a coverage on Waaree IPO when it was there from a long-term point of view. We had given a subscribe. We cover Suzlon on the fundamental side. Other than that, we have coverage on Premier Energies also, I believe. I don't recollect well, but I believe there was an IPO note, not very sure. Other than that, we have names like on NTPC Green, again, we had this is also demerged. It's a company from NTPC. We had given a subscribe from a long-term point of view. We have coverage on Tata Power, NTPC, CSC, Torrent Power, GSW Energy. There is one more positive for some of these names, which was the announcement made by the Honorable Finance Minister in the budget, nuclear energy. And I think India historically has been a power deficit country. Even after 78 plus years of independence, we are still a power deficit. So my sense is that we are likely to do well. The only problem is you need to have a longish time horizon.
Got it. Brijesh, Waaree and Premier, they've corrected significantly since their listing price or even their highs. What do the charts say? Does it paint a rosier picture?
Not too rosy. Waaree, there has been a distribution purely from the technical point of view. Again, closer to the level of 2500. Again, the supply was there. So I believe this can go back to 2100 level. So maybe another 200 points kind of a correction can be seen. Maybe it is good from the long-term perspective, but somebody wants to take the fresh bet, I think can wait for this 2100 or maybe plus minus a little bit those two close to 2100, but definitely some distribution, some profit booking, some selling pressure is there in the Waaree. So I would wait for that opportunity. Closer to 2100, I will take the view. And coming to Premier, I'm not too very confident. I think this can go back to 800 levels. There has been continuously distribution, which is I can see on the weekly time frame, and even the current week the stock is down by almost 5%. So I think once this base of 890, 880 is broken on the weekly closing basis, there can be another 10% kind of a damage in this stock. So I would not be suggesting any fresh buying with this. Either I would like to have a wait and watch kind of a scenario.
Right. So that's with regards to where Premier Energies as well as Waaree Energies is concerned. But moving on, overall, if you have the auto sales numbers that have started to trickle in, Atul Auto is an interesting one because after the numbers did come in terms of the sales yesterday, I think 15 to 17% kind of an up move is what we saw in trade. And today you're seeing profit booking that has come in, but not to that extent. 3% is the kind of downtick that you're seeing on the counter. We did speak to the management as well with regards to, what's from here on in the high performance EV segment. Let's listen into a bite of that conversation first.
If you look at ICE versus EV, ICE delivers somewhere close to 75% of my sales for last fiscal. 25% is EV, and I believe that there will be definitely, growth in EV category while continuing volume growth in ICE category. Overall, I expect that going forward next year, I believe that from 25 it may move to anywhere between 30 to 40%, and with good volume growth in ICE, we will be able to touch upon pre-COVID level very soon.
Right, so that's with Atul Auto. Brijesh, what are charts indicating with regards to Atul Auto after the kind of up move that we saw in yesterday's session and a 3% profit booking today?
So right now we can speak about the 200-day moving average, which is close to 590 level. So we can say that this continuation of the trend can be seen toward that 590-600. So that is again the supply point. So at least that momentum can be seen. So for that point of view, for the levels of 600, I am bullish.
Got it, Brijesh. Moving on, we have the PFRDA, which is set to hike the equity allocation for the default national pension scheme from 15% to 25%. Higher equity in NPS is expected to drive the inflow in the stock market. Let's go across to Mahima for more.
Right, so as you rightly mentioned, India's pension regulator, that is PFRDA, is set to hike equity allocation for NPS and UPS from 15% currently to 25%. The expectations are that the overall increase of 10% allocation will have fresh money inflow of equity of around 1 lakh odd crores. In terms of the current versus proposed scheme, right now the allocation for NPS or UPS of equity is around 15%, which will go to 25%, and fixed income right now is 85%, which will come down to 75%. In terms of how this will overall change the overall asset under management for NPS under central government asset under management, that is around 3.7 lakh crore. For state government, this is around 7 lakh crore. So total AUM is approximately 10.7 lakh odd crores. So 10% of this, because the overall allocation will be up by 10%, so 10% of 10 lakh crore comes to approximately 1 lakh crore, which will be the overall inflow coming in from the equities. In terms of 3 pension fund managers that offer default NPS scheme, this includes SBI Pension Fund, UTI Retirement Solutions, as well as LIC Pension Fund, and private players that offer for the following 3 funds to government employees that include the life cycle of up to 25 is equity allocation capped at 25%. Life cycle of 50, the equity allocation again is capped at 25%. And overall, if there is scheme G, the securities 100% of allocation in government securities is required. And overall, in private sector, up to 75% of equity is already allowed. So this is the overall view of how allocation in NPS happens and what is the change exactly that might take place as per media sources.
Got it, Mahima. Thank you so much for giving us those details. I also want to thank Gaurang and Brijesh for joining us and letting the viewers know about the views on all the different stocks we discussed today, and we hope to speak to you soon. And with that, it's a wrap on this edition of Profit Buzzers, but do stay tuned to NDTV Profit. Lots more on the other side.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Real estate might look to sell their paper business to ITC. So that would be an interesting deal, not too big for ITC, but from AB Real Estate's perspective currently.
On the 20th, he reported this in his segment Heard on the Street, which runs at 2:30 p.m. every day.
Do you really know the company you invest in?
Welcome, you're watching The Big Question. I'm Tamanna Inamdar. All eyes are on US President Donald Trump as the world braces for what he has dramatically declared as Liberation Day. That's April 2nd. He says it will be Liberation Day for the United States, a day that he claims will free the US from its reliance on foreign goods. Now, this involves a comprehensive set of reciprocal tariffs, which essentially means that the US now plans to match the duties that other countries charge on American products. Take India, for instance. India's weighted tariff rate on US imports is about 12%, as opposed to what US charges on Indian imports, which is 3%. To better explain Trump's logic, let's take the example of agricultural goods. According to a White House fact sheet, while India charges 39% tariff on agricultural goods, the US charges only 5% for the same goods. Mr. Trump blames these differential tariffs for US's $1 trillion trade deficit with its trading partners. And when it comes to India, the trade deficit between the two nations has only widened, reaching $45.7 billion in 2024. Now, in the run-up to April 2nd, there has been a lot of speculation surrounding reciprocal tariffs, with the White House once again reiterating that tariffs will go into effect immediately. However, there is no clarity yet on how these reciprocal tariffs will be calculated. Will it be country-wise? Will it be sector-wise? Will it be item-wise? Now, Trump has already said that India will reduce its tariffs substantially. One thing is clear, though, the ramifications that reciprocal tariffs will have on India will be something that will have great impact, even if not directly, then indirectly. If tariffs slow down global growth, India will also suffer. For example, if Trump slaps India with 10% tariffs, it could cause a potential export loss of $6 billion. If tariffs are hiked to 20%, which is what is being widely reported, it will cause export losses worth $31 billion. If you look at it sector-wise, seafood, iron and steel, pharma, auto are some of the most affected sectors. Beyond the impact on India, a move of such a global scale by the world's largest economy, whose currency is the default global currency, will also have repercussions for global trade and economic stability. Major economies, including the European Union and China, have already hinted they will respond with their own tariffs, leading to a cycle of retaliation. Such developments could disrupt global supply chains, increase consumer prices, and slow economic growth worldwide. So as we prepare for the tariffs, the big question is, what will the Trump tariff war mean for India, and will India be able to weather the Trump tariff storm? To speak on this, I'm joined today by Radhika Rao, Senior Economist and Executive Director at DBS Bank, Jayant Krishna, Senior Fellow, Center for Strategic and International Studies, and Anup Vadhavan, former Commerce and Trade Secretary, joins us on the show. Welcome to all of you, and thank you so much for your time with us here on The Big Question. Mr. Vadhavan, I'm going to begin by getting your view on how much the impact will be. One thing that is clear is that Donald Trump has been saying India is willing to reduce tariffs. Does that give a sense that for us, the outcome which we will see on April 3rd may not be that bad?
Yeah, so as far as impact is concerned, it is hard to guess. It will depend on the nature of tariffs which are put in place, the items covered, the levels at which the tariffs are imposed. So all that is very unclear. We are just guessing, from a dictionary meaning of the word reciprocal, but that is not perhaps the precise way in which they will be imposed. They'll be imposed in a manner that they are effective and they, in a sense, cause some pain to the trading partner on whom they are imposed. So let us see what gets imposed. I don't think those tariffs are going to be trade-stopping tariffs, because that will be disastrous and it will obviously invite retaliation. And the other thing to see is that we recently had a very positive visit by Mr. Brendan Leach from the USTR, and there are some signs that, the commitment to have a good faith trade negotiation for a BTA might, get this reciprocal business kept on a side in abeyance. So let us see what precisely happens, but I don't think the tariffs are going to be at a level which is going to be trade stopping. And, to be more optimistic, maybe the reciprocal tariff business is put on a side for India, since we are committed to a good faith trade negotiation. So let's see. It's hard to conjecture. As you mentioned, the average tariffs, there's a 9% differential between India and the US. For some sectors, the differential is much higher: textiles, agriculture, automobiles, auto components, iron and steel. The differential is more than 9%. It all depends, what understanding of reciprocal tariffs the US has and how they'll be imposed. So let's see.
Mr. Vadhavan, it's interesting that you bring about the point of the textbook definition of reciprocal. If I look at the Trump definition of how he has been describing it, he's used tariff as a verb. We will tariff them as they tariff us. So he seems pretty clear of what reciprocal means. But I want to follow up on the point that you made. India's best case scenario is that Trump doesn't talk about India at all tomorrow, or says that my deal with India is getting sorted out. Let me talk about the rest. Isn't that the case?
Yeah, I think that is a distinct possibility to my mind, because otherwise it doesn't make sense. If he puts tariffs on us, then, it's a standard trade response that you sort of reciprocate, you retaliate, because after all, we also are part of the political economy which has its own compulsions. So, I'm sure better sense might prevail, and he will not put countries like India, which are committed to a good faith negotiation, in that position. If he does that, then of course, that will be a parallel track. The reciprocal tariff business will be one track, and the trade negotiation will be a separate track. So they must understand that, and let's hope that can be avoided, and we can have a good faith negotiation with a quick timeline, which takes our trade to, around $500 billion as the two countries have decided. So let's hope, that is the sensible path which we are able to adopt.
Sensible is the key word here. I think the word that we're all looking for. Radhika Rao, you know what? Let's understand in real terms what the impact is from a US perspective first and then an Indian perspective. I was having a very interesting conversation today with Mark Matthews, who says that when it comes down to it, the impact, the inflationary impact on reciprocal tariffs is not going to be as much as is expected on US consumers, because it's going to be on certain components of goods. Likewise, for an Indian perspective, in terms of exports, is the impact as harsh as it's being made out to be? What are your own calculations?
I think this is one of these announcements that have been awaited with a lot of interest, not only from India, but many of the other US trading partners as well. And to answer your question, I would think that, let's see the quantum of the trade surplus that India has vis-a-vis the US. In terms of percentage of GDP, it's about 1.2% of GDP, right? So it's not that significant, but again, a number to reckon with. The other factor that you mentioned is, the net impact. I think if you see the nature of the exports, the trade that India and US has as well, is not so much, I would think, manufactured goods. Of course, off late, you have seen actually electronics equipment, even electronics, hand phone manufacturing that has been happening in India, those exports to the US increasing. But otherwise, the other components are gems and jewelry, pharma, chemicals. So something that it's more at the raw material capital goods stage rather than the consumer goods. Vis-a-vis, I would say, compare with China. Much of China's trade with the US is manufactured goods, majority of it. So that, of course, has more inflationary impact. So in terms of China, India and US trade, I would think certainly the nature of the tax agreement that they're going to read. I think I just want to reference here a report that is just out, which is basically the National Trade Estimate report by the USTR, which is the latest update. That actually cites, it's quite exhaustive. If you were to read the India section of the report, it not only just touches on tariffs, it touches on a whole lot of non-tariff barriers as well. Import licensing, import restrictions, even Make in India approach, subsidies, all of that. So in a way, if there is a reason to impose tariffs, US has prepared sufficient ground for that. But then again, as Mr. Madhavan mentioned, if they put up saying, India could be subject to 8-9% tariff, but it will be pending, given that negotiations are going on, and India has been one of the most proactive countries, I would think, who has taken steps right from earlier this year, soon after the Trump presidency came into power, Trump to go over. To hold negotiations, talk about the bilateral trade agreement, and try and bring it into fruition, at least the first phase by fall. So net, I would think the impact on India, to answer your question, overall the trade surplus is about 1.2% of GDP. So I would think 10 to 20 basis point of net impact is possible. Again, depending on the nature of the tariff that is imposed. Inflationary, not so much for India, of course, for the US much more, but even for the US, I would think the nature of India-US trade is not so much consumer goods, it's much more to the businesses, like I mentioned earlier, raw materials as well as capital goods.
So, now let's drill down to where the tariffs could actually pinch from an Indian perspective. And Mr. Krishna, I want to come to you on this. Where it's really going to hurt is if they insist on agricultural goods, isn't it? If I were to oversimplify, yes, pharma on one end, we're talking about auto components, we're talking about textiles, but where it pinches us is agriculture.
Tamanna, I mean, let's look at, the US-India trade, which is of the order of about $200 billion. I think both President Trump and Prime Minister Modi, they issued a joint statement some time back, and they talked about it going to 500 billion by the year 2030. So my feeling is nothing radical will happen in a few hours from now. It could perhaps be a 10% tariff, which is an impact which India could cope with and could recover through other opportunities. But more than that will be difficult. And coming back to your question on agriculture, I think we will come to the tariff issues on agriculture later, but let's look at the non-tariff areas which the USTR report has talked about. They've talked about, the India gives agro subsidies, free energy, electricity, crop insurance is available free of cost to farmers. Fertilizer subsidies are there, seed subsidies are there. So they're talking about that being unfair. So while from their perspective, they may see it as being unfair, but let's look at our economy, political economy. Farmers, large number of Indian farmers are poor and marginal farmers. If these benefits are not given to them, they would have problem of sustenance. So I think these are the kind of issues which India can't, the non-tariff issues which India can't really address much, because the way our polity of the country is shaped. But more on the tariff side, some of the things which have been hurting the US, and they've been talking about it, tom-tomming about it quite a lot, is about apples, which has 50% duty in India, import duty. Corn, which has 50%, coffee, which has 100%, raisins, walnuts, almonds, which has 100%, whiskey, which has about 150%, flowers has 60%. So I think these are the kind of things, French fries, drug formulations, potatoes, canned peaches. I think these are the areas which they have talked about. And some change India could affect in that, but not very radical for sure, because it will.
I'm actually going to come to you on that list, and because it's a very good illustration of what we can and what we cannot do. Now, some would argue, all right, let's drop the tariffs on whiskey. What is going to be the consumption and impact on domestic industry? But when it comes to corn, do we want to open the floodgates to American corn? When it comes to coffee, we are now in a sort of renaissance of what's happening with Indian coffee. Do we want to open the floodgates there? Do you think that kind of nuance is something that right now diplomats from the Indian side are sitting and looking at very, very closely?
So I think, Rajesh Agrawal, the Additional Secretary in Ministry of Commerce, and Brendan Lynch, the Assistant USTR, which who've been talking for last 4 or 5 days. I think these issues, I'm sure, have come up. See, at the end of the day, you have to regulate a tariff, you have to protect your domestic industry, you have to generate revenue from import duty. So I think these compulsions remain. And some tweaking here and there is possible. I think India auto and farm sector. These are the two product categories where India has huge amount of concerns, because let's understand, manufacturing is still a small percentage of Indian GDP, and in manufacturing, auto constitutes, if I'm not mistaken, almost 40% come from auto and auto ancillary units themselves. So I think that's something which India can't give in that easily. Although India has indicated, nothing has come out officially from the government, but some indications are that on information and communication technology equipment, metals, mobiles, I think India has shown willingness to reduce the import duty. But I think many other agro commodities, because it will hurt the farmers, there may be some minor adjustments, but a huge amount of change may not happen. See, not just it's a US and India tariff issue, Tamanna. If you look at with EU, with China, Canada, Mexico, whatever has happened, I even see it as some kind of an opportunity, not across the board, but for some specific product categories, where we are not as competitive today to export to the US. I think with the barriers, both tariff and non-tariff, which will emerge with these other countries or group of countries, I'm sure some floodgates of opportunity would open for India as well.
Okay, and one second. That's an important point. I don't want Mr. Vadhavan to come into it. What is this floodgate of opportunity? Because we've been looking and talking about this floodgate of opportunity post-COVID, when we went into China +1, in the last Trump administration as well. Does that floodgate of opportunity still exist? And if yes, what does it look like in your view?
So certainly, there's an opportunity as part of the bilateral trade agreement. There's an opportunity to, grow trade, and these negotiations happen on a very systematic, technical basis. Each side has what in trade parlance is called certain ambitions or certain wants from the other country, and then each side has certain sensitivities. So the Americans will convey to us what they want from us. We'll examine that list. We'll identify things we can do easily. We'll identify things which we are sensitive on. And then typically, in trade parlance, there are various sort of safeguards you can put in place to protect your sensitivities. One safeguard is, staging of duty. So your duty does not come down to zero, it comes to a moderate level, or it comes down slowly over a number of years. Then you have instruments like a tariff rate quota, where the quantities are restricted. Let us say you open up to American agricultural products or dairy products, you limit the quantity so that there is no, surge of imports into India. So all these mechanisms are there. So ultimately, you balance your ambition and sensitivities in this manner and come out with a trade agreement that is mutually, beneficial and to the satisfaction of both sides. I'm sure that will happen. The other aspect of, floodgate of opportunity is that indiscriminate, tariff barriers going on year after year, decade after decade is not a recommended, economic or trade policy. So it's an opportunity for us to rationalize our tariffs. Certainly, tariffs are very important instruments of protecting your domestic interests, protecting your, security and strategic interests. But they have to be used carefully and selectively. You can't have high tariff walls. So it's an opportunity to rationalize our tariff.
So it's like this. Whenever there is, any kind of adversity, you try to look at the best possible outcome. Okay, maybe this is a learning moment. I know I'm making a very simplistic parallel, but it is in a sense like that. If we are being forced to lower tariffs, then it's a learning moment. It's an opportunity for domestic industry to strengthen up. But you would ideally want to do that at your own time and on your own clock, not under the gun with someone else pulling the trigger. So now, then my question is, if that trigger is pulled tomorrow and we don't know what the outcome is, Radhika Rao, what are the sectors that are going to be hurt the most from an Indian perspective?
Actually, I want to also drop on that bit that you mentioned about agricultural products and non-agricultural products. In fact, if you see the nature of trade, it's quite non-agricultural product heavy. And where the tariffs are lower than the agricultural products. So the tariff rate, if you just take it at the tariff rate level, of course, the non-agricultural is 1/3 of agricultural in terms of just the tariff rate. But if you see the volume or the value of trade that we have with the US, it is more non-agricultural heavy. So to that sense, I would think that if India and the authorities are able to showcase that we would meet you halfway through, we will make some concessions, but not swing completely the other way. I think again there is some we can consider that a meeting of minds at least. And I completely agree that if the political economy for the agriculture sector is very crucial. Coming to your question on where there will be the impact will be most, I think that will really depend on the kind of taxes, reciprocal taxes, or at least a threat thereof is imposed. Is it on sectors where the gap is the highest between where US is and where India is? If that's the case, then you would see automobiles, textiles, iron and steel, agricultural products. That would be where the impact would be the most. If we say which are the economically important sectors for India in terms of trade, then it will be pharma, chemicals, electronics, gems and jewelry. So in that order. So it really depends on what kind of tax is imposed and whether it's economically important to mean that, the value of exports that India does, is that big enough to show some amount of impact. So I think overall these would be the sectors that would very much be in show. Again, agricultural is something that, if India needs to bridge that gap because now India enjoys a trade surplus, but it wants to make it a bit more balanced. Where can they step up? I think they've already spoken about energy, already spoken about defense equipment. Agriculture is another aspect. And again, I'll bring China in here because if you remember 2019, President Trump's first term, at that time, there was this attempt to better balance the trade between the two countries. And a lot of the discussion was around soybeans and how China could step up those purchases. So again, I think something will get visited for India as well. So overall, I would think this would be my sector breakup of which is still quite non-agricultural heavy, at least in terms of the sectors that are important or have sufficient share in overall export.
You know, I want to ask a broader question here, and Mr. Krishna, I'm going to come to you on this. At the end of all of it, what is the purpose? It is, which is why this has been dubbed as Liberation Day, right? From a Trump political perspective and for the US domestic audience. Do you think that the path to liberation for the United States is paved with these tariffs? Because the idea is we make imports more expensive, we start making more here. Or you incentivize global companies to come and invest and make in the US.
Yeah, so I hope, the liberalization day doesn't become a martyrdom day for Indian exports to the US. I think, look at last few months, India has already shown some way forward. The equalization levy, which is the Google tax of 6% has been removed. If you look at India has shown that, if there is a trade deficit in the favor of, in India's favor, we could address it through some newer products like oil and energy. Of course, logistics and our place on the geographical map doesn't make it that seamless and easy. But yeah, they are in today's day and age, it is possible. So I think these are some of the areas which India has opened, and India has its own, wish list also. Some of the most important things that come to my mind are, US has a very strict pharma export stipulations, pharma exports from India to the US. I think they have very strict stipulations, so for which a lot of our pharma companies find entry barriers there. So I think these kind of things are there, but eventually, I somehow feel if the bilateral trade agreement has to see the light of the day by September 2025. I think US should behave responsibly by not introducing a reciprocal tax, but at best have a 10% levy and then pay way, because if you have a very, very stringent tariff imposed, then there'll be no elbow space to discuss a bilateral trade agreement or probably a FTA in future. So I think at the end of the day, I've always been saying that, countries in today's day and age don't necessarily get what they deserve. They get what they negotiate. And, India, from whatever insights I have, of course, government has not come out, sharing much about it. But I'm sure things will not be as adverse as they are being talked about. Because at the end of the day, US should also think, how many countries in the world they can afford to antagonize. They've done it with China, they're doing it with Mexico, with Canada, with the European Union. And if the same, India is also treated in the same breath, I think then it won't speak. I think US also has something to lose in that battle, not just India. I think I hope the wise sense prevails and space is kept vacant and open for negotiations on BTA or a possible FTA in next few months' time.
The interesting thing is that a lot of nations right now are hoping for the same. From their own perspective. My question to you, Mr. Vadhavan, is a slightly tricky one before we close the show, is do you think that we'll see some sort of announcement from the Indian side in a preemptive fashion, so that when President Trump in a few hours from now wants to talk about tariffs, he can say that, well, we have another conversation going on with India and they're not part of this broad brush of announcements. Would that be something that makes sense?
I think whatever preemptive messages have to be shared have already been shared over the last few days with the US side. So I don't foresee any other preemptive signal before President Trump goes ahead and announces his tariffs. So I don't think there is now space for that or an opportunity for that. Whatever had to be conveyed through gestures and otherwise has already been conveyed. And if you're talking about Liberation Day, I don't think this Liberation Day will amount to any economic benefits for the US in the short or the long term. The US economy is at full employment. They've graduated away from manufacturing to higher value addition areas, technology, e-commerce, services. So it's a misleading proposition that the world has taken advantage of the US just because the US has a goods trade deficit because they've graduated away to non-manufacturing areas. So this is, and they are not going to be sustainable, these tariffs. Because sooner rather than later, you will realize that you are actually undermining US interest. It will just attract attention of the world towards services, towards tech, towards e-commerce, and then the world will, factor those in when they respond to US tariffs. So I don't think this, unfounded series of steps is going to be sustainable for too long. Very soon it will be realized that there is no liberation possible, with these methods. And already, with Canada, Mexico, they've taken the FTA goods out of the calculus. Markets are down already. If some catastrophic, all inclusive across the globe kind of action happens by way of these reciprocal actions, you will see the results on the market very, very quickly.
Yep.
And I don't think they'll be sustainable.
Yep.
So let's see. It's quite interesting.
It shouldn't be a liberation from economic growth. If for nothing else, I don't think that's what anyone wants. But having said
that, one other thing we forget is the world will carve itself around the US rest of the world relationship. The US has high tariffs for rest of the world has high tariffs for US, and the rest of the world has low tariffs for each other.
Correct.
So obviously economic activity will shift out of the US rest of the world relationship
perfectly makes perfect sense. You don't want, the US will not want to be isolated in that sense. But well, a lot to follow through, and we'll be tracking the story very, very closely. Thank you, meanwhile, for speaking with us. Excellent conversation with Jayant Krishna, Radhika Rao, and of course Anup Wadhwan on what could be expected and can India weather the storm. Watch this space. We will be looking at all of the developments as they unfold.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Real estate might look to sell their paper business to ITC. So that would be an interesting deal, not too big for ITC, but from AB Real Estate's perspective currently.
On the 20th, he reported this in his segment Heard on the Street, which runs at 2:30 p.m. every day.
Hello and welcome, just chatting. In fact, welcome to India Market Close. I'm Harsh Saita, with me is Neeraj Shah. And, both of us were just chatting about how it's going to be an eventful April. Tariffs, of course, dominating headlines this week. Next week, you're going to have the RBI, MPC, and commentary around that. And thereafter, you'll start to see the results season make an impact on the index. So currently, we're sitting just below the 23,300 mark, 0.5% higher. So we've bounced back slightly, a wee bit from the lows. Yesterday, we were tracking levels of 22,900. So surely today, we're seeing a bit of positive bias with regard to levels that we'll track, and we'll try and zoom in and try and get you what the changed scenario looks in that sense. But 0.5% higher on the Nifty 50, nearly 1% on the Nifty Bank. Broader markets doing better than what we are seeing in terms of the Nifty 50. The Nifty mid cap up 1%, the Nifty small cap up around 0.7%. Let's look at the heat map on the Nifty as well. There you go. The breadth decently favorable in that sense. Tata Consumer, Titan, both of them doing very, very well. And it's a day when FMCG is really ruling the roost in that sense, because we're starting to see, especially retail, the numbers being quite strong. And therefore, especially among the smaller players, a V-Mart, a V2, a Bazaar Style, some of those numbers were very, very healthy in that sense. And that's also kind of impacting the moves on the index. But Tata Consumer in particular, after that Goldman Sachs upgrade, up 7.5%. So something to look out for. Nestle languishing. A Bank of America report, not exactly bullish on that one. In fact, cutting target price. BEL also down roughly 4%. We'll talk about some of these and more. But let's look at the market breadth. The market breadth is favorable as well. And we're trading positive for a second consecutive day. After a bit of volatility at the start, we've comfortably sitting well in the green now. 2.5:1 is the ratio at which we are trading in terms of advances and declines. I want to also zoom into sectors, because there were some sectors yesterday which were clearly under pressure. Today, a lot of that has actually reversed. The Nifty Realty Index, one of the key losers yesterday, is up 3.2% in trade. So a bit of a bounce back in that sense. Pharma is up 0.5%. That was under pressure yesterday. The Nifty Metal Index also up around 0.5%. Nifty IT was under pressure yesterday, again up 0.5% today. Nifty Auto, after all of the auto sales data has been digested, and that one also doing fairly well for itself. And the Nifty Bank, of course, the heavyweight, also doing very, very well for itself, 0.9% higher in trade. The broader markets, we did discuss that, but let's quickly look at everything that's playing out. Quickly onto factors. First one, on indices, you're seeing pretty much markets trade in the green. Very few pockets of red in trade as sectors today. All major sectors trading in the green. That's the other key positive. You're looking at the market breadth, which is also positive. We spoke about that. We showed you the breadth. In terms of realty and IT stocks, they've seen a bit of a bounce back in trade yesterday after the kind of beating they saw in trade today, I beg your pardon, after the kind of beating that we saw yesterday on some of those names. Mid-cap and small-cap indices are outperforming the Nifty 50, up nearly 1% on the Nifty mid-cap, 0.7% on the Nifty small-cap. But Neeraj, plenty of names flying around in trade today, including the likes of a Tata Consumer. We spoke about that on the index itself, but even within the broader markets, there are plenty of movers.
Yes, indeed. The losers are the likes of Vari Energies, which on that report is down. But before we get to Shivangi Sarda, a quick word on the gainers. So yes, Tata Consumer is doing well, but Kalyan Jewellers is too. There is Shyam Metallics, which is up about 5% recently. A UBS note up the target there, or maybe the quarterly updates have come out. Vishal Megamart, quarterly updates. V2 Retail, quarterly updates. So I think that's a set of stocks that have done well. And real estate names seem to be doing okay, as Harsh said. Best performing index is Realty. Godrej Properties, Macrotech, and a few others are really revving it up in the session today. So that's the set of names that you want to keep an eye out for. Polycab, interestingly, in the green too. Let's get in Shivangi Sarda, analyst of derivatives, wealth management at Motilal Oswal Financial Services, on the show. Shivangi, good having you as always. Thanks for taking the time out. Is this a bounce that you would play, or would you rather remain light ahead of the tariff announcements later today?
Very good afternoon. Thank you for having me. We've seen that the index has already discounted in a lot of the tariff concern in the previous session. So yesterday we did see like a fall to 23,100 marks, but then there was a good support at its 50 daily exponential moving average. Of course, put call ratio has sank quite low, but India VIX had also spiked around about 10% yesterday, and today also is hovering at the higher zone. So some sort of concern is obviously there about the event, but which should cool off after the event, and there will be some sort of normalizing in the swings in the option premium as well. But overall, today's session, or rather today's comeback of the bulls has, clearly indicated that it is, more of barks and less bites. So overall index is taking support near 23,100 zones, which will act as a crucial level here onwards. And for the upside, move towards 23,650 levels. So there is a lot of unwinding which is yet to happen at 23,500 to now again hold above these levels. So even, in this previous week that we saw the recovery, it failed to hold above 23,500 for most part of the week. So which is a concern right now. So it needs those, call writers to unwind their position at those levels. But overall texture of the market looks, positive on the near to long term structure, even though intraday there might be some sort of swings, but there has been a good pullback. So overall buy on decline to continue in the index.
Okay, buy on decline. But would you buy the Bank Nifty, for example, today, or would you wait for a decline?
So definitely Bank Nifty has been one of the outperforming indices in the last 1 month. In fact, this series was also quite positive in terms of rollover and in terms of the heavyweights outperforming in the entire banking space. But overall, we've seen that Bank Nifty has managed to roundabout hold above 50,500 positionally, which is quite positive. So we are, recommending a buy here as well. Not much of a downside move that we're seeing. Of course, there'll be some volatility around the event, but positionally 50,500 will be important to watch out for the April series as well. And immediate basis, 51,000 would be like a good make or break zone over here for the next up move towards 52,000 levels.
And what are your picks for this afternoon there for Shivangi? Hi.
Hi, Harsh. So on my radar, first up is Indian Hotel. We've seen that there has been, good, strong confidence of the management in delivering double-digit revenue target for the year that has to come, and which has increased the investor confidence. Technically, the stock has recently retested its breakout zones, and it formed like sort of a hammer candle on the 50 daily exponential moving average, where it did witness a bounce back from those levels. So negation of the lower top, lower bottom is also signaling a good bullish comeback over here. So definitely this one's quite positive, and it has been an outperformer in the entire travel and tourism pack as well. So recommending a buy here. Now the next targets that we're looking at is 850 with a support of 860 is the next targets with a support of 810. Now the second pick on my radar is from the financial pack, which is Paytm, also emerging from the digital pack. This stock has been quite strong from the last 3 weeks, and it has, recouped most of its losses of the last 2 months. And we've seen that volumes have added up in the previous 3 to 4 sessions, which has been quite remarkable with the price confirmation. So this surge is to continue. Risk reward is quite favorable at these levels. So recommending a buy here with a target of 850 and a stop loss of 795 levels.
Point taken. Shivangi, the other one in terms of platform and new age tech is Zomato. Of course, Swiggy will give you very limited data from a technical standpoint. But what of Zomato in your view? One of the top gainers on the Nifty today.
Definitely QSR space has been one of the most favorite space to talk about in the previous year as well. Zomato, even though it did witness a little bit of a dent in the last 3 months, it has been, quite resilient as to maintain the support, at these levels of 200. So 200 has been a very important level for Zomato. Positionally as well, this one's to watch out for. But overall, this stock has been quite promising, and it does look for a good upside move from here. But of course, there will be a little bit of patience that will be required here. So, trading perspective, one can focus on 215 on an immediate level with a support of 205.
Okay, so that's the other one. The other one that's in focus is Galaxy Surfactants, Shivangi, and there was some interest from ICICI Pru yesterday on this one, but the stock on a tear currently. Give us your thoughts on what should one do at this point with regard to a counter like this, 8.5% higher, small piece being bitten into by an ICICI Pru mutual fund. But overall, what's your sense from a technical perspective?
So technically, this stock has been performing from the last 4 years. And in fact, wherever we've seen any kind of small pullback or a bounce, we've seen that those have not been respected and there has been lack of follow-up buying in this stock. So overall momentum is likely to continue missing in this one. And I recommend a wait and watch here. There has been a breakdown of an important support level of 22 levels, and even though today the stock has been moving well up by almost 8.5%, but overall we need to see if it sustains above 22 levels on a positional basis. Only then will it have a good risk reward.
Great. Shivangi, always a pleasure talking to you. Not different today as well. Thanks a lot for taking the time out and being with us. That's the view from Shivangi Sarda. Constructive on the markets. Now, it's such a difficult time, simply because, not difficult in terms of the market behavior, but in terms of the uncertainty that looms. What is it that where a chief strategy officer and director of Mirae Asset Capital Markets is thinking? Let's get in Manish Jain to ask him this question and more. Manish, good having you. Thanks so much for joining in. I believe it's the first time that we're talking to you on NDTV Profit, so welcome. How are you guys thinking about this whole piece? And yes, the systematic investor will continue, but for somebody who's thinking about it tactically, does this have the potential to bring the house down, or do you believe it will largely be a non-event?
So, first of all, thanks for having me here, and look forward to having these kind of interactions.
Sure.
So, uncertainty, I think I had been hearing this word from you, and we have also been talking about it. Frankly, that's going to be the word here, and nobody would have a clue that in which direction it will go, and given the way the administration has been behaving, my sense is that it is possible that you go to one extreme, and then basis the negotiation that where the other countries are and where the tariff elements are, you start retreating a bit. So a scenario could be that you go to one extreme and then start moderating a little bit. So that's one possible scenario I can think of as of now.
Right, Manish. Manish, Harsh Saita also joining in.
Hi.
So Manish, how do you therefore play markets at this point? Do you see markets also going or rather having built in a lot of negativity, or do you believe that they've largely remained neutral, at least the Indian market, and are playing wait and watch?
If you frankly look at from the tariff parity perspective, the impact should not be really very high. We are sitting at 9.45% on an average tariff on US product vis-a-vis, US charges around 3%. So there is a 6.5% differential, and that translates to $9 to $10 billion. Now, coming to your question, that has it been factored in? So there are two things here. If you look at from the valuation perspective, the valuations have cooled off a bit. So am I comfortable at this valuation level? The answer is yes. But would I really take a bet as of now? Answer is no, because the uncertainty is really very high, and it can move in any direction. So for me to take a bet, as you said, yes, the systematic investment can continue, but my lump sum investment would definitely wait here, Harsh. I think I will get a better opportunity in this volatile times.
Point taken. So, what's the downside here in your opinion, therefore, Manish? Do you see another 10%, 20%? When do you start getting comfortable?
I'm not in a camp of 10-20% as of now. So,
sure.
With respect to downside, if you look at, let's look at it statistically. So, -1 standard deviation from 10-year mean comes at around 16.4. And that gave a level of around 22,000, which we saw, I think, in the first week of March. So from the current level, that's only 5 to 6% downside. But I would like to play out one more scenario here, that, the tariff imposition is pretty uncertain. And along with the PE derating, what could derate is the EPS. So if the EPS downgrade happens, then you can post a scenario where your Nifty can go below 20,000. So I'll frankly wait to see that how the earnings pan out. And if this earning season and the subsequent ones, if they start reflecting the cuts in the EPS, that's where I would look for, say, more than 10% downside here. Otherwise, first leg would be around 5 to 6%.
Okay, point taken. You've basically upgraded a couple of IT stocks. So within the stock specific basket that you've put out, you've said Infosys, Wipro are upgrades for FY27. Why do you say so? What's keeping you positive with regard to these two names in particular, and what of the broader IT basket? What's your sense with regard to that?
Harsh, what we are saying, that a company which can exhibit strong execution and has robust growth and reasonable valuation, I think they will continue to perform well. But if you ask me the overall IT pack, in terms of large IT services companies, I would expect deceleration in revenue growth. And, it is stemming from the fact that the macro factors currently are not looking good. And there could be, some potential recession talks in the US, given that the jobs are under threat and the yields are running very high, and the tariff imposition could be inflationary. So from that perspective, while one would look at the multiples have corrected, and the IT pack has also corrected more than the broader market, but you are still trading at higher than the pre-COVID level. So on a select stocks, without taking the name of the stocks, I would be very cautious if they are able to exhibit strong execution, growth, and valuation. Otherwise, I will frankly be very cautious on this sector as of now.
Manish, have you guys done some thoughts around themes which could be significantly impacted from the tariff differentials, or is the base case that there will be bottom-up solutions reached? Because almost everybody seems to believe that agriculture will not be touched, or the government will strike some deal on agri, but on a clutch of others. It will be automobile components, for example, or for that matter, even gems and jewelry and pharmaceuticals, which could have some impact. Any thoughts here?
Yeah, so you are right. Some of the sectors we believe may not be touched, and one could be pharma generics. So if they touch it, then their own healthcare and medical care cost goes up. So one can then think of that: can this remain untouched? But if we really look at the broader market perspective, one study which we did is that when the market really starts going down, and we did this study for a period of when the market correction started from October, November onwards, and then the correction lasted all the way till March first week. Even the companies which had strong earnings, even the companies which we thought could be, winner out of this tariff threat, we saw that even in those stocks there were corrections. So while yes, there could be a less downside in some of the sectors, maybe agri and maybe pharma, but if the uncertainty brings down the overall market, then I would really stay away even from these sectors. But to answer your question, that it could be that food products, vegetable tariffs, etc. India's export share to the US is on a lower side, so there you may expect that your overall impact is going to be lower here, and the reciprocal tariff impact on certain sectors like chemical, footwear, automobile, textile would be higher. So some of these sectors you might like to be careful.
Okay, Manish, we'll leave it at that note. Thanks so much for taking the time out and giving us your thoughts. Really appreciate your time.
Thank you.
That's the view from Mirae Asset Capital Markets. Let's take stock of the markets at large and what's happening thereof. Remember, we've done okay, as we said when we started the show, and I think we're still holding on. In fact, Nifty IT's packed some serious punch. So that is 0.7% higher, which is actually very, very good. Volatility is down, in fact. So there is not a bad morning. Keynes is up. Dixon has been up for the past few days. Amber has not done too badly. In fact, speaking of Amber or Amber Enterprises, we spoke to Jasbir Singh of Amber, and here's what he had to say about the recently announced PLI schemes for electronics maker and the impact on the margins.
Well, I think overall console numbers will definitely go up once the electronics division starts moving towards the double-digit numbers. So we are expecting our electronics division to touch double-digit numbers as soon as we implement this incentives, capex for this incentive scheme announced. So maybe by 27, 28, we should see our electronics division going towards a double-digit, which will also increase the overall Amber console numbers towards, maybe 9.5% type.
he sold most of his stock, 80% as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Real estate might look to sell their paper business to ITC. So that would be an interesting deal, not too big for ITC, but from AB Real Estate's perspective currently.
On the 20th, he reported this in his segment Heard on the Street, which runs at 2:30 p.m. every day.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers. Welcome back. You're watching India Market Close here on NDTV Profit. 2:30 it is, and as every day, Samit brings us all the latest with regard to what's the chatter in dealing rooms. Samit, what are you hearing today?
Well, most of the focus when it comes to for dealers is on the Q4 updates that is expected to come in anytime soon, and chatter and the stock movement are largely related to on that basis only. Firstly, it's on Bajaj Finance and M&M Finance. What dealers are expecting or indicating is that the Q4 updates could be a bit on the weakish side for both these companies. Specifically for M&M Finance, they are also expecting some issues when it comes to collections, and asset quality could also be on the weaker side, and hence M&M Finance in fact is down 3% in trade, while Bajaj Finance is down or just flat currently in trade. The second on the list is Indigo and Tata Steel. Now both these counters are seeing strong buy flows on the FI desk. That's what the dealers are indicating. For Indigo again, Q4 would be strong as per the first hand preview reports that have come in. and that's naturally because of Mahakumbh as well. And third on the list is Laurus Labs. Now, what dealers are indicating is that there is a strong buy flow when it comes to HNI desk on Laurus Labs, and that is on the back of strong March 2025 export sales number. That is what the dealers are expecting to happen for Laurus Labs. The numbers should come out in the next 1 week or so for Laurus Labs, so keep an eye out for that counter. And IDFC First Bank, that's the last counter on the list. Now, Q4 updates could be on the weakish side or weaker side for IDFC First, but what the street is anticipating is that there's a potential fundraise that could come in for IDFC First Bank. A preferential issue is what the street is expecting from IDFC Bank to come in going forward. So keep an eye out for IDFC First Bank as well.
Not sure whether they require one, Sumit and Neeraj, frankly. 16% is their capital adequacy, so fairly healthy in terms of capital adequacy, but depends on the cadre and quality of investor also coming in. Right. If it's a big one, then it may well be
I guess Warburg is still invested, right? In IDFC
I would believe so. I can maybe quickly check, but yeah, I mean, so but cadre of investor, I think,
yes, the
more important than
exactly.
More important than the capital adequacy or otherwise. Yeah, so that's how it is. Warburg at this point, don't see it on the list of investors. Cloverdale has exited. But anyway, okay, let's quickly go across to Avinash, who's joining us, Director Research. Thank you first off, Sumit. We'll let you go on that note. Let me go across to Avinash Gorakshekar, Director Research at Profitmart Securities, joining us. Avinash, the lenders per se, there's plenty of focus on lenders, and before I take your views with regard to the market in general, you've got easing of liquidity, you have another RBI possible positive coming next week, likely. You're also seeing a tepid Q4 in terms of asset quality. How should we look at this? Some positives, some negatives. How do you play financials at this point?
Yeah, I think, Harsh, good afternoon.
Good afternoon.
See, my sense is that, the fourth quarter numbers are going to be more or less in line. No big positive surprises, expected from the banking and financial pack. I think clearly once we get the business outlook and the commentaries, from the managements on how the fourth quarter has panned out, one would get a better assessment. But my sense is that some of the NBFCs like Bajaj Finance or typically Shriram Finance, I think appear to be quite, well positioned. Especially for the fact that ground level, activity indicates that they would definitely do better, as regards the fourth quarter if you compare it with the third quarter, that is December. Clearly, I think the bigger, kind of revenue growth or the margin improvement could possibly be seen in the current financial year, that is from the first quarter of FY26 onwards. So I think, what would be very important to clearly watch out for would be the kind of commentary from these managements, specifically from the banking and the NBFC space. PSU banks also, our sense is that most of the negatives are built into the price. We've been seeing many large public sector banks like Canara Bank, PNB, Bank of Baroda, almost trading at their book value or below their book values. I think currently, my sense is the larger cap banks would possibly get a further amount of re-rating push, because these banks are large balance sheet banks. And despite that, these banks have been beaten down. So I think probably from the April quarter, you could see some activity. But yes, in the fourth quarter, the commentary will be important and how the narrative plays out, because clearly, I think most of the negatives are built into the price. So I think we have been telling our clients to buy slowly some of the PSU banks, apart from private sector banks like ICICI Bank, Canara Bank, Bank of Baroda do look attractive. But I think you need to give in a quarter more to see what kind of number improvement comes in the first quarter. And hopefully, this time the RBI governor may not reward the market with a rate cut, because the commentary again will be important. I think looking at the global headwinds, especially from the tariff issue, and obviously considering that monsoon has not yet set in, I would believe that it's probably some more time before we see a rate cut coming in the Indian markets.
Got it. Okay, Avinash, there is a fair degree of downtick that we've seen in some of the renewable energy companies today. A brokerage house said that they've downgraded because there are a lot of risks to the downside. Any thoughts on the likes of Vari or Premier Energies? On a good day, they are down today.
No, I think Neeraj, you've been mentioning the Bernstein report,
Yes.
which was actually downgraded to both Premier and Vari Energies. See, I think clearly, reading that report clearly makes a point which they've been mentioning that after FY27, most of these players would be coming up with large incremental capacities, and that could further, mean that more supply could come in the market. My sense is that, I think even at the current valuations, Neeraj, these stocks are fair to expensive kind of stocks. And I think looking at the headwinds from the US markets, Vari is a large exporter to the US. So I think we'll have to wait and watch for at least a couple of quarters. I wouldn't hesitate to, wait for some more time, maybe the June quarter and the September quarter before things settle down, because this is also one area where I think companies are going to definitely be impacted. So I think domestically the business is growing very rapidly, but valuations are not cheap. So valuations are fair to expensive, and I think I would prefer to wait for some more time here.
Understood. Okay. Also joining us, Kush Bora, founder kushbora.com, to talk to us about technicals. Welcome, Kush. Good afternoon. Quick check with regard to how you're viewing levels on the Nifty and the Nifty Bank first off.
Hi, Harsh. Very good afternoon.
Good afternoon.
Well, not too surprising. I mean, what we saw yesterday, as we mentioned, was shaving off some of the excesses that were built in the late, late moves that we saw in the second half of March. Also, I think there was a bit of a catch-up rally that we missed in line with global markets on Monday. Right now, I think the market's just positioning itself, quite neutrally, because if you see there is some short covering rally that's taking place in Nifty. If you consider the future, mild long build-up on Bank Nifty, but hovering around the 200-day moving average. So all in all, I think this is a neutral position. Also, the PCR, which had actually come very close to the oversold territories of 0.7 to 0.73, have actually now become neutral both on the Nifty and the Bank Nifty, and are close to 0.94, 0.95 thereabouts. So I think the markets are positioning themselves rather neutrally. I think everyone would want to, and quite rightly so, see the event out of the way and then take a directional call. At the moment, not considering the event-specific volatility, if you look at the options data, for the expiry which is lined up tomorrow, 23,300 call base has been rather significant and piling on. Also, then you've got the 22,200 put base that is, adding quite a bit of open interest. So I think the near-term resistance of the 23,300, 23,400 mark is in place, seems to be acting up even now, and we're currently testing that. But on the downside, I think more meaningful support come in at 23,200 and 23,000 levels. So I would wait and watch. As long as the 22,800 mark is held, I think this rally, that started early March is in good stead. And any dip closer to the 23,000 mark should be actually taken as a buying opportunity. Bank Nifty is holding on to the 200-day moving average for now. What I'm actually more interested in seeing, rather than the levels, is that whatever we saw in the last week of March, where the FIS came in as buyers, is that a more sustainable trend, or is it going to perhaps be a flash in the pan? If it's a more sustainable trend, then the Bank Nifty momentum will continue, and then 52,000, 52,700 kind of levels also come into play. So right now, constructive on both the indices. Buy on dips is the stance, but yeah, you'd want to perhaps just wait for a day, get the event out, and then take a position.
Are you trading stocks in, if that is the opinion, Kush?
Most definitely, Neeraj, because yesterday, even in the market where the Nifty was down about 1.5%, the breadth was very strong. The small and the mid cap spaces, even though down, were not really as badly hit, and that theme seems to be continuing today as well. So still going with two long calls. One of them is on PTC and the other second on PCBL. PTC India has been our call for the last week, 10 days, has been gaining good strength. Volumes have been fairly okay, but the price action has been very encouraging. So from a near-term perspective, you could still play this one for levels of 172 and 177, 163 being your stop loss. PCBL2 has actually had a good breakout, but consolidated for the last 4 or 5 sessions. Now it's back up, onto its winning ways. 415 is a good support zone, so that should act as a stop loss. On the way up, 445 and 460 are your targets.
Kush, a couple of stocks buzzing in trade. One is a Tata Consumer. Wanted your quick thoughts from a technical perspective. What's the sense at this point? 7.5% move.
Well, very big move today. It's now hitting the overheated territories on the hourly chart and also the 200-day moving average on the daily chart. So I would actually, go out, book some profits, partially, if not fully. if the closing does indeed come above the 1060 mark, where it's trading at currently, then perhaps this rally could continue for some time. Otherwise, we've seen that, in the consumer space, at least, the rallies have come in and fizzled out, after a while. So for me, this is more of a profit booking opportunity. But if someone does want to ride the momentum, then you could book partially and hold the rest. The closing level above 1060, that's the key level to watch for, by the end of the day today.
Okay. And Kush, a couple of PSU banking stocks, I want to quickly pull them up. Something like a Central Bank of India, a UCO Bank yesterday, a Punjab and Sindh in trade yesterday as well, seeing some big moves. Now, the thesis here was that thinly capitalized in terms of free float being extremely thin. They've had their fundraisers very, very recently, and therefore the lock-in will expire maybe a month or so from now. But just talk to us about what levels you're looking out for on some of these names, because if someone has really gone ahead and built a position in any of these, what's the sense and how should you play this?
It doesn't look all that great, Harsh, if you ask me. I mean, there was a gap down yesterday, and you're seeing some follow through on the on Central Bank of India and UCO Bank as well today. So this is more of a continuation of the downfall that started somewhere in last quarter of last year, and hasn't really relented. Now, while you could argue that the volumes have been perhaps thinning, but not the case yesterday and today. So for me, I think it's more important to just wait and watch on these. But as you said, if you've got a position, my suggestion actually will be to exit, because they haven't participated in any kind of bounce back that the market saw in March as well. If you want to play the PSU theme, which I'm not in the favor of just yet, you could still consider the likes of Canara Bank, PNB. These are some of the names that have still actually done well, holding ground and gaining some territory even now. So if you want to play something like Canara Bank, your levels would be 86 is where you place stop loss. On the upside, you're looking at targets of 96 and 101. For someone, something like a PNB, you could place the stop loss near the 93 mark and play for levels of 100 and 104. So these are the names that I would actually be in. But if you want to be relatively safer, then HDFC Bank, Kotak Bank, and ICICI Banks of the world are the areas and are the stocks that you want to be in. Central Bank, UCO Bank for now is an avoid.
What is also likely an avoid is the stock that is correcting a bit today, and that is of course BEL, after the company missed its order inflow guidance for FY25. Anushi Johnson with the potential impact of this on the company. Anushi.
Right, so we saw yesterday a big update from BL wherein it reported its FY25 numbers both for the revenue and the order inflows which were there for the year. Now just a quarter back, if we saw what was the performance, and we had seen 11,000 crore of an order inflow, while the management still remained confident on maintaining a 25,000 crore of a run rate for the year in terms of where the order inflows are concerned. But what we saw in the final picture was 18,715 crore of an orders as against the guidance of 25,000 crores. So there was a 25% of a miss is what we are looking at in terms of where the inflows are concerned. If you look at the revenue numbers at 23,000, they've clocked in about a 16% of growth, which is in line. But it's the order inflows because of which the stock is taking a beating down in the market today. The order miss which we are seeing is on account of delay in finalization of 3 key orders. So some spillover impact is something that we can be expecting from the first quarter of FY26. So management commentary on the same is very important on this one. Order slippages amounted to about 6,285 crores. So this is the size that we should be looking out for. If you do note FY26, the company has already given a guidance. They are seeing about a 25,000 crore of order inflow from the QR SAM. So that's the quick reaction surface air missile. So 25,000 to 30,000 crore is the projection from this one order itself. Along with this, there's also a projection of 14,000 crore of an order, 14 to 15,000 of order for the next generation corvettes which are there. So big order ticket size orders that we are looking for. Bharat Electronics for FY26 size roughly adding to about 50,000 crore. If you look at the current order book, that stands at about 71,650 crore, which is still about 3x levels if we take the order book to bill ratio into consideration. Revenue, as said, has remained in the 16% line, which is there. Now on to what the brokerages have to say. We have a couple of notes out today. Firstly, on IIFL, they have mentioned maintained a buy call in this company, seeing a 20% of an upside here, seeing that the Q4 numbers and the FY25 numbers that we are seeing are, in terms of revenues were majorly in line, but it was the order inflows which were a miss. They also said that they still expect around a 16% CAGR growth to continue in terms of where the revenues are concerned, and do not foresee any risk to the FY26 estimates considering large ticket size orders which are expected in FY26. But however, the stock may see some near-term correction in terms of where the current order inflows were concerned. What Kotak is saying is Kotak has a negative view on the stock. They are retaining their sell call and seeing a target price of 260, saying that ability to sustain margins at the current peak remains uncertain for the company going forward. In fact, they've also revised the 26-27 estimates by 1.5% to 2.9%, accounting for these weak order inflows that we are looking at. However, they expect around 50,000 crore worth of size for the next year onwards. Macquarie, however, is the most optimistic on the stocks, maintaining an outperform rating, seeing a 25% of an upside here, saying that the provisional update suggests inline revenue growth, and they're not overly concerned on these order wins which are there, given the backlog, the 71,000 crore plus backlog that we are looking for the company, and believes that FY26 is going to be a pivotal year for Bharat Electronics. That's somewhat we are seeing. But it's the FY25 order inflows which was a miss this year, despite the management commentary remaining positive on achieving this 25,000 crore, because of which the stock is in correction today.
Okay, so thank you so much for that, Anushi. Avinash, let me come to you with regard to this one. Would it be a concern to you, or would you look at this as more of the FY25 drag that we've seen with regard to government orders coming through, and this is both on defense as well as infra. So just more broader lens on how you would view BEL in particular, and then maybe both these pockets.
No, I think, Harsh, clearly, the order inflow has been much significantly lower than what the management had estimated earlier. But I think, if you look at the backlog of orders which already BEL enjoys, I think almost 75 to 77,000 crores, I think you could see a stronger year emerging for FY26. And I think new orders are also going to come in. So my sense is that FY26 could be a lot better in terms of not only order wins, but better execution from the company side. And I think this correction is more sentimental, because this actually does not, negatively impact the company's business, because already they have a large order book to fulfill in the next 12 to 18 months. So our sense is that somebody who wants to take a longer term call on the defense business, BEL offers definitely a strong runway for growth, provided I think his timeline is at least 12 to 18 months. So I think around 280 to 285. One could definitely think of nibbling a small quantity here and allocating some funds here, because once new orders come in, I think the markets will again get elated and excited, because clearly some more large orders are expected to be coming in, and which are already there in the pipeline.
Okay. All right, Avinash. Thanks for that viewpoint coming in. Before I go across to our global guest, can we quickly also have a technical view if possible? Kush, very quickly a technical view on BEL.
Still very constructive. There's a range play on BEL where 265, 270 is the support zone, and 315 is the upper end of the band. So it's trading close to the lower end of the band. It has already seen a recovery from the low point of the day. This might just turn out to be a buying opportunity.
Excellent. Thank you so much for that. Now, quickly, we'll go across to our global guest. Of course, eye on the globe rather than on India at this point, and more US than anywhere else. David Morrison, Senior Market Analyst, Trade Nation, joining us this afternoon. Good morning, David. Very good speaking with you. Harsh here. I want to quickly take your view on what to expect tomorrow, both from an Asian perspective as well as from a European perspective. What's your sense?
Yeah, good afternoon. Actually, it's very, very nice to meet you again. It's a very, very difficult one to try and call. And I think that's really why we have the markets in a certain amount of disarray at the moment. A lot of traders just sitting on their hands ahead of this, and have been now struggling to really position themselves in what may be the right way ahead of President Trump's tariff announcement. Now, that's going to come later on tonight. In UK terms, that's going to be 9 p.m. BST. So it'll certainly be after all the European markets have closed. And in fact, the US exchanges as well. We'll just have the futures markets to go on. But it's such a difficult one to know because as things stand, we still have no idea of who is going to be affected by reciprocal tariffs. US Treasury Secretary Scott Bessent hinted that there might be a dirty 15 of the worst offenders, which are contributing to the US's trade position. President Donald Trump has sort of said no, that we're not limiting it at all. Far better to go for everyone. And the second ponderable or unknown at this point is whether the president and his team are just going to focus on reciprocating on tariffs. And so we're going to have 20% here, 25% there, whatever it may be. Or if he's also going to take into account the fact that countries like the UK have VAT as well, which he sees as unfair. And therefore, will these fresh tariffs take that into account as well, which means that we could have tariffs, in up to 50% on certain items. So I'm afraid that my answer really is very difficult to know how to take this. And I think we've just got to wait and see and hear what he says.
Point taken. David, for context of viewers, I want to quickly mark out how Europe is doing because you referred to it. Stock 600 is down around 0.2% thereabouts. The DAX is down 1%. FTSE down 0.5%, the CAC down 0.5% as well. So you're seeing across Europe indices trading in the red, and you're seeing healthcare stocks especially take a bit of a knock in trade today, 2% or lower. Healthcare stocks in Europe, I mean. So David, therefore, given all of this uncertainty and given that you might see light at the end of the tunnel, I want to quickly understand from you the US perspective on this, because there'll be supply chain disruptions, and therefore the more rational thing to do is to ease some of these in. What's the impact there with regard to the macro that you are seeing as a result of all of this uncertainty, and possibly on whatever measures that come out today, because some measures likely will come through?
Yes, absolutely. Well, I think we've seen the starkest reaction to date from auto companies over in the US, who are really saying, hang on a second, this 25% tariff on all US imports of cars is going to be a disaster, as are, of course, the cross-border tariffs with Canada and Mexico, because the whole manufacturing process for vehicles is so complex, and individual parts cross borders multiple times before you actually produce the vehicle. So it's going to be an absolute nightmare to implement these tariffs, and it's going to, add a considerable amount to the price of a vehicle. Now, that could mean that people just stop buying cars from abroad and focus and buy their own vehicles that are manufactured in the US, so perhaps exempt from this kind of tariff, although the auto parts may not be. But it just goes to show the incredible complexity of not only announcing tariffs, but then implementing them. And at the bottom line, the cost for the US of imposing tariffs must be borne, I would imagine, by the manufacturers of these pieces, the importers of various bits that go together to make a car or whatever, and then ultimately the consumer. Now, the consumer, when it comes to a car, has a choice. They may choose not to buy that car. They may buy a second-hand car, and we've actually seen evidence of the companies involved in the second-hand car market have actually soared in recent days on this expectation. But a broader point I'd also say is I think that the rally that we saw when President Trump won the election back in November across US indices, we saw big gains of 5%, 6%. Russell, the S&P, the Russell was outstanding. This is a mid-cap domestically focused stock market. And that was up 14%, while the broader market was only up 5%. Now, we've seen that completely reverse recently over the last few months. And I would say that I think that for a lot of people in the US, they're not really interested in tariffs. what they wanted, they saw President Trump as a businessman. They saw him as he promised to cut taxes and deregulate. And that was all very positive. But now there's so much confusion around tariffs for us outside the US and indeed for those inside the US as well, that it really does seem to be just freezing everything up. And that is bad. Now, whether we get clarity after tonight, if we do, then at least a line in the sand has been drawn and maybe markets can rally from there. But again, if these tariffs are as far-reaching as they could be, that could just send everyone into a bit of a funk again, and we could see a further round of selling on stock markets around the world.
David, fascinating. Your voice signals the amount of uncertainty that's there, and therefore gold in this environment has done very, very well. What next for that one, according to you?
Oh, well, gold is getting to be quite a difficult call now because, as you say, it has gone up so far, so fast, particularly the last couple of months where we've really had this takeoff in prices, trading just below $3,150 just on Monday. We have pulled back a little bit from that, but we are firmer again this morning. And looking at it chart-wise, the price does look very overextended. Looking at the daily MACD, it's certainly back in overbought territory. We last saw this in the early part of February, where the daily MACD is approaching those overbought levels right now, which suggests that we are overdue a pullback. But as things stand, gold is very much in favor and pullbacks are getting bought into. I don't know where we are with gold, really. I can't see whether we have topped and we are now due to just sort of pull back, or whether we are due a bit of a correction and then gold prices go higher from here. But it's been out of the headlines for a very long time, so it is good to see gold being talked about again.
Okay. All right, David, thank you so much. We'll let you go on that note. Been a very, very interesting chat. And of course, it's going to be a very, very interesting next couple of days, not only from a tariff commentary perspective, but also as to how markets are going to respond to that. So it will be great having a conversation maybe in the next 2 to 3 days to try and understand this.
That would be good.
Thanks for taking out time. Anyway, we'll slip into a very short break. On the other side, we'll get you top buy today, sell tomorrow ideas. And we'll talk about a couple of stocks, in particular, some of the retail names. A V-Mart, a V2, a Trent, TCPL, of course. We'll talk about all of those and more. Stay tuned. He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
AP Real Estate might look to sell their paper business to ITC. So that would be an interesting deal, not too big for ITC, but from AB Real Estate's perspective currently.
On the 20th, he reported this in his segment Heard on the Street, which runs at 2:30 p.m. every day.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Welcome back. Half an hour to go for markets to close, and it seems like some of the fears that have been plaguing Indian markets last couple of days are being shrugged off. Is there a sense that perhaps what we will see in the next 12 hours or so coming in from the White House might not be as bad as expected? Look at that. Nifty near the high point of the day. Sharp improvement on those charts as well, and upward move. Now, one of the stocks that is in focus and is definitely leading that charge is Tata Consumer. Now, Tata Consumer is a truly interesting kind of trade that you've seen today. It has been rock solid steady, 7.5% up for a Nifty stock and for a stock that doesn't move that much usually. Now, the trigger on the face of it seems to be a Goldman Sachs report that has upgraded its rating on the stock, has raised its target price, but is there more that meets the eye? Mahima is joining us for both the bull case, which echoes in part what Goldman Sachs says, but the bear case as well. Mahima, take it away.
Right. There are multiple reasons as to why Tata Consumer has been, one of the preferred picks in the FMCG space as well. But here's what is working and what's not working for the counter. First one, where EPS is concerned, EPS has declined over the past few quarters. We've seen 9 months FY25 EPS declined by around 8.4%, and this is on the back of sharp inflation in tea cost. Plus, there's competitive headwinds coming in the beverage space with Campa Cola also coming in. EPS dilution has also taken place because of acquisition of Capital Foods as well as Organic India. But Goldman Sachs experts suggest that there will be strong EPS growth from FY26, and the reason for the same will be recovery in tea margins as well as the price hikes that are being taken in the tea space. Strong innovation and distribution expansion, the growth business will augur growth, and overall lower net interest cost as acquisition debt is now paid down will be something that will lead to EPS growth. Moving on to how Q3 panned out for the counter, where India business grew by around 23%, but overall EBITDA margins were impacted by tea cost inflation. In terms of the beverage business, there has been increased trade margins for the entire beverage business, and targets have been scaled up for the energy drinks as well as value-added water and some jelly drinks as well. But beverage growth has slowed in FY25, and this is due to competition that is being coming in from new entrants as well as the competition that is coming in from the unorganized space. In terms of profitability in the international business in Q3 improved by around 35% YOY, but overall profitability saw a sharp decline, and this was because of higher amortization interest costs, as well as this was the reason as to why the margins were also impacted. In terms of why Goldman Sachs is overall positive on something like a Tata Consumer, it's because that they are thinking that the growth business, which has increased to almost 17% of the total business now, is something that will bring in overall growth to the top line as well as bottom line going forward.
Okay, interesting. I think a couple of key points here, Mahima, with regard to a possible recovery when it comes to Tata Consumer will surely be the beverages business and the fact that your tea will get better in terms of both cost pressures. Do you expect that to start to unwind, and what should the trigger for that be? Competition continues to remain. What's changing there?
They have basically shifted and added a lot of new products to their portfolio where beverages is concerned, and where growth business is also concerned. When we're talking about the growth business, salt business, that is the Tata Sampann brand, is something that is really picking up, and a lot of analysts are expecting that this growth business will go from 17% to around 25% by the end of FY26, and that is something that will bring in growth in terms of top line as well as bottom line for something like a Tata Consumer.
In fact, I'm going to take that to Sandeep Agarwal, joining in on the conversation now, fund manager and co-founder, Sovilo Investment Managers. Sandeep, great to have you on the show. Thank you so much for speaking with us today. I'm going to start with your take on Tata Consumer, if any, because on the same day, you have quite a negative take on HUL and Nestle. So the consumption story cannot be seen in one broad brush, right?
Yeah, hi, good afternoon, and thanks for having me on the show. Yeah, as rightly mentioned by you, you cannot see nowadays markets have become very stock specific. Previous 2 years have been very kind. Everyone was seeing good rally, and the market was willing to take a risk. So that was a risk on scenario. Now with risk of scenario kicking off in last 4, 5, 6 months, everything has become very stock specific. So you may have a view on a sector, but the view on the specific stock is more relevant. So I think yes. In Tata Consumer, what is happening is that size is in their favor. The products are good and they are seeing good traction. Valuation, as usual, FMCG, I have never found them to be cheap, and that is the only concern which remains. So valuation remains very demanding. Obviously, if they can continue to grow profit at a higher pace, I think that, valuations will remain expensive. That is the way I look at the stock.
Okay, Kush, I want to come to you. I know you've probably commented on Tata Consumer earlier, but let me add HUL and Nestle as well. Anything over here that you're seeing with potential right now?
Let me add one more name which has potential, Tamanna, which is Britannia.
Okay.
This is one stock which has actually done well, consolidated, given a good breakout after about a month of consolidation. 48.75 was the level where it resisted for a while. The 50-day moving average also comes in at that level. But today, if you see, it's got that good breakout. My apprehension, though, the reason being, and the same applies for something like an HUL or the Nestle's of the world, which is that even though the price movement has been mildly positive, at least for Britannia it has been, the volume action has been missing. But what's heartening to see is that there is some flavor returning in the sector. It's not just Tata Consumer. If you see Godrej Consumer also hasn't really moved as much as Tata Consumer, but in the last about month and a half, even this has gained about 20% or so. The volumes are also picking up. So in pockets, sporadically, these some of these stocks are starting to gain traction where about a month or so ago the entire pack was perhaps brushed away. So I will be a little more specific here. And just to recap that conversation on Tata Consumer, 1060 is the 200-day moving average resistance. If the closing comes in above that, then this momentum could continue. I would anyway take this opportunity to book out partially and hold only partial position. This 1060 resistance might just act up today or maybe in the coming days also. I know it's marginally above that, but once this level is taken out, 1160, once this level is taken out, that's when you could see some more traction on the upside. So closing should happen above this level.
Okay, so closing today, you're saying over 1160 on Tata Consumers?
Yeah, that's correct. That's where this momentum could actually accelerate further, and that's when you will see much higher targets also come into play. So for now, you might just
that's great. That's another 100 rupees in the next 20 minutes that you're talking about. I mean, if you break it down like that, are you feeling as excited about Zomato, since we're talking about consumption story and Zomato sort of found its feet after a bit?
Well, not too positive here. I'll tell you why. The 200-day support is acting. The 200-day rupee support is acting on this one just yet. The volume pickup that we saw a couple of sessions ago was more of the rebalancing with the inclusion in the Nifty. Other than that, there is a descending trend line formation at play, which basically means that you're taking support at a particular level, but at every rise you're seeing some selling opportunity. So for me, the critical level on this one to watch is 222, the 222 mark. If that is taken out, then the near-term downtrend will actually be negated. But if the 200 level is broken, then the stock could see some more downside. So for me, right now it's in a bit of a limbo state. So wait and watch, on this one. See it cross these certain levels, either 200 on the downside or 222 on the upside, and that's when you could see some change in direction.
Okay, we're staying with the retail consumption theme, and the retail sector has actually been buzzing in trade today after major players have come up with their updates. V2 Retail, Bazaar Style and V-Mart, three of them at least in focus, came up with their quarterly business updates, and this is an important set of numbers that the street needs to look at. I mean, we're spending a lot of time talking about tariffs, etc., but domestically that's the big story. Mahima is joining in with the highlights.
Right, so I'll start with V2 Retail, and it's interesting because all three counters operate in tier 2, tier 3 cities, and we've seen that the quarter gone by, that is quarter 3, was also pretty strong for all of these counters. To start with V2 Retail, the Q4 performance, revenue growth of around 69% for this quarter, YOY same-store sales growth of around 24%. Sales per square feet has increased to 896 versus that of 830 earlier, and overall they've added 29 stores in Q4. In terms of full year performance, revenue growth is at 62%, same-store sales growth at 29%. They opened 74 stores and overall closed only 2 underperforming stores in the entire year. The next one is Bazaar Style. In terms of Q4 performance, revenue growth of 55%. Sales per square feet has increased to 679 per month. Same-store sales growth stood at 20%, and they added 15 new stores in Q4. In terms of full year performance, revenue growth of 38% for the counter. Sales per square feet grew by around 12% year on year, and total rental area also increased by 31% for the counter. Lastly, V-Mart Retail is also in focus, and again on the back of its business update. Q4 sales increased by 17% to 780 crores. Q4 same-store sales growth has been at around 8%, so slightly lower and in single digits as compared to where V2 Retail and Bazaar Style performance is concerned. And they opened overall 13 new stores and closed 4 new stores in this particular quarter. So these are the business updates with regards to all of these three retailers which operate in tier 2 and tier 3 cities.
I think it's heartening. And Sandeep, since we've been sticking to the consumption theme, let me come back to you on that. That in tier 2, tier 3, if you're seeing a pickup that retailers are reporting, maybe you're not in for as bad a quarter as was penciled in.
No, this space, the good part is that, you can have misses for 1 or 2 quarters, but generally it comes back very strongly. And we like this space from a longer term perspective, and we believe that, in India, the way per capita income is going up, the way urbanization is happening, and the way these stores themselves are reaching out into penetrating in the towns and the second-tier cities and towns. I think, there is a huge scope for growth because, nowadays with time being constrained, most of the consumer prefer to go at a particular place where they can get their choice of apparels, everything together and all that. So those things are pushing it. And I think this move from unorganized to organized retail will keep on increasing, and that will keep on supporting the sector. Only thing is we must always be careful about the valuations. Sometimes the valuation go through the roof, and that is when, either you will have to go to price correction or maybe, time correction.
Okay. The other factor that I want to bring up with you, Sandeep, and this is something that you track very closely, is the recovery that we've seen in IT. It's coming at an important time as we're waiting for tariffs clarity to come in. And look at the JP Morgan note today on IT, where they are saying that Q4 will see uncertain macro impact. They expect FY26 to show no growth acceleration no growth acceleration as a base case. And this is the new reality. I mean, JP Morgan, and I'm sure you saw the note, we're showing those lines on our screen as well, Sandeep, was not very excited about the IT pack, yet you are seeing some recovery here. What is your take as we wait for the first set of numbers to hit in Q4?
So, last year was the one I will reiterate, and every time I have reiterated this, that was the time when maximum fear was there and it should have been bought. Now we are going through disruption, we are going through fears of recession in US, and we are also going through fears of tariff and all those things. So I will reiterate, which I have been saying for some time now, last 3-4 months, that all positives which can be there are there in analyst estimate. But what is not there in analyst estimate is if there is any cost which will be imposed for doing business in the most developed market because of some tariff or indirect cost pressure, that is something which is still not in the numbers. So I will say that, and the stocks are not cheap at all. We are seeing, the large caps at 3-4 times PEG ratio and mid and small caps even higher than that. So at this PEG ratio with such less growth, I don't know how will anyone make money, only unless you see it as a, FCF yield story or dividend story. Other than that, the rationale to buy them at this multiple still looks difficult. So we are very, very cautious with the valuation. We like all the companies, but not at this price.
Okay. All right. Thanks for that, Sandeep. Thanks for those views. But let's quickly look at two stocks and chemicals basket, SRF and Deepak, both of them flying in trade. Varsha's here to give us perspective on what's happening. Varsha.
Thank you for that. Let me start with SRF. SRF is buzzing now because refrigerant gas refrigerant gas are used in your ACs and refrigerators. So the refrigerant gas prices inch higher in domestic market. If you see price of R22, that is one of the refrigerant gas that SRF makes, is up 15% from rupees 650 per kg to 750 rupees per kg. And R32 prices have also increased to 550 per kg. And the previous price was for R32 gas was 450. So there has been considerable increase in the prices of these gases. And there's current short supply of R32 gas also, and the new price list will be expected soon. If you see why SRF is in focus, because 29,000 to 30,000 of so SRF makes almost 29,000 to 30,000 tons of R32 gas, and every $1 per kilogram increase in prices of R32 refrigerant could boost EBITDA by rupees 260 crore. Now this is for SRF, this is as per Aquarius note. So this is the reason, because of that increase in the refrigerant prices, which will actually help SRF to increase their realization of the product, which will help increase sales in Q4. This is the reason why SRF is up in trade today. While next stock is Deepak Fertilizers. Now Ekima which is a major European fertilizer, have halted production of ammonia and ammonium nitrate production. Now halt is from May 15th, and this removes 15% of Western Europe ammonia output. Now Ekima's shutdown removes 1.11 million tons of ammonium capacity. Now why Deepak Fertilizer is in focus? Because they have built 500 kilotons per annum of ammonium plant for backward integration, which will be used, 70% of this will be used for their internal needs, while 30% they can sell in the open market at higher prices. So one benefit from that. The other one is because they are making it in-house, they will not require ammonia from outside at higher prices, which will increase their EBITDA margin in future. And the company also leads technical ammonium nitrite, and they are also working on a greenfield project when it comes to technical ammonium nitrite product. And this project will add 376 kilotons per annum of TAN production capacity, which will meet 60% of India's TAN demand.
Okay, thank you so much for that perspective, Varsha. Sandeep, some of these stocks really moving in trade today. Your views, if any?
So, I will refrain from giving stock-specific views. Sometimes by mistake I do give, but I will talk more on the sector. So I think the chemical basket has gone through very, very significant amount of time correction and even, real price correction as well. So every small piece of positive news will definitely trigger the sector, and I believe that the sector really has its own moat in the international and domestic market. Barring substantial risk of competition and dumping from China, I don't see any big risk in the sector. And if that risk is constrained, restrained, or managed well, I think all these stocks have gone through almost like 4-5 years of time price correction. So there's a huge upside which can be there in most of these names. It is just a matter of time and I think patience for the investors.
So time and patience. Sandeep, I'm going to ask you straight up. We have seen a substantial improvement and an upward correction towards the latter half of the trading day today. We are nearing the 23,300 mark. And if the tariff impact is not as bad as is being expected, you could see a huge up move tomorrow. What would be your top picks right now? What would you stick your neck out and want to buy before you miss the bus?
So, we are quite positive on some spaces within the building material space because real estate has done quite well in last 2-3 years. So the time for, completing those unfinished projects, completing the apartments, some of the products which are used, they come at much later stage in the real estate side. So I will be very positive on the building material space. We are selectively positive on some of the chemical names. We are selectively positive on some of the NBFC names. We are also quite positive on the power ancillary side, cables, wires, transformers, but again, keeping in mind the valuation. We are also very positive on the QSR space. So these are the broad areas where we are very, very positive. We have started looking at some of the consumer names which have corrected materially. So those are the areas where we are very much focused and we like those spaces. Selective pharma names also. We are avoiding currently sectors where valuations or the PEG ratios are much higher. So we are avoiding them. Otherwise, we are positive in most of the sectors, but within the sector on some specific stocks because our valuation criteria, we are okay with little lower growth, but we won't give very high multiple. That is the philosophy.
So, apologies, Sandeep. Define high multiple.
So that is the reason we choose to go by PEG ratios because that captures that is a it is a much better relative term.
No, fair point. So give us what is the PEG ratio therefore that you look for, because you seem to be more conservative on that count.
So for a high growth industry, I am okay to give you a PEG ratio of 3-4 times also because it may be 3-4 times in near term, but with passage of time that itself can come down to 1.5. So we are okay with giving PEG ratio of 3, 4, even 4.5 for high growth industries. But we are not okay to give, PEG ratio of even 2 for very low growth industries. So that is the way we look at it. So again, it is relative. So, very difficult. So it has to be clearly the industry, the flavor of the industry, the margins, the return ratios, the competition, a lot of hundreds of factors which has to be taken into account before we define what is high multiple. It is very, very stock specific and company specific.
Maybe we'll go sector wise, Sandeep, over the next 8 weeks, and every week we'll call you and we'll discuss one such thing. But Kush, let me come to you with regard to BTST because last 7 minutes we're already pushing this.
Sure. Ramco Cements, we've been discussing about the cement space. A lot of names have done well. Shree Cement, Ultratech in the past. That we've discussed, even Ambuja for that matter. Now I think it's Ramco Cements. That's made the cut. Good moves, volume back, 200-day moving average conquered. Comfortably trading above all the short-term and long-term averages. So can be considered as a positional bet as well. From a BTST perspective, 935, 950 are your targets. 905 is where you place that stop loss.
Kush, I would follow up by saying what would be a nifty call, if any, right now? I mean, I kind of asked Sandeep that question. You want to make sure you don't miss the bus tomorrow. How do you ensure you do that?
One way is to just go out and buy a straddle at 23,300. Whichever way the index goes, the expectation is that the move will be a big one, and hence you could get something. Plus, because it's the expiry tomorrow, you won't be paying too much theta. It's just that the opening trade that you'll have to sort it or close that trade out in. That's the easy bit. The preferred trade would be a long one. If I were to gun to my head kind of an answer, then the preferred trade would be a long one. 23,100 is where you place that stop loss, and for levels of 23,400, 23,500, you go long on the Nifty. But that's only if you really, really, really want to trade. Why not just give a couple of hours more and get the event out of the way, and then go in and jump jump onto a trade.
You would say look at fresh calls only tomorrow morning and get the event out of the way. People are talking about 23,800, Kush. You're not feeling comfortable having that conversation yet?
Oh, no, most definitely I am. That's why my preference is towards the long side. It's just that I don't really see the idea of playing, just before the event, such a heavy build up towards it. And, the markets have also been fairly volatile, running up to that. Now, while, the event aside, the setup right now is very positive. Why would you want to just not give it maybe another, 4 minutes and then decide tomorrow what you want to do?
Okay, last minute buzzers. I'm going to quickly move to that segment. Very quickly, Sandeep, we try to keep it very snappy on this one. So platform companies, several of them buzzing today. Zomato, Swiggy, Paytm, PB Fintech, all of them. You like them, you don't like them. How does it stand on your PEG ratio or otherwise? How should we look at it?
We like them all, but not at this price. They are very, very expensive. They don't fall within our investment philosophy from valuation perspective. They are still not making money, and the valuations are insane. So we will be waiting. We will be waiting for a better valuation.
Okay, Sandeep, what does Zomato have to fall to, for example, for you to be interested?
I won't comment on what a specific stock has to fall to, but sure. I would say that they have to become reasonable in terms of multiples.
Okay, so another 30% maybe, not Zomato, but in general.
I think they are very, very expensive right now. The numbers are not coming. The cash flows are not there. So we have to wait for some time, I think.
Okay. I won't push it further. All right. Kush, your call on an IndusInd Bank, has it changed at all?
No, it hasn't. It's still an avoid for me, especially when you've got a lot of other names, in the same space doing much better.
Okay. Kush, the IT space, haven't been able to take your views on that. A Tata Elixir is up 3, a KPIT is up 3, a Tech Mahindra is up 2.5, Persistent also. Any views on any of these? Would you go long?
Most of the sector is right now in a wait and watch to an avoid mode. The only ones that we like, are Brokerage and FSL. These are the ones that you should consider. A lot of moves that you're seeing today are, short covering trades, at best. So for now, if you want to focus, have a go where strength is, and we've seen enough and more of those in the likes of Brokerage and FSL. So stick to those names. The big ones, especially, don't make the cut yet. The HCL and the TCSs of the world don't make the cut yet.
Okay. I'm wondering if, Kush, you are feeling like there is more options in terms of, or more leeway in terms of private banks. Look at an HDFC today, an ICICI Bank. I reckon you will see perhaps a good FII number as well at the end of it, because private banks is where the money is possibly coming. An important factor that we're not keeping into consideration is that there are reports the amount of equity participation in PPF, etc., has also been upped. So maybe some money coming in from there as well. Are you liking the top private banks?
Absolutely. And just add one more name, which is Kotak Mahindra Bank, at a multi-year highs, sustaining above those levels, cooling off from oversold territory. So, it's got a few technical factors at least, going for it. So if banking was the play that you want to make, stick to the likes of HDFC, ICICI and the Kotaks of the world for sure.
Okay, Kush, thank you for that. Sandeep, yes or no answer, you like large private banks?
Yes.
Okay, thank you so much, Sandeep. Thank you so much, Kush, for all of those views. Last 30 seconds to close. Let's quickly look at where the Nifty is settling in at. We've breached 23,300. We're sitting pretty. Let's look at the intraday chart, likely sitting closer to the top. And we're up nearly 160 points. So surely very, very close to the day's highs, just off the day's highs. In fact, that bit of a spike largely led by the Nifty Bank. We can pull that one up as well. And there you go, that very, very identical kind of spike that we've seen in the Nifty Bank. That's what's driving the index. Let's look at the heat map with regard to the Nifty 50. Try and see how, the breath has only gotten better as the day has gone by. BEL, Nestle firmly in the negative. Nestle, there was an adverse note by Bank of America cutting target price by roughly 10% odds, and that's why it's sitting at sitting where it is. Tata Consumer, on the other hand, the exact reverse. Goldman Sachs, very, very positive, 7% higher. Zomato doing well in trade, 5% higher. Titan as well. And some of the retailers in focus today, a V2, a V-Mart, a Bazaar Style. Bazaar Style was up 20% in trade. So all of those in focus as well. You'll see some large private sector banks in focus as well. And HDFC was up 1.8 after it sulked in trade yesterday. ICICI up 1% as well. So it's a bit of a bounce back that we've seen on many of those counters. Reliance largely flat, and the IT stocks also have done fairly well for themselves. When you're looking at the sectoral heat map, if we can pull that up, we'll see that IT has had a reasonable bounce back versus where we were yesterday. Yesterday we had a dull day for IT, 2.5% lower. Today we're sitting pretty up around 0.8 odd % on the Nifty IT index. Realty is the other one that stood out for me, 3.5% higher on the Nifty Realty, and Nifty Pharma 0.9% higher as well. So those are some pockets which were suffering yesterday, but have made a bit of a bounce back today.
I would agree, Harsh, and I would say that bounce back is the name of the game that we are seeing. I mean, the smart money and perhaps the little braver money would say that more to continue tomorrow. The consensus seems to be, and we've spoken to so many people since this morning, saying that what we'll see over the next 12 hours might not be as bad as is expected. So let's
especially for India.
Especially from an Indian perspective. Let's pull up the advanced decline ratio as we close off and count down to what is happening there. And this is telling you the story about how the market breadth has turned and stayed steady towards the end of the game. We'll pull up the top gainers and losers also in the broader markets before we close out and give you a sense of what is happening there. And that's where it gets interesting. The consumption theme seems to be back. CSB Bank, increase in gold loans. Kalyan Jewellers, increase in gold loans. The sense that after the announcements tomorrow, gold prices are going to go up. And that really coming through. V-Mart, Harsh spoke about it as well, and which is why you're seeing some interest there. Bekaji Foods is coming off after the Haldiram effect, took it up yesterday. So a bit of a pullback there. Overall, from tomorrow's perspective, I would look out for pharma, I would look out for auto, I would look out for select agri-commodity plays as well, depending on what comes through. But that's going to be the big theme and big theory to see.
Yeah, absolutely. So anyway, so that kind of sums up the day, of course. Broader markets also doing fairly well for themselves. Now, it's cues for tomorrow because we zoom in on this one. This is the big one. President Trump speaks 1:30 a.m. our time, and we're going to be
live. Watch it live.
We're going to be live.
Profit.
So do watch it only on NDTV Profit. That's the big one. But outside of that, we'll just quickly try and cover all that you need to watch out for tomorrow. That's the dividend announcement, record date for United Spirits, 4 rupees. Let's take that out of the way. And we have the Indo-Farm Equipment shares to exit lock-in. So you might want to keep your eye out on this one. You might well see some movement on the stock tomorrow. So that's that. Of course, we'd like you to tune in at 1:30, listen in, and of course we'll come back tomorrow morning and we'll give you all that.
I think apart from what's happening with tariffs, business updates will be the other big one to watch as well. We are in that season, so domestically watch out for business updates, and of course globally for what Trump has to say. A lot of coverage on that going ahead as well, but for now, from Harsh, me and the team that put the show together, thank you so much for watching.
he sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Real estate might look to sell their paper business to ITC. So that would be an interesting deal, not too big for ITC, but from AB Real Estate's perspective currently.
On the 20th, he reported this in his segment Heard on the Street, which runs at 2:30 p.m. every day.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight to the show. Viewers, benchmark indices in wait and watch mode as Donald Trump-led tariffs take effect from tonight. The Nifty recovers intraday to end above the 23,300 levels. The Sensex ends above 76,600 mark. Broader market gathers strength, outperform benchmarks. All sectoral indices end higher. Realty reverses losses to become the top gainer today. Now up over 3%, consumer durables, pharma, media, FMCG, banks and auto follow. Rupee weakens 5 paise ahead of trade tensions dragging the currency as Donald Trump-led tariffs hit investor sentiment. India and other nations brace for tariffs from Donald Trump on April 2nd, what he labels as the Liberation Day, insisting that levies will free the United States from its reliance on foreign goods. Last week, Trump announced a 25% tariff on all auto imports and a similar tariff on steel and aluminium was implemented in March. So to mitigate the impact, India reduced taxes on auto imports. Now two-wheelers and passenger vehicle import tariff differential is at 67.5%, and but this high tariff could impact the ancillary exports of over $2.1 billion. For textiles, US accounts for around 28% of India's textile exports. Even with tariffs, India could remain competitive versus China. This essentially means that India may lose market share to Vietnam and Bangladesh. To mitigate the impact, India could lower tariffs on US cotton imports. Now, since over half of textile or the apparel imports in India in US cotton, reducing that could equalize or lower differentials. Pharma is not likely to see a major impact on the tariffs. Overall, pharma and related imports are around $800 million. The tariff differential here is 7.6% points, and which means that India can lower tariffs here. For food and related sector, high tariffs have been a barrier for protecting domestic production. To bridge the impact, India can decrease tariffs on alcohol, categories of prepared food and beverages. Electronics are India's largest exports to the US, and that stand to face the most hit from tariffs. Now, over half of India's electronics exports to US are mobile phones, iPhones. Reciprocal tariffs on India at the same rate would make iPhones more expensive for US. India imposes 15% tariffs on fully assembled phone imports. With 40% tariffs on China, there is incentive for Apple to move production to India. High-tech pipes stock dips despite achieving record sales in FY25. The total sales were about 4.5 million tons, which accounts to 8% increase on the year-on-year basis. Now, quarter 4 of FY25 sales were at 1.16 million tons, up 18% year-on-year. Bernstein has initiated a coverage on the solar PV or photovoltaic stocks. Believes that stocks like Vari Energies and Premier Energies will underperform and expect a moderate earning growth for these companies post FY27. Deepak Fertilizer stock is in focus after the ACMA, a major European fertilizer producer, halts ammonia production. The halt is from May 15 to quarter 3 of 2025. Now, ACMA's shutdown removes 1.11 million tons of ammonia capacity for Deepak Fertilizers. Additionally, it removes 651,000 tons of ammonia nitrate capacity. BEL is one of the top laggards on the Nifty. Macquarie maintains outperform on the company with target of 350 rupees. Now 25% of upside. Macquarie says that a provisional update suggests inline revenue growth. Macquarie says that it is not overly concerned on order wins and sees potential firming up of exports opportunities. JP Morgan sees modest quarter 4 of FY25 earnings for the IT sector. It expects FY26 to show, no growth acceleration as a base case. JP Morgan believes that FY26 guides to reflect a new reality and expects relief rallies in some of the more beaten down names. JP Morgan stock picks in the IT sector are Coforge, Infosys, Tech Mahindra, LTI Mindtree, KPI Tech, and the avoid list contains of TCS, Wipro, HCL Tech, Tata Tech, and Tata Elxsi. Morgan Stanley says that the four-wheeler sales in March end on a higher note, whereas two-wheelers lag. Passenger vehicle sales see an improvement due to higher discounts. Now, rural trends were supportive while exports across the equipment manufacturing grew well. Morgan Stanley picks Ashok Leyland, TVS, and Eicher as key positives. Now, this is on the back of improving EV penetration, driven by pre-buying ahead of incentive cut. Goldman Sachs upgrades Tata Consumer to buy and hikes target on the stock. Goldman believes that there is earnings inflection ahead for Tata Consumer. The company is set to achieve solid earnings per share in growth in FY25 to FY27. Innovation and distribution-led scale-up of growth business. Hindalco is in its investor day, talks about the outlook for Novelis and the company. Both the company says that Bay Minette will commence operations by FY27 end and taking the total capex expectation of $6 billion over FY26 to FY28. The company is targeting EBITDA or ton of $600 in medium to long term for Novelis. BofA Securities downgraded the shares of Nestle India to underperform from neutral with a target price of 2,140 rupees a piece. Now, this implies a downside potential of over 4% from the stock's previous closing price of 2,234 per share rupees. The international brokerage said that soft demand trends, cost pressures, and aggressive competition from multiple players have made the operating environment challenging. Now, this could affect the Nestle India in the near term. Shares of FMCG giant HUL slipped after BofA Securities downgrades the company to neutral and cuts targets to 2,330 rupees on the stock, citing a slower than expected recovery in growth and margins. Now, the brokerage flags macroeconomic headwinds and sluggish consumer demand, particularly in rural India. Now, BofA said that pricing constraints and inflationary pressures in key segments like tea and soaps could weigh on the company's near-term performance. MOIL hikes prices of ferrograde by 0.5% to 3% on manganese content. Now, prices of all chemical grades increased by 3%. All price hikes on prices prevalent on March 1. Now, price took effect from April 1. The hikes stand position for companies' realizations. India's FY25 defence exports jumped 12% year-on-year to 23,622 crore rupees. Defence public sector undertakings exports rally 43% to 8,389 crore rupees. Now, whereas private sector exports flat at 15,233 crore rupees. In some good news, the central public sector enterprises have given record high dividend in FY25. Now, this is the highest ever dividend payout. The most contribution comes in from Coal India, amounting to more than 10 crore rupees, followed by ONGC that has paid 10.2 crore rupees. As part of government's mega steel push, the new policy prioritizes local iron, steel in government contracts. Ministries' public sector undertakings will prioritize flat-rolled steel and related products. The items are required to prioritize items that meet the melt and pour condition within India. So to make this happen, global tenders barred for contracts worth up to 200 crore rupees. We had a conversation with Mark Matthews, Head of Research Asia at Julius Baer. Now, who said that the Indian markets are fairly valued. He's also optimistic that the earnings will return in double digit and India will become one of the best markets in the next 12 months. Quess Corp shares jump after the company's board sets April 15 as date of the demerger. The shareholders of the demerged company will be entitled to receive fully paid up equity shares of 10 rupee each of Digitide Solutions Limited and Blue Spring Enterprises. Now, the separate entities are expected to commence trading in the next 2 months. The trading will be subject to regulatory approvals. In order to further ease liquidity conditions, bank treasury officials have asked the Reserve Bank of India to cut the cash reserve ratio, two bankers told NDTV Profit. Now, the request was made during a meeting last week, the bankers said, on conditions of anonymity. Both bankers attended the meeting. Bankers urged the central bank to cut CRR for further durable liquidity infusion. The first quoted above said, lenders have been requesting the RBI to cut CRR by another 50 basis points to 3.5%. The banker said that on December 6, the central bank had lowered the CRR by 50 basis points to 4%. CSB Bank, in its business update, reported a 10.3% increase in total deposits at 36,861 crore rupees, up from 33,407 crore rupees. Now, in the previous quarter, the current account savings account, that is the CASA, so CASA deposits also increased by 10.9% to 8,918 crore rupees compared to 8,042 crore rupees in the third quarter. Gross advances witnessed a 10.3% increase to 31,843 crore rupees from 28,915 crore rupees in the previous quarter. V-Mart Retail, in its Q4 business update, says that the company's revenue increased 17% to 780 crore rupees for the quarter ended on March 31, of 2025, which is the quarter 4 of FY25. Now, as against 669 crore rupees in the corresponding period last fiscal. So, V-Mart said that it has opened 30 new stores and closed 4 stores during the quarter under review. The total number of stores now stands at 497. Bharti Airtel shares jump after the telecom major announced an expanded partnership with Nokia to enhance its network capabilities. Under this deal, Airtel will deploy Nokia's packet core appliance-based and fixed wireless access, that is the FWA, solutions to improve connectivity for its growing 4G and 5G user base. Shares of Bazaar Style rise to hit a 2-month high after the company reported a 55% year-on-year rise in revenue from operations at 345.6 crore rupees in the quarter ended March 31, 2025. In the fourth quarter of the previous fiscal, sales per square feet rose 19% to 679 rupees per month. The total number of the stores of the company rose to 214 in the financial year in the comparison to 162 in the last fiscal. So the total rental area in the quarter rose 31% to 19.21 lakh square feet compared to 14.65 lakh square feet in financial year 2024. Manufacturing sector growth in India recovered the ground lost in February, picking up to its highest in 8 months as a faster upturn in total sales underpinned a sharper increase in output. Registering 58.1 in March, the seasonally adjusted HSBC India Manufacturing Purchasing Managers Index was up from 56.3 in February to its highest mark in 8 months. The latest reading showed a substantial improvement in the health of the sector that was above its long-run average. UPI achieves a new milestone in March, recording over 18 billion transactions valued at approximately 24.77 lakh crore rupees. Now, in March 2025, the UPI network processed an average of over 590 million transactions daily, totaling approximately to 79,910 crore rupees now per day. Paras Defence and Space Technologies announced that it has signed a memorandum of understanding with Microcon Vision, a subsidiary of Controp and Rafael Group. Israel, under this agreement, Paras Defence and Microcon will exclusively collaborate in India on the development of micro ISR payloads. Adani Ports share prices rise on robust business update. The company handled the highest ever cargo volume at 41.5 million metric tons, up 9% year on year in March 2025, led by containers and liquids and gas. So Mundra Port handles 200.7 million metric tons cargo volume during FY25. Reliance Industries, through its wholly owned subsidiary Rise Worldwide, announced a strategic joint venture with Blast Esports to conduct esports business in India. Amazon's movie strategy is finally hitting the big screen, with the company set to take center stage at the annual convention for theatre owners, as per reports. Now, the point of this move is to prove that its movie arm, Amazon MGM Studios, is serious about releasing around 14 big commercial films a year to theaters around the world. Most of the movies will spend 45 days in theaters before hitting pay-per-view and then Prime. A major fire broke out in the firecracker godown in Gujarat's Banaskantha district. Now, 21 people have lost their lives and 6 have been injured. Police have arrested the godown owner. There were 7 children among those dead. The blast at the warehouse owned by Deepak Traders took place around 9:30 a.m. yesterday. Ashwini Vaishnaw, the Minister on IT, emphasized on the need for Central Bureau of Investigation to seek collaborations with startups, industries and academia, citing the challenges posed by artificial intelligence and crimes. Now, underlining the technological shift all across the world, the minister further said that the investigation mechanism has also expanded beyond questioning and evidence collection. Actor Dia Mirza has come out in support of the students protesting against the redevelopment of 400 acres of land adjacent to Hyderabad Central University, calling for a sustainable future. She has given a call to save the forest in Gachibowli development at the cost of biodiversity is destruction, said Dia Mirza. Union Minority Affairs Minister Kiren Rijiju introduced the Waqf Amendment Bill 2025 in the Lok Sabha for discussion and approval. Now it will be a 8-hour-long debate. The bill, formulated based on recommendations from a joint parliamentary committee, aims to enhance the administration of Waqf properties, integrate technology-driven management, simplify legal complexities and promote transparency while presenting the bill. Rijiju highlighted that the consultation process undertaken by the JPC was the most extensive ever conducted by a parliamentary panel in India's democratic history. White House Press Secretary Caroline Leavitt in her recent address mentions that tariffs are to be in effect as soon as they are announced. Now, she's also said that President Trump has made up his mind on tariffs. Mark Carney, Canadian Prime Minister, said that President Trump is in the process of trying to fundamentally restructure the US economy, and that means that our economy here needs to change dramatically as well. And as I made clear, and I quote, I'm quoting him, saying that he said that he has made it clear to President Trump in a call last week that he will reject all attempts to weaken Canada, all attempts to wear Canada down and to break Canada down so that America can own Canada. And that will never happen, is what he said. Well, with that, it's a wrap on Market Express. Stay tuned to NDTV Profit as there's more lined up ahead.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Real estate might look to sell their paper business to ITC. So that would be an interesting deal, not too big for ITC, but from AB Real Estate's perspective currently.
On the 20th, he reported this in his segment Heard on the Street, which runs at 2:30 p.m. every day.
Do you really know the company you invest in? What is the real picture behind presentations?
Benchmark indices adopt a cautious stance as Trump-led tariffs take effect tonight. The Nifty climbs past 23,300, while the Sensex surges 500 points to close above 76,600. Sectoral indices rally across the board, with realty and IT rebounding strongly from yesterday's losses. As countries and companies across the world await the announcement by the US on levying reciprocal tariffs from April 2nd, a report by the Office of the US Trade Representative has flagged several tariff and non-tariff barriers that India levies on imports. Global markets await with bated breath as European markets melt in anticipation, while Asian markets fare mixed. It's a dividend bonanza for the government. The central public sector enterprises have paid a record 74,000 crore dividend payout to the government in FY25. This also overshot the budget's revised estimate of 55,000 crores. Coal India emerges to be the top contributor, followed by ONGC. The death toll from the Myanmar earthquake surpasses 2,700. Fuel shortages, intermittent communications and power outages further complicate relief efforts. Union Minority Affairs Minister Kiran Rijiju tables the Waqf Amendment Bill 2024 in the Lok Sabha. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Along the next half an hour, we're going to bring you the latest on markets as well as the national and international news. So let's dive right into it. After a two-day decline, Nifty and Sensex ended the session with strong gains driven by a rebound in banking and IT stocks. At close, the Sensex was up 592.93 points and the Nifty was up 166.65 points. All sectors closed in the green, with realty and FMCG leading the race. My colleague Harsh now joining us with more details. Harsh, over to you.
Well, overall a very good day of trade. In fact, we breached the 23,300 mark. We've closed, a solid day. In fact, nearly 150 plus points up in trade. So we've reversed in some sort some of the woes that we saw yesterday, led by banks for sure, but you also had participation from IT, pharma, both of which were up around 0.9 odd %. So you saw some bit of churn in that sense, some bit of a bounce back versus yesterday, what we saw in terms of pain in some of these pockets. When you're looking at names, you had within the Nifty 50 basket a Trent do well, but the standout was a Tata Consumer and a Nestle on either side. Tata Consumer, on the one hand, was a positive note by Goldman Sachs, and on Nestle, there was a negative note by Bank of America. And therefore, both of those stocks moved in very different directions. But Tata Consumer up 7.5%. That's not every day that we see that. And 20% upside from yesterday's close is what Goldman Sachs sees on this one. Plenty of levers that they spoke about. But, let's talk about sectors now. Of course, we spoke about some of the large cap, but realty within the small cap space and the mid cap space did very, very well in trade. We saw how realty was beaten yesterday, so a very strong bounce back after what we saw yesterday in trade. So relief for those invested in realty. Now, in terms of the advance decline, well, again, the breadth was very positive in that sense, nearly 3:1 in favor of the advances. So clearly positive in terms of the breadth. There was a bit of choppiness at the start of the day, but that seemed to have evened out, and we closed the day at the very best in terms of where the breadth is concerned. The Nifty mid cap and small cap indices also did fairly well for themselves. We saw 1% plus on both the Nifty mid cap and small cap, and a late rally saw that both those indices were taken, in fact, higher towards the end of the day. Last off, the BSE 500 top gainers, top losers, some of them dominated by the Q4 numbers that have started to trickle through. And I'm talking about the quarterly updates, the pre-earnings updates that have started to come. Retailers dominate that space, a V-Mart, a V2, a Bazaar style, even a CSB Bank featured on that list of the gainers. The losers, of course, were also there, and there were plenty of buzzers on both sides.
And thanks, Harsh, for that. But let's listen into a perspective that came in earlier. Indian markets are fairly valued and earnings are expected to return to double digits next year. This is the perspective shared by Mark Matthew of Julius Bayer Group as he weighed in on the Indian markets. Let's listen in.
I think India is back to what I would consider fair value, and I think the earnings will return to double digit next year. So I'd be perfectly happy with India. I think it'll be one of the best markets in the world over the next 12 months. Yeah, we like the financials. As you know, they've been private sector banks have been big laggards for the last few years, and I think they're fairly valued, and I think that the RBI seems happy with where loan deposit ratios are now, and the government seems to be wanting to encourage economic growth. So banks are the heart of any economy. I don't see why they shouldn't do well.
And as eyes are on US President Donald Trump as the world braces for Liberation Day, that's tonight, a day he claims will free the US from dependence on foreign goods, Trump will unveil sweeping reciprocal tariffs matching the duties imposed by other nations on American products. The White House has confirmed that these tariffs will apply to all countries and take effect immediately. India's trade policies, including high tariffs on imports, have been flagged as a key barrier in the US's National Trade Estimate report for 2025, highlighting growing tensions between the two economies. Now, following the announcement, a 25% tariff on auto imports is also scheduled to begin on April the 3rd. As we all are aware, markets are already rattled by uncertainty surrounding these tariff plans. Wall Street is feeling the pressure, with S&P 500 futures down, Nasdaq 100 futures lower by 0.15%. We saw Dow Jones futures slipping 0.15%. And adding to investor concerns, we're seeing weak economic data that has emerged. Manufacturing activity contracted according to the ISM survey. February job openings missed expectations, raising fears more about employment trends. So let's focus a little more on India as it prepares for the repercussions of the US tariffs. A recent report, like I said, from the Office of the United States Trade Representative highlights growing concerns over India's trade policies. This report points out that agricultural products face duties ranging from 100% to 150%, while key imports like alcoholic beverages, natural rubber, processed foods, these are subject to steep tariffs. Now, these measures reflect India's broader trade restrictive policies aimed at promoting domestic manufacturing under its self-reliance agenda, a strategy that has drawn criticism from US exporters for creating market access barriers. Let's quickly go across to my colleague Pallavi now, who's going to provide insights into how the US perceives these policies and their potential impact on bilateral trade relations. Pallavi, over to you.
The United States has released its National Trade Estimate report for 2025, and according to some of the commentary on the report for India, it says that India's average most favored nation tariff rate currently stands at about 17%. This is according to data for 2023. Now, this is among the highest tariff rates among major economies globally, especially in case of agri-goods, where the tariff rates on an average come in at about 39%, whereas for non-agri goods, the tariff rate on an average is about 13.5%. Now, the report also talks about some of the commodities where we're seeing India impose especially high tariffs. Vegetable oils, for instance, are at about 45%, automobiles and flowers at about 60%, natural rubber at 70%, all the way up to alcoholic beverages, in which case tariffs are at about 150%. Life-saving drugs and finished medicines also have seen tariff imposition of about 20%. Now, other products, again largely agri-commodities, which are seeing high tariffs imposed on them, include almonds, pecans, apples, grapes, chocolates, cookies, even frozen French fries. So as you can see, again, a whole host of agri-commodities. In fact, India's WTO-bound tariff rates on agriculture products are among the highest in the world. This is according to the US. Now, this is anywhere in the range of about 100 to 300%, the US report says. What the USTR report also says is that India's lack of transparency along with its tariff and non-tariff barriers have been a cause of concern and uncertainty for Americans and for the American economy in the past as well. For instance, several instances have been highlighted in the report where India has increased tariff rates without notice, for instance, in 2019-2020 and again in 2020-2021 as well. In July 2019, in fact, the US launched WTO proceedings against India, challenging India's retaliatory tariffs. And in June, for instance, in 2023, India agreed to rescind tariffs on products such as chickpeas, lentils, almonds, walnuts, apples, etc. Now, in India's defense, India's agricultural tariffs are high in a bid to sort of protect the agrarian economy, farmers, and to sort of safeguard them against fluctuations of several of these agri-commodities in case of global price changes and global price volatility. The US report, TR report, also talks about several non-tariff barriers. So, for instance, tallow, fat and oils of animal origin are banned entirely from entering India. The government also frequently imposes quantitative restrictions such as on pulses. We've seen such restrictions come in case of rice, sometimes in case of horticultural commodities as well. Now, other complaints against India by the US are extensive inspections, seizures of imports of American companies, duplicative documentation, misapplication of customs valuation criteria, compulsory testing to country-specific standards, dairy products intended for food not to be derived from animals that have consumed internal organs, a whole host of such issues that the report outlines in case of India. Now, what the US does want to sell to India includes a whole host of agri-commodities. India, in turn, according to what we're gathering, is also trying hard to negotiate and iron out a trade agreement or at least receive some sort of concessions from the US before it imposes tariffs. We're going to find out more about that in a few hours.
Absolutely, Pallavi. Thank you so much for taking us through what the report said. But what is the potential impact going to be like on Indian sectors? Let's also get in two of my colleagues, Mihika and Soumit, to firstly bring us the details on the potential impact and which sectors are the most vulnerable in different tariff scenarios. And secondly, what can India do to soften the blow? Let's go over to them.
Well, the first set of reciprocal tariffs are set to be announced today, April 2nd, and there are several, sectors at risk. Now, first we need to understand India and US's trade relations. US is one of India's largest trading partners, a history of over 25 years. India's exports to the US also reached $81 billion in 2024 and it accounted for 17.7% of India's total exports in FY24. And lastly, India does have a trade surplus with the US. Now, in terms of the tariff differential, we do charge more tariffs on the US. If I could just get the table there, India's tariff on US imports are the weighted average stands at 12%, whereas the US on Indian imports is at 3%. The tariff differential comes up to 9%. Now, if the tariffs are imposed on a country level basis, and an expected tariff of 10% could lead to a potential export loss for India at $6 billion. This is 0.16% of our GDP. A 20% tariff could lead to a potential export loss of $31 billion, which is 2.1% of our GDP. So what can India do on a national-wise level to lower the impact? One is increase the oil and natural gas imports from the US. They could also increase the purchases of defense equipment and reduce tariffs on certain agricultural and food commodities. And lastly, lower tariffs on foreign EVs, for example, letting a Tesla inside the Indian market. Now, if the tariffs are exposed on a sector-wise level, there are 4 sectors that have a high tariff differential when it comes to the US, animal products, footwear, transportation and chemicals, the tariff differential stands between 10 to 30%, the highest for animal products. But this may not mean that the value of exports is higher. So based on data of tariff differentials, export value as well as the US export value, we have the most vulnerable sectors coming into the picture. We have the seafood and the iron and steel, the nuclear reactors and machinery for the same, pharma products, gems and jewelry and electric machinery, which are the highest or most vulnerable sectors. Differential ranges from anywhere between 6% to 18%. The highest in terms of US exports stands electrical machinery, gems and jewelry and pharma products, the value between $8.9 to $12.6 billion. Now, in terms of, the stocks that could be on the radar and could be impacted in the pharma space, you have something like Lupin, Dr. Reddy's, Zydus Life Sciences, Aurobindo Pharma and Cipla. In the textile space, you have Wellspun Living, Indocount, Trident, Arvind and Gokaldas Exports. And lastly, on the seafood space, you have Apex, Avanti Feeds and Waterbase. But since I've talked about, sector-wise level, we do have Somit joining us to tell us what India could do on a sector-wide basis to help.
Well, yes, there are 5 sectors that we are pointing out here today, and these are some sectors where there could be some negotiations and some settlements that could happen. Firstly, on auto ancillary, India could reduce taxes on auto imports, because specifically for two-wheelers and passenger vehicle, if you look at the differential tax, it stands at around 67.5 percentage points, which means that we are charging this much percentage points higher taxes as compared to the US market. And
meanwhile, India Inc. has weighed in on the economic fallout of US tariffs set to shake up global supply chains. Amrendu Prakash, Chairman of Steel Authority of India, highlights the volatility of the current landscape, also sharing insights on how India is adapting to these shifting dynamics.
It's volatile. Currently, many announcements have come, and today is 2nd of April, and the whole world is waiting to see what comes out of US. Basically, when we look at steel industry, we see some of the trade flows changing. Steel traditionally has been traveling from Asian countries to Europe and US. Mexico and Canada have a pressing dependence on US markets for their steel, but in trade flows, it is important to look at the transportation cost of steel. So based on the US announcements, so far what we have heard, Canada and Mexico will have to prepare their response. Europe sees a little bit of tightening of tariff rate quotas. That is what we expect, because if Europe is not able to export to US, in that case, that steel stays in Europe. That will mean that lesser steel will get exported to Europe. This floating trade flow of steel might come to India, but the government is seized of the matter and is working on this.
However, with ongoing bilateral trade talks, it is possible that tomorrow opens up a floodgate of opportunity for India. So let's hear more on what this means from former Commerce Secretary Anup Wadhwan.
Yeah, there is an element of import dependency, especially in the import of heavy equipment. Although there are segments and elements where we have fairly good indigenous manufacturing capability. But we are actively working on the contours of a framework in close collaboration with Coal India to see how the indigenous manufacturing system for machinery could be kind of incentivized. So that is something which is work in progress. But the thought process is clearly aligned in the direction of indigenization and self-sufficiency.
So certainly, there's an opportunity as part of the bilateral trade agreement. There's an opportunity to, grow trade, and these negotiations happen on a very systematic, technical basis. Each side has what in trade parlance is called certain ambitions or certain wants from the other country. And then each side has certain sensitivities. So the Americans will convey to us what they want from us. We'll examine that list. We'll identify things we can do easily. We'll identify things which we are sensitive on. And then typically, in trade parlance, there are various sort of safeguards you can put in place to protect your sensitivities. One safeguard is, staging of duty. So your duty does not come down to zero. It comes to a moderate level, or it comes down slowly over a number of years. Then you have instruments like a tariff rate quota, where the quantities are restricted. Let us say you open up to American agricultural products or dairy products, you limit the quantity so that there is no, surge of imports into India.
And we're going to be live with Trump's speech and tariff announcement at 1:30 a.m. tomorrow morning. Do stay tuned as we bring you all of the updates live. Don't forget to tune in to NDTV Profit. And moving on, the central public sector enterprises have delivered a record-breaking dividend payout of over 74,000 crore to the government in FY25, their highest ever. Let me quickly go across to my colleague Rishabh for more details. Rishabh, who are the top contributors? How does this figure compare to the previous high of FY24?
What we've learned from the latest data that is coming from the Ministry of Finance is that the government is set to get a record dividend payout from public sector companies. Now, what we're seeing is that the government is set to get about 74,000 crore rupees in dividend payouts for FY25. That is the highest ever dividend payout that the government has received. This is also about 16% more than the FY24 number, which stood at about 63,500 crores. And also, why this is interesting is because in the budget, the expectation was that the dividend payouts will be around 55,000 crores. So almost by 20,000 crores has the budget estimate, the revised estimate, been overshot. What we're seeing, the highest number of contributors that are coming in is the number one is Coal India at about 10,252 crores. We're seeing ONGC come in at about 10,000 crores roughly, and BPCL coming in at number 3 with about 3,500 crores being the dividend payout from these companies. So the energy sector being the number one sort of kitty additional to the government's kitty is what we're seeing. A very interesting time for CPSEs, for public sector enterprises, and we'll continue to track more.
And in a bid to ease liquidity in the banking system, sources to NDTV Profit have revealed that banks have urged the Reserve Bank to ease the cash reserve ratio. The CRR is the percentage of deposits that banks must hold in cash rather than lending it out, and by cutting this rate, banks would have more money available to lend, which could help stimulate economic growth. My colleague Shubhana now joining us to give us the background of this development. Shubhana, over to you.
Hi. So yes, when the CRR is actually low, banks have more money to lend, which can actually stimulate, economic growth. But let's look back a little bit. On December 6th, the RBI had actually cut the CRR by 50 basis points to 4%, which had freed up about over 1 lakh crore of liquidity to banks so that they could lend, they could lend, and it could increase credit growth and boost economic activity. However, the weakening of rupee amid so much global uncertainty had brought the liquidity back into deficit. Now, since then, liquidity was in deficit up until March 30th, because the RBI was actually using various tools such as the OMO purchases of government bonds, dollar rupee buy sell swap auctions, and daily and long-term variable rate repo auctions. So, despite that, now that liquidity has come into surplus, which is the first time since December 15, the banks are still urging the RBI to cut the CRR by 50 basis points. This is because the call money market rates are still elevated. Now, what they're saying is that despite the cooling in call money market rates, there's still a bit of volatility, and it's impacting the credit growth. That is why they're hoping that the RBI would cut CRR by 50 basis points. Now, it is also important to note that on Tuesday, the RBI had actually announced that it would conduct OMO purchases, which is open market operation purchases of government bonds worth 80,000 crores. Now, it will continue to do its OMO purchases, and sources are also telling us that the RBI is meeting select banks tomorrow, which is April 3rd, to revise and see if they can make changes to the current liquidity framework. So this is basically the development on the liquidity front.
Right, Shobhana, thank you so much for putting that in perspective and giving us that much needed background. Let's take another look at what's happening within the RBI itself. The Reserve Bank of India has appointed Poonam Gupta as Deputy Governor. Now, this comes just a week before its bi-monthly Monetary Policy Committee meeting, also known as MPC, that's scheduled for April 7 to the 9th. Poonam Gupta, who currently serves as the Director General of National Council of Applied Economic Research, is set to take on this crucial role. When will she officially take charge? Will the MPC come under her authority? My colleague Pallavi has all of the details. Pallavi, over to you.
Now, the Appointments Committee of the Cabinet has appointed Dr. Poonam Gupta to the post of the RBI Deputy Governor that's been vacant since Dr. Michael Patra's retirement. The appointment is for a period of 3 years. Poonam Gupta is currently the Director General at the National Council of Applied Economic Research. She's also currently a part of the Prime Minister's Economic Advisory Council. Dr. Gupta is also a master's PhD in economics from the University of Maryland, USA, and a master's in economics from the Delhi School of Economics. Now, let's remember that this appointment precedes the Monetary Policy Committee meet that is scheduled for next week, when the MPC is expected to continue to cut rates, possibly by another 25 basis points.
Thanks, Pallavi, for that. Let's take a look at what's happening globally. The death toll from the devastating earthquake in Myanmar has now climbed to 2,800, with officials warning that it could exceed 3,000 as rescue efforts persist. The powerful 7.7 magnitude quake, if you remember, struck central Myanmar last Friday, causing widespread destruction. In neighboring Thailand, a 33-story high-rise building under construction in Bangkok collapsed, prompting an urgent investigation led by Deputy Prime Minister Anutin Charnvirakul. An expert panel has been tasked with determining the cause of the collapse within 7 days. Notably, no other high-rise projects in Bangkok suffered similar damage, raising questions about the structural integrity of the building, which was reportedly constructed by a Chinese firm. Now, the earthquake has left thousands injured and missing, complicating relief efforts in Myanmar, a country, if you remember, that's already grappling with civil conflict. Hospitals in Mandalay are overwhelmed, with overcrowded wards and makeshift treatment areas struggling to accommodate the surge in injured victims. And that's a wrap on Profit 360. Stay tuned to NDTV Profit for more news and updates.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE,